meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Presenting the all. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open. with Tamanna, Alex and Neeraj.
Hi, good morning. You're watching India Market Open. So much to digest over the last 24 hours. The escalation, so to speak, in the Strait of Hormuz is back, but doesn't seem as scary as one would have hoped.
Why do you think so? Why do you say so, rather?
So one is how crude prices have responded to it. They've gone up and then retraced to some extent. And then it's not gone beyond those 6 boats that the US fired on. Iran, if it wants, can attack a lot of the ships in the Hormuz. It's not doing that. So it seems to me to be calibrated and maybe just another step in the negotiation. That's what I'm hoping for right now.
Alex?
I certainly hope. When you said so much to digest, I was thinking about Roshogola and Kheer Kodam, but then clearly you're talking about a different scale.
I've had a craving for jhalmuri since yesterday.
Maybe we tell Sharad to get it for us. I'm going to Cal, I can do that too. But yeah, I wonder, okay, so I'm hoping, Tamanna, what you're saying is actually true, because if that is what it is, that it is token strikes to ensure that both sides have
the negotiations move.
Higher seat at the negotiating table.
Keep things honest.
Maybe. Hopefully that is what it is, because we don't want this for sure.
Yeah, so that is part of what has been happening. So what are the things we're going to unpack this morning? What's happening globally? There have been some altercations in the Strait of Hormuz. Of course, the Bengal elections and the Tamil Nadu elections, the 5 state elections, what it means, a lot of brokerage views and global views on it as well. But let's start off with the global setup and what's been happening there. So UAE has said Iran launched drones and missiles against it, which they intercepted. One of their oil refineries in Fujairah also got struck. The US, on its part, says it's sunk 6 Iranian small boats. In fact, Trump made comments during a business summit at the White House where he referred to the conflict with Iran as a mini war. Listen in.
We're truly making America great again. We're doing record business. We have a stock market that hit even with this military operation, call it whatever you want. We can't let Iran have a nuclear weapon. We hit all new highs, and I said we have to take care of business because we can't let that happen. So we did a little detour, and it's working out very nicely. They have no Navy. They have no Air Force. They have no anti-aircraft equipment. They have no radar. They have no nothing. They have no leaders, actually. The leaders happen to be gone also. But can't let them have a nuclear weapon, or you'd have problems like nobody would believe.
Yeah, so just to underline the point that I was making, if you just look at the commentary from Trump as well, it's not full throttle, this war is back on kind of commentary. So I'm taking off from there as well. Look at what Syed Abbas Araghchi, the Minister of Foreign Affairs of Iran, said. He has said, and I quote, "Events in Hormuz make clear that there's no military solution to a political crisis. As talks are making progress with Pakistan's gracious efforts, the US should be wary of being dragged back into the quagmire by ill-wishers. So should the UAE. Project Freedom is Project Deadlock." Once again, if you look at that language, it sort of suggests that the US is being dragged into this by those who don't wish them well, instead of putting the onus on the US for doing something that is against the ceasefire. So let's hope this is just another negotiating tactic. Meanwhile, US markets closed with losses after fears of the war escalating again. If you pull up indices, they had all lost ground, but not massively, about 1% down on the Dow Jones. We'll pull up futures as well for you. Also keep in mind, US markets have been roaring to new highs session after the session for the last couple of weeks. So maybe some cool off there. US futures also flat. Treasury yields spiked as fears of oil spiking inflation increased. The 10-year was at 4.43%. Oil prices are also up as fears of escalation in the Strait increase. But we pull up the latest Brent for you at 113. This was at 116 a few hours ago. So which is the point about it? Maybe cooling off a bit. Let's pull up Asian markets as well. And you actually had Asian markets pretty decent. The Hang Seng down about 1%, but Shanghai is doing fine. I want to pull up implied open for India as well before we go ahead. And you're seeing a bit of a downtick there. which could be in place as some profit booking and some uncertainty over the war. Karan Datta, geopolitics and capital market researcher, joining us on the show. We're also joined by Seth R. Freeman, Senior Managing Director at Glass Frackner Advisory and Capital Group. Welcome to both of you. A very good morning from where we are here in Mumbai. Karan, I'm going to start with your take on what's happening. Is this a mini war? Is it a pit stop as negotiations go on? Or are we looking possibly as a return to escalation?
Good morning, everyone. And Tamanna, was listening to you before the start of the show. And I think I do kind of agree with what your analysis is. This is not back to war in the sense that we've seen it to be. This is about posturing, and this is about trying to make a point. Because remember, the last time I'd come on to the show, I'd mentioned that the Iranians have a very tight window of about 2 to 3 weeks within which they have to find solutions. Otherwise, the refineries need to start shutting down. And all of this is part of that negotiation tool. I do agree that escalation from here onward looks rather bleak. But having said that, the economic ramifications of what we're going to see are now going to play through for the next few months. So while I'm not so worried on the kinetic front, but the economic pain will start to show up in various formats.
Okay, and that's the perfect question to ask Seth about. And Seth, good morning from where we're at.
Good morning.
You've seen the earnings season, and I think broadly people are satisfied with the way Q4 has panned out, but there seems to be worry. You take a look at the bond yields and the fact that they've spiked. There is an anticipation that there will be an impact on the inflation front. And so therefore, how soon will you see that impact? How soon will risk assets also take that turn for the worse?
You know, I think it was 4 or 5 weeks ago I brought up the point that it takes a while for all of this to kind of work through the system. And now pretty much towards the end of last week and Friday and today, the mantra, so to speak, is that we're looking at this causing significant inflation, and that sort of the cumulative effect of the last 2 months is going to be felt hard and leave the Fed with little to work with.
Mm-hmm. Okay, so Seth, if one is the central banker or the new version of the Fed and what it works with. The point number 2 might be that if the world was looking for an outlet away from the US into emerging markets once the conflict cools off, are we anywhere close to that stage as yet, or is it still highly unpredictable to you?
Completely unpredictable. And whether you want to call what's happened in the last 24 hours a skirmish or a new possible war, I think we're playing chicken with this idea of Iran running out of revenue because of oil being held up, and how it also affects primarily Europe and Asia. So all this means is just more uncertainty, and it being much more difficult to read the tea leaves coming out of Washington.
Karan, come in on this, because the last time that we spoke, you were of the opinion that we are near the beginning of the end or near the end of the conflict. Right. That has dragged on. And, you know, I didn't think of the possibility, and that Tamila mentioned it. But if this is what you believe is the final stage of the conflict, I mean, what does it take for it to end? Because Seth is right that we have been looking at it for ending for a long while, and it is not quite doing so.
Yeah. So Neeraj, this is now classic siege and classic blockades that are in place. And technically, they could hold on for months because no one's firing shots. Of course, yesterday what happened did take place, but there's been no retaliation. So I'm just focusing on the capacity of the siege and the capacity of the blockade. And what is the solution out here? And why is the blockade in place in the first instance? Now, the idea is to do exactly what I was trying to say, that if the Iranians are unable to export oil, the revenues do fall, and that's a reality. There's nothing unknown about it. And if the revenues fall, the regime starts to suffer, and so do the people. And that cascading effect, if it's happening on the world, obviously it'll happen on Iran as well. How can it be that the world faces economic issues and the Iranians don't? That it doesn't work in isolation or in a vacuum. So the way to look at this is, while the blockade and the siege are taking place, it could happen. It could kind of continue for a few weeks or a few months, and this is where patience with the winner will be the one who has the patience out here and who's willing to wait it out. And I think this is where the Iranians have lesser time. And on your show last time, I'd mentioned that the Americans seem to have a bit more time on this. Again, just to put this in perspective, while the two are playing it out, nations like UAE or India will have to face some of the economic brunt coming our way.
That actually is, you've hit the nail on the head, Karan, because that's the most, I would say, imminent concern from where we're sitting right now. And I want to come to Seth on that. As this continues, and as Brent, now we're seeing crude prices staying elevated for a while, the collateral damage keeps getting compounded from an Indian perspective, isn't it? And our equity market's also going to feel the brunt.
Absolutely. And it's really not just India, although, of course, India is such a big net importer. And, is there going to be another waiver or an extension of the waiver to import Russian oil again? For example, this raises deep political problems here in the United States. And so it's this crazy idea that Trump is going to reopen the Strait of Hormuz when, until this all got started, it was open. So it's defining on winning is very difficult, and it may be easier for the Iranians to define winning than the United States.
Yeah, that's an important point. Karan, Seth, on that note, thanks so much for joining us this morning. Pleasure having you.
Thank you.
All right, let's talk about what happened in trade yesterday. And equity markets started off pretty well, actually. They had broad-based gains, assembly election results, and Operation Freedom aiding sentiment. Markets ended sharply off the day's high, though. You had the Nifty 50 that closed with gains of about 0.5%, but lost 171 points from the intraday high. Frontline counters, Reliance Industries, HDFC Bank contributing nearly a third, actually a little over a third of the gains. Adani Ports, Adani Enterprises were top gainers, followed by Aisha and HUL. Now, interestingly, we were contemplating this at the start, and there was buzz of a large buyer in Adani Ports. In fact, that bulk deal took place very early on in the session. It turns out that Capital Group as well as Euro Pacific Group Fund bought Adani Ports in that bulk deal. That bulk deal actually took place at 1632. The share price rose another 100 points or 100 rupees after that. So it was the top gainer. Broader markets continued to outperform the benchmark. You had the Nifty mid cap that gained 0.7%, small cap looking stronger at 1%, and that has been a bit of a theme in the recent past, the resilience and outperformance of the small cap index and the broader markets in particular. Realty, metal, pharma were the top sectoral gainers. IT as well as media on the back of Sun TV as well as PSU banks underperformed, and that too has been a bit of a theme.
Yeah, we've seen that. But I wonder if, independent of whether this is short-lived or long-lived, and cross all 20 fingers, yes, I have 20, that it is short-lived. These days, everything's unpredictable. But one would suspect that it's a risk off until crude cools off again. We are at 113, whether we like it or no, unfortunately. So therefore, that is the first thing. And it's... really, it's impossible to see global outflows, and what I mean is FI outflows waning until the conflict shows resolution, whereby the crude cool off happens. Even if there is a Namka conflict, but if crude were to cool off, so on and so forth, yes, we might actually see some ebbing of the outflows, but until then, it's nearly impossible to see that. I wonder if consumption cool-off could hit related stocks as data starts to trickle in. I was listening to the conversation that we had with Nestle. Look at the airline data that has come out for the month of March. Look at the PV data. I wonder if a consumption cool-off is imminent, and if data comes in, those stocks which also flew high a little bit might see a bit of a drop. I have a word on cement as well, but either of you, any thoughts here on that consumption piece? Because, I mean, we've had multiple company conversations, including Nestle, which actually shown out in Q4, but wonder if the data coming up in Q1 will look slightly skittish.
So in all of those conversations, we've been asking them what they're seeing so far. And the word is that so far things look okay. But notwithstanding that, everyone's talking about we don't know when the pain will start showing.
It's a for now.
It's a for now kind of a situation.
Even in paints, for example, if you looked at the Berger Paints response to our colleague Ridhima's query on price increases, they said that we've increased prices, demand was starting to look good, so we expect that will be absorbed. So it's a for now situation. The only thing is, for example, in your lead indicators, your two-wheeler sales that you pointed out, Tamanna, in the last month, they were looking a little iffy, and whether that's an indicator of
unequivocally
softening.
Even
softening,
airline, by the way,
softening demand.
Skittish. Okay, just one last point, and that is on cement, guys. And I thought this was very important. What Ambuja has said, that the management has cut the capex target and will focus on profitability. I think this is light shone on the sector, if you will, like none other, that one of the two key players in the sector, the two leaders, is now saying that we are going to focus on profitability, which means it's great for the entire sector. That whole pricing cuts in order to gain market share scenario, if it cools off a little bit, even if it's not behind the sector, it's great for everybody else. So I wouldn't be surprised if that one sector that comes out from here, which is commodity focused as well and has cost inflation but still does well, is cement, because of this very thing. Ambuja saying this is a big deal.
By the way, just to that point on cement, our latest story is that as of today, 5th, there is expected to be a price increase of between 15 and 35 rupees across various geographies in India.
Okay, so price increases are already coming in to that extent. In terms of the market, the setup is, the market's stuck, isn't it, in a tug of war between positive election sentiment and persistent global pressure. The Nifty closed in the green, but charts indicate a sell on rise kind of a rally. Index is currently hovering near its 50-day EMA. That's 24,300. That's a critical breakout level. A decisive close above 24,300 could trigger a short covering rally towards 24,600 to 24,800. Failure to cross 24,300 keeps the index in a sell on rise mode, with a potential slide back to the 23,800 structural support. For the Bank Nifty, it looks technically weaker than the Nifty. Unlike the Nifty, the Bank Nifty is showing signs of exhaustion. The index is trading below key moving averages, and unless it reclaims 55,500, the bias remains sideways to negative. Resistance at 56,000, supports at 55,000. So those are some of the levels that we're looking at this morning, but let me go across to Puneet for the setup.
Well, thank you for that. It's again a very similar kind of a start that we're expecting on a downside, though. Yesterday's second half saw consistent selling in the markets, and at this point of time, we're back again at those levels of 24,000. Seems to be essentially at this point of time that while a few of those Nifty earnings have come through and sustained some kind of momentum, earnings have been recent, but it seems to be in a consolidatory mode as of now for the Nifty 50. The Bank Nifty also bang at the level of where it was exactly yesterday at 54,800. We've been consistently highlighting that the large cap banks have largely the results have been over, so there could be some essentially lack of triggers in the near term for the banking index and not too many supports at these levels as well. So it will be something to watch in the near term of where it goes, because from the lows of the Iran war where we were at 53 and 52,000, there's still quite a bit of way to go from there. In terms of foreign investors, you've seen buying yesterday of 2,800 crores, but the index long is now depressed at almost just 11% for the May series, where it started off last Tuesday. So currently no kind of buying seeing, at least in the first week of the May series, and the put call ratio also showing you that at this point in time some reduction seen in puts here, and that's visible in the open interest distribution across key levels that we have. So 23,500 has seen some deceleration compared to yesterday, but 24,000 is the level for calls and puts, and 24,500 consistently an out of money call option continues to be there at this point of time. Finally, in stock-specific action, it's just a couple of key mentions on Vedanta and Avenue Supermarts, where open interest was the highest amongst key stocks there. Short build-up seen yet again on DMart post results, and what we've seen consistently on the open interest loser side, just a couple of names because not too much change in open interest there. So only Kotak Mahindra Bank continues to be in focus, longs being unwinded after the results failed to enthuse the street, but largely, essentially, earnings continue to drive the momentum. M&M comes during market hours, so the auto pack will continue to be in focus today after strong numbers from Maruti as well as sales numbers yesterday as well.
Okay, auto is going to be in focus, but the first on my watch list this morning is a real estate company, because that space has also been very, very hot. But let's talk about Sobha specifically. So this is what's been happening. Collections grew 26% year on year for the company. It's a thumbs up, good set of numbers. Quarterly sales value was up by about 30% year on year. Average price realization was 15,268 per square foot in Q4. Sales value grew by 30% year on year, and net debt has reduced substantially. There are the core numbers. Revenues up 60.2%. That's a year-on-year basis at 1,988 crores. EBITDA was up nearly 62% at 152 crores. Margins have also been maintained with that growth, because you had a margin of 7.65% versus 7.58%, and net profit was at 91.8 crores versus 40.9 crores. There's a dividend as well that they have declared. So overall, a solid set of numbers from Sobha as well. KEI Industries is the other one that I'm looking at, and that's a thumbs up. It's a decent quarter, and margins have surprised positively. The cables and wire segment revenues have grown by 18% for the year, with operating margins expanding about 150 basis points. Strong demand from strong domestic and institutional sales have partially offset by decline in exports and logistical challenges. EBIT margins expanded to 12.4%, one of the highest ever. So if you look at the numbers, revenues up about 19%, EBITDA up 26.7%, and those margins we've been talking about after that 150 basis points expansion is at about 11%. Net profit was at 25.5%. Manappuram Finance is the third one, and that's also a decent set of numbers. There was AUM growth, that assets under management have grown, supported by strong gold prices, demand and branch level execution. Margins have improved on lower borrowing costs, and management expects stabilization in gold loan yields. The stress in non-gold segments have been addressed via write-offs and tighter controls. A one-time write-off was taken in vehicle finance of 136 crores though. So here's how the AUM has grown. It's up by 31.5% for the quarter and up by 99% for the year. So it's quite a jump there. Gold loan LTV, that's loan to value, remains stable at 57%. That's an important metric for this company. Net profit at 405 crores versus a loss of 191 crores. So huge improvement there. Total income was also 11% rise, and total income figure at 2,626 crores. So here what Brokerage is saying, I'm just picking up Morgan Stanley. They've maintained an equal weight with a target price of 270 rupees. They've said it's a strong gold loan growth, limited earnings visibility though. Management is focused on gold loan growth by aligning yields with peers. And they've indicated a calibrated, quality-led approach to non-gold business. Guidance was mostly qualitative, and they aspire to 15% consolidated return on equity in FY28. Limited visibility in non-gold segments keeps us equal weight. So that pain with vehicle finance perhaps is keeping them a little sober, but otherwise the numbers were good.
Yeah, and the stock is actually reacting in advance. So let's see what it does today. I've got earnings on my plate as well, 2 out of 3, and Wockhardt up front. Pretty good set of numbers, but more so from the perspective of FY26, and for the full year they've managed to be profitable, and this is the first year that they've done that since FY22, so that's a big deal for the stock. It saw strong growth in biotech as well as in emerging markets businesses, and specifically the insulin based biotech products performed very well during the quarter. There were certain aspects in the other income and one-offs that you have to account for. There was a boost to profit on account of other income, but there was also an 85 crore one-time charge on account of restructuring and compliance. There was a 12.7 crore loss on account of a bankruptcy settlement, and they've received 35.35 crore rupees from Dr. Reddy's laboratories for a settlement. So that all has to be accounted for, but the line items that you should pay attention to are close to 30% increase in the top line. The EBITDA pretty substantially higher, standing at 225 crore rupees. The margin is significantly better, 23.3%, and a profit versus a loss in the comparable quarter, 166 crore rupees. So that's quite considerable. Second on my list is Petronet LNG. A few things to bear in mind. The earnings were aided by better than expected volumes, and the company's also gained from recoveries of use or pay charges. This is usually a charge that is levied mostly to government entities or users of their services, and they have to pay a certain charge whether they use the capacity or not. And so usually when the capacity is not used, there is a use or pay charge that comes into play, and those have been recovered. EBITDA margin has expanded sharply ahead of estimates as well, and lower cost of materials has actually softened that fall in revenue. The company also, by the way, benefited from a one-time reversal of an impairment charge. So therefore, revenue decline of 15%, the EBITDA is up as much as 55%, and the margin coming in at close to 20% versus 10.7%. The PAT number is up by as much as 58%. I've picked one brokerage, and that is JP Morgan on Petronet LNG. It maintained an overweight with the target price of 335. There's another one with an even higher target price. In fact, I think that was Investec. But what is JP Morgan saying? It says that it's a beat on volume as well as the use or pay recoveries, better than feared volumes, along with timely recoveries of use or pay charges were key positives. Long-term volumes are likely to still be at a reduced run rate, and the new capacity commissioning may not be fully utilized in the current environment, is what they're saying. Expect, however, the stock price reaction to be marginally positive in the near term. And finally, a quick update on Afcon's infrastructure. The company has received orders worth 373 crore rupees in April, and a number of them is what they've said. The orders were received for civil infrastructure works under their urban infrastructure and metro business. So positive for this company.
Yeah, I mean, so I'm reiterating Adani Ports for a reason, right? That the promoter entity, which is World Emerging Markets, has sold about 6.56 crore shares, 1632, and Capital International and allied entities are buyers of stake. But this makes it the third Adani Group entity in which Capital has bought stake, right? Started with Adani Energy Solutions, also took in Adani Enterprises, if I'm not wrong, and now Adani Ports. So Capital is the bluest of blue chip global names, and at a point of time when India is seeing FI outflows by the dozens, it is investing fresh money into the Adani Group entities. Keep an eye out. Standard disclaimer, of course, that the Adani Group owns NDTV and you're watching NDTV Profit, but effectively the sound of money should tell you a thing or two about where the direction of money is flowing towards. So could be very interesting. Keep an eye out. No wonder the stock was fairly active yesterday. Jefferies has come out with a note on Godrej Properties. They maintained a buy. They've hiked the target price to 2475. I chose this because this is reiterating a sector that was up and active in trade yesterday. And they say that the management announcing a dividend after a decade, promoters buying 5% in the stock recently, sustained parameter deliveries can drive significant re-rating. Interestingly, keep in mind that Pirojsha Godrej promoters not only bought in Godrej Properties, but Pirojsha Godrej bought stake in another real estate company as well listed. I can't figure out the name. I remember Alex pointed it out. I can't remember the name, but that is a thing. And I think real estate stocks have shown a bit of a bounce, but that is true for most other sectors as well. Last but not the least, by the way, I believe KEI will take as a stock of the day in terms of the stock that will react the most.
Really?
But I think so.
Yeah.
But
Cables and Wires performance was good. Yeah, better than expected.
But there have been downgrades. So it'll be interesting to see how that works out. But I thought the dichotomy again that we see in the markets, right? BHEL, it was spoken about so much yesterday. Kotak has a note. They have maintained a sell. They have hiked the target price to 140. And their rationale, of course, is this, that they're good results after a while, but multiple other things which might impact. So their target price is 140. Okay, and they have maintained a sell. MS has maintained an overweight. They have hiked the target price to 444. Now, you can choose the argument that you like, but 140, 444, I thought I should bring this dichotomy out. They are saying surprisingly strong, and that the macro positioning for the stock is improving in an Indian context, and that turnaround could continue to surprise markets. So,
yeah, anyone who's holding the stock right now is going to hope Morgan Stanley is right today. You're already at 377, so I suppose you pick your poison. So, I mean, but that's an important point for us to highlight also. A lot of our coverage that you see on NDTV Profit, we talk about what brokerages are saying. That's just to indicate what another view is out there. We're not saying this is, the gospel truth and this, you have to believe this. We're just giving you all kinds of views. Having said that, a whole host of brokerages on the election results. Should we just pull up the final tally of how it all settled at the end of it? And, perhaps we might not have the data, but what anyone who watches election results really tracks very closely is vote shares. And if you see the vote shares in West Bengal, it's 45% for the BJP. But the TMC, whose seats are so much lower, and if you show that tally, you'll see the number of seats, actually has a 40% vote share. So it's not as if their vote share has completely collapsed. It's pretty much there. It just depends on how those votes are distributed and the concentration of those votes. So if you look at the BJP plus at 206 and the TMC at 81, it seems, of course, a huge mammoth win, which it is. But then if you go into the details and look at the vote share, it's 45% for the BJP, and TMC has a 40% vote share. So after 15 years in power, that party still has that kind of a vote share coming in on a cumulative basis. Okay, now what are brokerages saying about it? Jefferies India and their strategy on politics is that Modi's grip strengthens further. So they're giving you that overview, which we've been talking about here on this channel as well, in sort of the minutiae of every state. They're saying 5 states to see a government change. BJP continues trend of improving performance since 2024. Populist trend in state elections have continued, and BJP's strong showing over the past 2 years with victories in 8 out of 12 state elections. The West Bengal win bolsters the BJP across eastern India, where the party now rules major states. The manifesto continues to emphasize higher income transfers and populist schemes. Thus, the capex burden will remain with the central government. Next major political event, of course, is UP elections in March 27. But Macquarie's India strategy, I thought, was also interesting. They're talking about BJP and Modi consolidating further. Modi's party has now won in West Bengal, Assam and Puducherry. TVK was a surprise package in Tamil Nadu. The likelihood of BJP forming a government in Kerala and Tamil Nadu was anyway low. So they believe that Modi's efforts to consolidate his position across several states since the underwhelming performance in May 2024 election support greater political stability and economic development. Alignment between BJP-led state governments and the BJP-led central government should enable more coordinated policy making and development. Against a backdrop of limited political stability globally and rising geopolitical tensions, India stands out. But this part I thought was interesting. They mentioned that Tamil Nadu, Assam, West Bengal and Kerala currently have fiscal deficits above 3%. And the 16th Finance Commission has recommended a strict annual fiscal deficit limit for states at 3%. All 4 states currently are in breach of this target. This now becomes the BJP's problem to fix it in Assam, where they were already in power, and in West Bengal at least. So now you need to walk the talk of that kind of fiscal consolidation at a time when you have promised a lot of welfare schemes. And then you need to spend on some capex as well, because if you want people to visibly see the impact, right, you want to display a new bridge, new roads fairly quickly. So that's going to be a tough one.
Industrial strategy is going to be absolutely key, because I know that they've been talking about since 2015, whatever the government was at that time, right? Obviously it was the TMC. But I remember having a conversation with Commerce Minister at that time saying, oh, we're going to set up these parks, we're going to bring people in to make investments. Hasn't happened in over 10 years.
But I know you're slightly over time, but here's the deal. I'm just thinking about it. Let's assume there are about 50 solid corporates in West Bengal right now. who presumably, by the virtue of the comments that we've heard in the last 24 hours on NDTV Profit itself, were thirsty to go out and see some moves happening in the state. If the new government promises those moves, some investments, etc., maybe those corporates might also be inclined to put in some capex, and that will just show, because the state has been so deprived per se of large scale capex.
But Neeraj, then to that, private capex has been anemic despite the central government doing whatever it
on an overarching basis.
Okay, maybe incrementally you might see some impact. You know, this is a lot of what Sharad Dubey will cover for us. And by the way, Sharad Dubey is in Kolkata this morning. We'll get you his live report very shortly. He's already been catching industrialists on their early morning walks and getting you insights on what they are expecting to happen. So we get you all of that and more through the day today. We'll take a very short break and we'll come right back. I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
Namaskar Kolkata, NDTV Profit team is here in Kolkata where the action is there, and it seems like there's a new sunrise, new dawn in the corporate and the economic sentiment of Bengal. That's what I've been hearing. But we'll get you all the action in NDTV Profit, be it corporates, traders, and even the startups. What's the story next for Bengal?
Okay, welcome back. I want to pull up the implied before we get on with the rest of the morning and what we're expecting through the markets. 136 points down. So that nervousness, stuck between a rock and a deep place, I suppose, is the scene for the Indian markets after the wins in state elections yesterday. That euphoria seems to have come off even as we were going into closing. Kush Bora and Parag Thakkar here this morning with us. Have you brushed up on all your politics in the last 24 hours? And looked at what is happening on ground? It's quite exciting, the kind of changes happening, and I'm not even just only talking about West Bengal, but even Tamil Nadu. People want change.
Absolutely, 100%. People have voted for change, and I think it is good. Let's see. And from structural point of view, in West Bengal, to have this kind of majority for BJP was a very so. If not for the Strait of Hormuz and oil at 113, market would have been completely joyful.
So you think that that reaction has been tempered because of what we've seen overnight.
Absolutely.
What would be the strategy right now? This is I'm feeling like market investors are sort of stuck like those sailors in the Strait of Hormuz right now. You can't get out, you can't get in. In a way, it's a tough situation.
Absolutely. So in a situation like this, Tamanna, I would say that I know that Bharti Airtel stock fell yesterday, but I would say Bharti, IT, Pharma kind of names gives you protection. IT has another challenge, which is deflationary impact due to AI. Pharma, some stocks have rallied, and Pharma is always stock specific. But I would say that, so Bharti Airtel, I know that there was some FII seller yesterday, and so the stock fell. But I would say that if it falls more, I think it becomes even more a greater buy. Simply saying at $2.5 ARPU, they are making 60,000 crore free cash flow, and which is at 11 lakh crore market cap, it offers you around close to 6% free cash flow yield. And management has guided for progressive increase in dividend and buybacks.
What is the potential upside from this point? If you
in
look
my
1 year
view,
forward?
minimum 25 to 30%.
1 year forward.
Yeah, because see, people are saying that tariff hikes can get delayed, right? Because Vodafone has also got a lease of life. So I would say that okay, this gets delayed to December. But right now, imagine a situation. Every business which is delivering good results in Q4 will be cautious ahead, right? Because input costs are going up, demand destruction is there, stagflation fear is there.
Yeah.
In this situation, Bharti is most insulated. His ARPU is not going to go down at least. His data consumption is only going to increase.
So therefore, on the fundamentals, it's a clear
Yeah,
buy.
fundamentals
We haven't yet taken a complete view, but I want to specifically ask you on Bharti Airtel, since we're on the subject. Is it a technical buy as well?
It is a technical buy. Strong positional supports near the 1800 mark. If you push it a little, even 1775 is a good support zone. If you want to buy it from a medium-term perspective, this offers a great risk-reward ratio at this point.
And the way they were selling yesterday, it might fall today also. So I feel
you think it will fall today? You might see a little bit.
There was a clear-cut selling. It closed at day's low.
Yeah.
There was so it might just continue, which offers a great opportunity in my view.
Okay, let's get your view on the charts, Kush.
You were mentioning change, right? It is in fact season of change. Yesterday I was at the game, the MI game, Mumbai Indians, and you saw change of guard. Surya Kumar took Hardik Pandya's place. Similar stuff is happening in the markets, by the way. If you dial the clock back not too far back, 10-15 sessions only, Nifty was here and hereabouts, right? But Bank Nifty is about 2.5% lower from that point, and IT index is about 7.5-8% lower from that point. There is change of guard, which is actually saving the Nifty blemishes, which is the participation by Reliance Industries and guess, Adani Enterprises. We did speak of this yesterday, right? The Adani pack and the Reliance stock is in fact helping the Nifty stay afloat, even gain some ground. So yeah, that's the change of guard that is very clearly visible on the markets as well. But 24,300 as the resistance zone. Yesterday, even when the election outcome was somewhat market preferred, on India Market Open, we did mention that 24,300 that is going to act as a resistance. Be a little cautious, and itna sateek visleshan aur kahan milta hai, right? But on India Market Open, no. But this is where the range is at play. We speak of buy on dips and sell on rise. I see this market as both. Essentially, it's a range play market where you buy at the lower band and sell at the upper band until the range is broken. Today being the weekly expiry, the PCR already 0.8, put base at 24,000. There's a good possibility that the 23,950 mark will act as a support. Also happens to be the 20 DMA. So for now, like I said, you play the range. I don't see a very big upside or a downside on the market. 23,700, 24,300. That's the range that you play for, on the Nifty. Bank Nifty is a bit of a concern.
So what would you do with the Bank Nifty right now?
I would avoid right now. The upper end of the band is at 55,600. The lower end of that, downward sloping channel is 53,800. I would actually look at the selling opportunity on Bank Nifty, but with a very strict stop loss, because this is making a case for a very sharp short covering rally. It's only missing a trigger. But up until that comes about, this downward bias could well continue on the Bank Nifty.
So therefore stocks, right, I guess.
Therefore stocks,
You don't play the indices per se.
Yeah, not at least the bank Nifty right now. Nifty, like I said, could be.
Nifty भी बोल रहा हूँ बड़ा range bound है, तो फिर stocks में ही खेलो.
देखो स्टॉक्स में तो एक्शन बहुत धमाल हो रहा है.
Really?
Absolutely. अगर आप स्टॉक्स का एक्शन देखोगे तो वहां पे कहीं कोई कुछ मिसिंग नहीं है. आपको दिन के 5 तो मिल ही जाएंगे. But for now, let's talk about the 3 that are on my list today, and I'm still going with a mix of long and short, 2 long, 1 short idea. Linde India and Manorama. These are the 2 stocks on the long side. SBI Cards on the short side. Good accumulation on Linde India. It is seeing some sell-off from the higher levels, but the primary trend for this one remains intact. 74.50 is the breakout level, very close to that. And given the volumes yesterday, it's a slight preemptive call. So 76.30, 78.30, these are your targets. 72.30 is where you keep that stop loss. Manorama is a different beast altogether. It's had a very good run, very good accumulation. Golden crossover of the 20 and the 50 DMA, 20 and the 200 DMA coming about. So yes, all in all, it's got a few things going for it. Manorama for targets of 1570, 1610 and a stop loss at the 1490 mark. SBI Cards, you need a hedge in a market like these. As SBI Cards provides you that. 640, 632 are your targets on the downside. 655 is where you keep the stop loss.
Okay. Now, we were talking about what the West Bengal elections mean for the state, what could happen. We thought we should go take a look ourselves. So, NDTV Profit is bringing you ground reports on what West Bengal is expecting. Sharad Dubey is joining in right now. Sharad.
Well, yes, the word is Poriborton. That means change, and that's what we are talking about in Bengal. But look at the wonderful morning here and the majestic Victoria Memorial behind me. You can look at it, how amazing it's looking with the sunrise coming in. But apart from that, I was talking with a lot of traders, businessmen early in the morning from different communities, be it Marwari, Gujarati and Bengali. All of them seem very upbeat, going ahead as well. But seems like there's a lot of work to be done as well. There will be some kind of a proposals and committees being made. That's what I'm hearing from the business communities as well. And this might be put forward to the new government as well. But right now, one interesting trend which I have got, Tamanna, is the women entrepreneurs. Over here, they have become quite vocal as well.
Okay, that's great to hear, Sharad, and we're looking forward to all of your reportage from there. Sharad also caught up with Harshvardhan Neotia, chairman at Ambuja Neotia Group, to discuss the changes while he was out on his morning walk. Listen in.
We have Harshvardhan Neotia with us, and to decode what's happening, especially in the business sentiment in Bengal, we are joined in by him. Good morning, sir. How's the total Josh looking in the business community?
Well, first of all, there's a relief that the election is over and the fact that there has been a decisive mandate. So clearly the government has leeway to do development in a focused manner. The other, of course, is that this is after possibly 50 years that we will have a government in the state which is also of the same political dispensation as in the center. So that should give a greater alignment to priorities, to development. And this will be a new thing as far as Calcutta is concerned, now Bengal is concerned. So we are looking forward to that new alignment. And I'm sure that there will be renewed focus on investment, particularly from people from outside the state who have been keeping away from Bengal. So I think altogether we are hopeful and look forward to a positive future.
And so last question, sir. Which are the industries do you think where Bengal can, see a good revival?
Well, I think Bengal has had a rich tradition in many industries. Of course, there are certain raw materials that we don't have. So naturally, those can't come here. But we have coal, we have a huge hinterland that we support. So all services sector, it is very promising. In information technology, robotics, AI, I'm sure these are some of the future industries that Calcutta has the talent pool to be able to exploit. We have the petrochemical complex here, so downstream units. We have a very strong agrarian base, so food processing and related industries. We have a tradition for textiles and garments, so I think that's another area which is of course, it is export oriented and therefore that could be a valuable business. And there are many more offhand, I cannot recollect all of them.
Thank you very much for giving your time and talking to the NDTV Profit. Thank you, sir.
All right, well, so a lot more voices you'll hear over the course of the day, and you should stay tuned for that coverage. And of course, take a look at our social media pages as well. You'll find a lot more updates from Kolkata and from West Bengal right there. But we were talking about stocks, and I think we were having a debate this morning, Neeraj, about cement companies, right? And you were making the point that the announcement on the halting of capex by Ambuja Cement might actually bode well for the system as a whole, because it could potentially lead to better pricing and profitability. Okay. Is this an opportunity? Because the last time, Parag bhai, you had a thumping the table buy on cement companies was when they were going out and raising prices.
Yes.
They are raising prices again.
Yeah. So I completely maintain that view. And Ultratech is one of the large holdings. We are buyer on every dips in Ultratech, and also Grasim is our large holding. So put together, we have around 12% weight in these two companies. So our stance has got validated by what Ambuja has said yesterday, that they want to recalibrate their capacity, and now 150 million ton is a FY30 target instead of FY28, and they also want to prioritize profitability over volumes, which is a very, very good sign.
EBITDA per ton. Okay, so if someone is watching the quarterly results, and of course you're likely to see some bearing of the geopolitical crisis in Q1, right?
Yes.
But if you look through, and hopefully this gets resolved in Q1 itself, in Q2, what is the kind of EBITDA per ton that you would want to see for some of these companies?
So see, cement is a seasonal business, right? So in monsoons, generally your demand goes down, and so you have to actually see second half, how it behaves. And in my view, if the large player like Ambuja is wanting to focus on profitability, I think Ambuja Ultratech, which is right now making 1,250 rupees EBITDA per ton in the March quarter, can inch towards 1,400 by FY28.
Yeah, but the point being, Parag bhai, a lot of broader market cement, the non-large, the non-top two cement names, the valuations are a lot cheaper than the top two as well, right?
Yeah.
If the pricing conflict, etc., or the pricing pressures go away and they are able to hike prices, right? Is there anything in the broader end which looks
absolutely
good?
So it is good for the entire industry, of course.
So what looks
Ultratech,
good?
So my packing order is Ultratech, JK Cement, Shree Cement.
Okay.
Yeah, and then of course the smaller ones, the cheaper ones. But there, the argument is, if they are not sold, which right now there is no name which is coming up.
You mean acquired?
Acquired. Then you don't have a growth story there, because they are not expanding.
Yeah.
They are not expanding at all. Only you have a price game over there.
Yeah.
And price game, so Ultratech is a combination of both. Volume, they already said they are touching 240 million tons now, with a new 37 million ton coming up. So here it is like, last quarter they sold.
Are the EV EBITDA levels pricing that in for Ultratech versus the others? Is the question.
But it is 15 times EV EBITDA in my view, and it can go up to 16, 17, 18 times.
What is JK at, sir, right now?
So JK and Ultra will be at small discounts. So Ultra will be slight premium, but Ultra has got huge tailwinds in terms of...
No, but your point is actually valid, right? If you talk about purely a valuation argument to say that earnings will improve, okay, maybe the top line may not grow as quickly as certain other companies would, but EBITDA is going to grow. And so therefore that multiple will get re-rated, even if the multiple stays the same.
So for example, in Shree, you have a organic capacity expansion plan, and now if the profitability also improves, stock price also corrected. So I would say that Ultratech is a top name which comes on your list. But after that, you have many others. If this Ambuja kind of company talks about profitability over volumes, it's a good thing.
All right. So cement is something to look forward to. Again, it might take some time to play out. That's the big caveat.
The
if
only
you're thinking
thing
of
is
ideas
current
for
situation.
today, then you can wait on a little longer. Samit Sarkar, though, telling us what's the buzz in the dealing rooms this morning. Samit, good morning.
Good morning. Firstly, it's Newland Labs, where dealers are indicating that there are some buy flows on the HNI desk. Prominent HNIs have been accumulating this counter. Dealers indicate that for one of the key drugs, that is peptide block, that has received already big commitments from clients. So that is a positive news that could come in for this counter. So keep an eye out for Newland Labs. For Nalco, there are buy flows on the large HNI desk. Dealers indicate positive sentiment on potential MSCI inclusion, which could lead to huge inflows in the counter. This announcement is expected to come in next week, so keep an eye out for Nalco as well. For Welspun Enterprises, there are buy flows on the PMS desk. Dealers are expecting some positive news flow regarding demerger of its water business very soon. And lastly, when it comes to Lupin and UPL, a pair trade is what dealers have indicated to their clients. They're asking their clients to buy Lupin and sell UPL purely based on Q4 results.
Okay, all right. So that pair trade is what I want to ask Kush about immediately, right? Because it stands out. What would you do here?
Perfect. Lupin is on the cusp of breakout and UPL is on the cusp of breakdown. And UPL, again, like some of the other names that we've discussed, happens to be that short hedge. Every time you get a spike, it's a good idea to maybe consider, whenever you find that weakness, to go out and hedge, with a short trade. So that I completely agree. Just one word on Newland Labs, by the way. There is a cup and handle formation breakout, and there's a good possibility that it might open higher. And hence, it's more of a hold trade, and the reason I mentioned that is because it popped up on my radar as well yesterday, but already moved up. And if there's a gap up today, then you're better off maybe booking profits or just holding rather than initiating a fresh.
Got it. Okay. Well, the other set of stocks, and Parag Bhai, I wanted to bring you in on Adani Ports. Right, and there's a pattern here now. The capital started off with Adani Enterprises, went on to Adani Energy Solutions. Yesterday in the bulk deal, where the promoter entity is the seller, Capital International and allied entities are the buyers here. And at 1632 was it was bought, 1742 is where it's closed now. The flow of money, of blue chip premium FI money into 3 Adani Group stocks are at a point of time when India is seeing massive outflows. What does it tell you?
No, so Adani Ports we discussed yesterday as we speak. It's a fantastic asset, right? So some of the businesses which I would like to own, of course I'm very small person to own them, but Adani Ports is one, Bharti Airtel is one, Torrent Pharma is one. These are the businesses you like to own, yeah. These are the business which will continue for ages, will continue to throw lots of cash, and that to annuity cash flow, which is predictable. So Adani Ports is one such asset, very strategic asset. So no matter, and see market cap, incidentally, yesterday after we spoke, stock was up 5%, so market cap is now crossing 4 lakh crores. And cash flows are around 20,000 crores. So at 5% cash flow yield, you are getting an annuity cash flow business which is growing at 15%. So and as I said yesterday, if you assign 18 times EBITDA multiple to the FY28 multiple, and this is a predictable business. Volumes can go little bit here or there because of this West Asia conflict. But generally, for example, this quarter also the realization increase was 9%. So I would say that it's a 18 times EBITDA, the stock price target comes to 1920. So I think, and then also you cannot say that the journey has stopped there. It's just a 1 year target.
A whole host of other results have also been announced. We'll talk a bit about Tata Tech, we'll talk a bit about some of those as well. But Varsha joining in now to tell you what else should be on your radar this morning. Varsha.
Good morning. Well, let me start with Tata Tech only. If I were to talk about Q4 numbers, Q4 was largely in line. FY27 guidance is expected at almost double-digit organic growth, and margins are expected to return to FY25 levels in FY27. Delayed new vehicle development programs in FY26 likely to resume in FY27, and uncertainty due to tariffs are expected to ease. While total income grew 12.4% in constant currency, they also won a multi-million-dollar full vehicle engineering deal with a leading Japanese OEM, and management is expecting double-digit organic growth. Well, next on the list is Tata Chemicals. Weak set of numbers, though performance was impacted by lower soda ash realizations, and there was a lower volumes in US and UK, which was offset by higher volumes in Kenya and India. The lower EBITDA is due to increase in fixed costs. The net profit also includes, net loss includes a one-time cost of around 1,837 crore. Debt increased due to unfavorable market conditions, and non-soda ash revenue over here grew 14%. Then you have Aarti Industries. Overall good set of numbers, strong numbers. Revenue growth was led by volumes, which saw increase across various products. China anti-involution supported margin uptick, and agro margins though continue to remain under pressure. Lastly, you have Jindal Stainless, wherein overall if you see the domestic demand stayed strong across auto, infra and white goods. Stainless steel usage rose due to durability and recyclability focus. Cheap Chinese and Vietnamese imports continue to pressure the industry. They also face export challenges from geopolitical and tariff uncertainty, and the energy supply risks emerged due to, of course, West Asia tensions. So overall, these are 4 stocks on my radar as of today.
Okay, quite a few, Varsha. Thank you for that. Just wanted to get a quick view on Tata Tech, if you have seen, Parag Bhai, and Aarti Industries.
So basically Tata Tech, I just saw the numbers. I don't own the stock. The only thing is that I think things are reviving there. The results also showed that I think commentary on FY27 is also positive. And stock, if you remember, at the on the IPO listing day, the stock was at 1150 if I remember correctly. Today I saw the price is 590.
Yeah,
so it is exactly 50% of where it was. So I think if things are going to revive, things should look better. But optically speaking, stock still looks expensive from if you compare it with other IT stocks.
Yeah, and after that kind of a hit in the last 1 month, it's still about 11% down in the last
outlook for FY27 looks exciting.
Okay, very quickly, Tata Tech.
No, Tata Tech is a complete avoid. I mean,
I love how Kush now has figured out, let's get to the point.
I mean, yes, 630, 635, that's the zone. If it crosses that, sustains, then maybe you consider. But right now, take every bounce to exit.
And Aarti Industry?
Yeah, Aarti Industries is a good stock. You have to book profits here right now because massive, run up, overheating. But good supports around the 485, 490 zone. So if it does come to those levels, I would actually look to buy on declines for Aarti Industries.
Since we're on the topic of IT, Kush, Coforge ahead of numbers, the price has corrected significantly, OI is up, so clearly shorts in the system. Can it fall further?
Good possibility, that it can fall further. Every bounce on IT is being taken as an opportunity, to exit, perhaps even consider, a short trade. Immediate supports on this one, however, are at 1125. So maybe if it hovers around that, then, it's got some saving grace. But if not, then I wouldn't be surprised to see it test, the recent lows of about 1080, 1090 odd levels. So yeah, it's a shorting candidate. But like I always suggest, results day pe trading, avoid kiya best hai.
Okay, speaking of reactions on the result day or the day after, right? Avenue Supermarts yesterday. And I think it leads to a broader consumption conversation as well that we were having. Markets open in the next 1 minute. So relatively quick answer. Down 4.5%, 5%, but still trailing 96 times.
Yeah. So
would you use opportunities to buy?
No. So we discussed, sorry, I'll just take 1 minute. We discussed this stock at around 37.50 where we bought in our portfolio and we booked profit also. A very quick 25% we got. Same in Godrej Properties. So we got quick. And in the result thing, they have highlighted that there was a spike in consumption because people wanted to reload because of this West Asia. Everybody remembers COVID.
That was interesting. So the Avenue actually had an advantage of that.
So loading. They said, and this is in the press release, right? I pointed out yesterday. So they said that in March, initially when the crisis broke out, there was evidence of stocking because of the geopolitical crisis, which normalized towards the end of the month, of the quarter. So the anticipation is that like-for-like sales growth of 10.8% that they saw, which was the highest in a long time.
It's a great company doing all great things, but as you rightly said, very expensive. And this thing has, this typical one-off thing has given this surge in this March quarter.
Okay, Ruchit Jain also joining in our conversation this morning. Ruchit, very good morning to you. Just as the first pre-open rates start coming in, what is your index call this morning?
Yeah, hi, very good morning. We are into a phase where markets are going through a time-wise correction more or less since last 8 to 10 days. Now, the two major factors that affect our markets is one is the crude oil and second is the USD INR. Now, if we compare the crude oil prices and the USD INR momentum versus now and what was there in the month of Feb and March. So in the month of February and March, the crude oil prices went up around the similar levels of $118, $119 and INR also depreciated. But at that time, we witnessed that markets went through more of a price-wise corrective phase. But you can see that in spite of INR trading at its all-time low and even crude oil prices around the similar levels of 116, 118, Nifty is nowhere near the recent swing low which we had made of 22,200. So in fact, we are about 2,000 points higher from that level. So clearly last time in the month of Feb and March, when crude was going up, INR was depreciating, there was more fear in the market. This time, although the crude oil prices have went up, INR has depreciated, but there is more of a hopes in the market that things will settle down soon. So last time we were into a price-wise corrective phase. This time I think we are going through a time-wise corrective phase. So this divergence indicates that the broader trend is not negative for the market. So on the index front, we are advising to keep a buy on dip approach. 23,800 is the support. So any dips towards that should be used as buying opportunity.
Okay, 23,800. If you find a dip towards that, that could be a buying opportunity. I'm not sure if you'll find that level today. What are the stocks on your radar very quickly, Ruchit?
Laurus Lab is first buy call, which looking good. Consolidation breakout with good volumes you have seen yesterday. So go long on Laurus Labs with stop loss below 1100 for potential targets around 1260. And Sirma SGS Technologies is one stock that we like, where we have seen a good relative outperformance in this entire sector, and that uptrend is getting continued. So Sirma can also be bought from a trading perspective with stop below 970 for potential targets around 1100.
95.32. If you had ambitions of going out of India for a holiday, I think they just got a bit more expensive.
Unless you have dollars in your pocket already.
Yeah, well, I don't know how many people do that per se. Also, you're restricted, right, in dollar buying ahead of a trip in some sense. You can't just quite take it. But be that as it may, the rupee is one big newsmaker today. Some other stocks just want to mark. I wonder what RT and KEI are doing. Also, Petronet LNG, Soba, and CAMS maybe, which was also a beat to estimates. Maybe some of these stocks could be reacting positively even on a dull day. For now, it looks like that. So that is good going. Let's see if this lasts. But guys, rupee, the big one, 95.32 is all-time low.
The point is that we can look at any amount of good news, positives, high frequency indicators, consumption, everything. Your crude sitting steady above $100 a barrel now for weeks is going to hurt you. It's beginning to hurt you, and that's what you're seeing with the USD INR. That's painful. Stocks which are working this morning, walk hard. Look at walk hard, fantastic results, and that's the impact that you're seeing. 5.5% up. AB Capital, also good set of numbers, good brokerage calls on it as well. Godrej Properties, again running up a day after the results, and positive brokerage notes there. Adani Ports firing once again this morning, as is Afcon's Infra. So quite a few stocks over there which are doing okay. Advanced decline ratio is actually positive. It's not too negative on the broader markets. What's on the negative side? Sun TV getting hammered second day in a row, and this is again a fallout of the election results that you'll continue to perhaps see for some time. Delivery not doing too great, about 3.5% down. So is Tata Chem. Tata Chem has also reported numbers, a bit of a margin squeeze there if I recall. That's about 2.5% down right now. Prestige is also seeing a bit of softness. But let's go across to Mahima joining in for the big brokerage call of the morning. Mahima, why do you have Dabur on your list?
So Jefferies has come out with a note where they've maintained buy with a target price of 610 on this one. They're calling it the dark horse opportunity in this staple space, and they're looking at this from a macro trend perspective. They're saying that since we've seen tides turn in the staple segment, Dabur is something that they're liking in the space the most. They've said that staple industries demand is showing green shoots after a prolonged slump. Dabur stock has been under pressure due to macro factors, but going forward, previously the stock has sharply derated, and even a modest industry recovery could drive an upside on this particular counter according to them. What they're saying is that sustained re-rating could be led by better execution, especially with the new India CEO at the helm. And what they're saying is that this is certainly a buy opportunity for attractive risk to reward ratio. So in the staple space, looking at the macro trends, they are very bullish on Dabur, and that's why they've maintained buy with a target price of 610.
Okay, so Dabur, nothing much happening on the stock right now, but the dark horse is how Jefferies is describing it. Parag Thakkar, I know this is a stock that you track. Among the FMCG pack, would this be your dark horse?
Yeah, so it can be a dark horse with Harjit Bhalla coming in as a CEO, and plus FMCG companies. Of course, crude oil will impact their packaging cost and all. So in short term, there can be some problems. But so right now, as we speak, I am more constructive on Marico, which is going to report numbers today. In fact, I just saw. But the point is that they are affected by copra oil prices, and copra oil prices are coming down. They are 35% off from their peaks. So their margins are going to structurally improve, plus all the recently acquired businesses will do well. So I would say that Dabur, Marico both actually, and in fact Lever's comment is also good, and 6% volume growth we saw.
Then if Dabur is the dark horse, who's the lambe race ka ghoda?
So Lambi race ka goda from my point of view structurally is Marico followed by Lever and but Dabur is of course the stock is at 35 times FY28 earnings, most hammered stock. It has not done anything after COVID. In COVID I have seen Dabur at 525. So and now it is 458.
And that was a period wherein a lot of people saying, oh, the Ayurvedic offerings of Dabur will really help and all of that.
Push like so.
But on Marico, keep in mind that the stock has shown a bit of a rally. And I think if you look at the positions that were built into Marico, look at the 30-day chart, if you can pull it out, and you will see that some of the short positions have been squeezed out already in Marico. So bear that in mind ahead of the results today. That could be an important consideration.
Kush's view that don't trade on the result day.
No, ideally don't trade on the result day, and especially in things like these. So well spared. But 908, and let's just see how some of the stocks have settled, right? So you want to watch what KEI is doing, want to watch what RT Industries is doing. KEI is flattish. RT Industries, and whether the numbers have evoked any kind of a response, work hard and have those numbers evoked any kind of a response. So keep that in mind. That stock is up 5%. But again, Kush, a stock that for much of the promise of these blockbuster drugs in the last 1 year, Wockhardt bounces back from some 1200, 1300 and sees selling at some 1700, 1800 if I'm not wrong. 5% up today though. Is there a trade here in Wockhardt? Parallelly, Ruchit highlighted Laurus. Is there a trade in Laurus as well? Do you agree?
Yeah, so I think we had a discussion on Laurus yesterday where I said, there was a breakout above that 1150 mark that came about. So from a momentum perspective, yes, you could well continue, with the Laurus trade. If you had a position at lower levels, now I would up my stop loss to about 1150, that erstwhile resistance zone, now support zone. So Laurus strong momentum, had its share of, time-wise correction and now breakout. So definitely, strong on the charts. Wockhardt, again, you're spot on. It's a range play, not done, too much in a long time, and when you see a stock approaching its upper end of the range, what do you typically do? You just book out and hope that फिर से नीचे मिल जाएगा तो buy कर लेंगे. Wockhardt right now is around those levels, so I would either book partially or maybe exit and book profits, and then if it declines, then consider. It's not done too much. Momentum indicators also pretty neutral on this one, so I would book out right now.
Okay, Petronet LNG, company that posted numbers post market hours yesterday. The stock is up about 1.2%. Oh, 1.9%, all right, at the end of the pre-open session. Any view on this, Parag bhai? Because the volume seemed to have been better than expected and certain other metrics have also worked. There was a one-off also that they had adjustment. But the expectation is that volumes might be muted, relatively speaking, in FY27. So would you buy these levels?
No, see, again, this is like, again, a Dabur kind of stock. It has not done anything since last many years. So it remains a cheap stock, but as you rightly said, now, with energy prices being so volatile and there can be some shortages also in future, we don't know how long this lasts. So I would avoid right now, but it is a very cheap stock.
Okay, Soba is one stock from, and we pointed this out, right? I think it was in Tamanna's list. A real estate company that's doing particularly well, 4% up in the pre-open session. Would you buy this, Kush?
I would hold because it's now, finally above the 200-day moving average. I'm not sure if it'll sustain there though, but, with the kind of run-up that it's already had, approaching overheated territories and resistance, around the corner, for me, this is more of a hold. I would keep a stop loss on Soba near the 1125, 1130 zones and hold, because if the momentum takes it past 1525, then you've got a much bigger run ahead of itself, but for now it's a hold.
Ruchit, don't feel left out because Kush and Parag are in the studios, but after the pre-open session, anything interesting that you have spotted and a view on some of the real estate pack? Real estate, I would say, has also been sort of a dark horse. People expected it to do much worse than it has been performing. Any winners there?
I think yes, Lodha is one stock within the space which has of late seen good price volume action. So I think this is this entire sector was an underperformer for about 1.5 years, and that's why we are witnessing a sharp pullback move here. Although it's very difficult to say that the longer term trend has changed to positive, but at least in this pullback move we are witnessing some stocks retesting their 200 EMA, where for Lodha it is placed around 1000, 1020. So Lodha is one stock which one can look from a near term perspective.
Okay, Lodha from a 1 year perspective. Any real estate bets specifically? You spoke about Soba and Godrej.
So basically, I'll say that in many of these companies, right, whatever has happened in March is past. Okay, now you have to look into future. So market was earlier very upset in the month of March when this West Asia conflict broke up, and so market was very confused that it will be inflationary, interest rates will go up, so it is bad for real estate. So all stocks got tortured. And then when the business updates came, which was actually of January, February, March, the market got excited. So we have run reverse. We have actually bought when people were selling stocks, and now we have booked profits also, because now we are not sure that whether FY27.
So what is your take? What is your take? Will real estate bear the brunt of what is happening?
I think it will. I think it will.
Okay, because all input costs will go up.
I am not as optimistic as some of the management.
All steel, cement, everything will go up.
But could there be, okay, on that point, just so on that point, generally, and we've discussed this, right, in sectors where there are certain large players, there is pricing pressure, the big consolidate. So is that an opportunity?
That's a long-term structural opportunity. For example, Godrej Property is a pan-India real estate player, which is the only pan-India real estate player. Of course, Prestige and all are following. But I would say that in long run, if you ask my view, definitely the market cap of today also, even after the rally, market cap of Godrej Property is what, 65,000 crores max. I have not seen right now, but max. So you can imagine a pan-India real estate company of India having a market cap of just 65,000 crores or 60,000 crores. So from long-term point of view, there's a humongous opportunity.
And valuations for a lot of them, DLF for example, deleveraged balance sheet available at 10, 12 times. It's not expensive at all.
Huge rental income.
The only problem is that, to my mind, that I think Indian markets or Indian real estate has shown a propensity to perform well when equity markets do well. When there is a wealth creation, we're not seeing that in the last 12 months. So there is an issue there.
That's a very good point. It's also an add-on to it. They all those boats rise together. So a bit of that issue as well. Okay, as we're getting just a minute away from the pre-open session, this news coming in from Lupin. I just want to quickly mark this. By the way, FADA numbers were also out for the month, which looked okay, but Lupin, what they have done is important. They've got a US FDA node for a certain drug which helps with hypertension, if I'm not mistaken, and it has a market size of $337 million. That's talk about 0.5% up. Anything in the pharma pack, Wockhardt specifically, do you like it?
So Wockhardt I have not tracked. It is actually that antibiotic resistant product with the that has actually cracked. So I have not tracked it since long, so I will not be in a right position. I think their push will help.
Okay, well, maybe Kush can help on that. Kush, very quickly, 5 seconds.
No, let's go with Lupin only. Like I said, on the cusp of breakout. So yes, has upsides to about 23.95 and 24.50 levels. So yeah, and stop loss around the 2300 mark.
Okay, well, that was close for comfort, but never mind. We got a call nevertheless with all that music. Let's see if there is music on this bourses. Well, the market breadth does look okay. Interestingly, even if the Nifty is starting off 0.5% lower. So that is one interesting observation. Banks continue to slide lower. We spoke about this, and there is no different today. It's almost mirroring what the Nifty is doing, by the way. But the mid caps maybe a tad better. I wonder what the small cap index is doing, 0.16. No, maybe the market breadth. Interesting. Okay, maybe the really micro cap stocks are the ones which are actually doing well. Let's get the heat map up on the screen and show you what is moving and what is not. Very little green, unfortunately, and expectedly. ONGC does well, 1%. It just becomes difficult to trade ONGC and the likes, which is why we don't talk about it when crude prices have gone up or gone down, because the stock doesn't react in the same velocity, if you will. Adani Ports, yet again 0.5% because of capital checking in. Yet again, Max and ITC are a couple of others, Dr. Reddy's, but a fair degree of red today on a 0.5% drop. The Nifty kind of flirting with the 24,000 mark as well. What is not doing well? Well, Shriram Finance, no surprise there either. Bajaj Finance, HDFC Bank. So financials, not just banks, but financials sulking a bit. Mobility sulking a bit because Asian Paints, Maruti, Indigo, Eicher Motors are three names which are also looking a bit soft. Asian Paints, I saw again a crude impacted story down, and ICICI Bank amongst the heavyweights is also down in the top 10. Well, that's the long and short of it. Effectively, the lower tide pulling a lot of boats, including mobility and finance along with it, but the quantum of green just increasing ever so marginally, with Reliance participating, TCS bouncing back from yesterday, But the story of the last 2 days in the large cap space has to be what's happening to Adani Ports really after the 5.5% uptick yesterday, yet another 0.5% on a dull day. Let's see what happens during the course of the day.
Yeah, dull is how I would describe it as well. Pull up India Wix if we can. That's about 2.5% up right now. Nearly 3% up right now as we speak, and even that advanced decline gap is narrowing. So geopolitical issues is like this massive headache that the Indian markets are now carrying for some time, and it continues. It just spikes now and then where it becomes a worse headache and a less tolerable one. Today is one of those days, if I were to describe it that way. Let's pull up the mid cap and the small cap indices and look at what's happening there. Down over here as well, flat to negative really, and small cap 250 also flat. The advanced decline ratio though is a little positive. Let's pull up the sectoral indices and see what the mood is. Oil and gas will be in focus. Look at it, it's largely a red screen. The Nifty FMCG just about 0.25% up, Nifty IT 0.25% up, rupee at all-time record lows. So for the nation in a macro perspective, things are looking a little tough economically, and that's what you're seeing on the screen. Financial services about 0.5% down, auto stocks about 0.5% down as well. But the range is narrow. I'm sure you'll see narrow volumes as well before there is some clarity on what really is happening, and that will continue. Let's look at individual stocks because we are in result season and quite a few numbers have been reported. Some are decent. Let's see if the market is rewarding them. Let's start with Sobha, real estate player, 9% up on that, and good set of numbers which is being rewarded. KEA Industry, actually decent set of numbers, good performance in cable and wires, but the stock has run up, so maybe a bit of profit booking coming in there. Tata Tech, Tata Chemicals are the other two that we have to see. Tata Tech doing well this morning, 5.5% up, a sense that maybe the worst is over. Tata Chemicals was completely flat. Wockhardt, again, strong set of numbers, as was Aarti Industries, looked decent, but the price maybe was accounting for those good numbers. Wockhardt at 8.5% up this morning. Afcons and LG, LNG, Petronet, let's look at some of those as well. Well, showing mild positive views. Sun TV, our election results hurting Sun TV once again after what's happened in Tamil Nadu, about 1% down. And Valor Estate has been seeing a continuous pop since the court relief. It's still showing a 0.5% uptick. But a few major movers today, Alex, as far as I could spot. It's quite a muted day.
It is quite a muted day, Tamanna, but you know that pocket of strength in the small cap space continues, at least at this juncture, and that's what you can see on the screen, that pop of red. And the reason why, you've not seen a very, very bad market breadth. Of course, we started off with just about 700 declines. That number has gone up, and now the declines are actually ahead of the advances, but we're holding with gains of just about 0.1% for the small cap index. Now, a couple of names stand out, right? KEA Industries, Tamanna has already pointed out, and that's despite a pretty decent set of numbers, but Jyoti Laboratories is losing 6%. Aarti Industries now trading with cuts of about 3.8%. You have Ambuja Cements, it's down about 2.3%, and Godrej Properties, very interesting because they had a pretty good set of numbers in the fourth quarter. Maybe it's an element of profit taking that is coming into play right now with cuts of about 2%. And I wonder whether that presents an opportunity if you're trying to get in for the long term, particularly because the outlook for FY27, at least as things stand right now from what the company is saying, is not looking too bad. Of course, if the situation on the geopolitical side worsens, then everything is going to look pretty bad. Wockhardt has already been pointed out to you. From the real estate pack, Sobha is up about 7.8%. Tata Technology is now at 625, and so therefore the first question, if Ruchit is still with us, then Ruchit, to you, Tata Technologies, the conversation that we had with Kush earlier today was that the trend looks a little negative, but around the 600 plus, and I'll try and remember exactly what level he spoke about, but if it crosses a level, certain level above 600, you might want to consider entering. What do you look at Tata Tech and see on the charts?
So as of now, should be taken as a pullback move, but the follow-up move would be important, especially the 200 EMA resistance, which will come around 645, 650 kind of level. Last time, I think the 200 EMA was in October 2024. After the month of October, we have not seen a single day where the stock has closed above its 200 EMA. So I think that 645, 650 is the immediate hurdle for the range. Stock has seen a good momentum today in the opening itself. So let's wait for the follow-up move. In case if we see a closing above 650, then that could be a signal for change in the broader trend as well.
Okay. Ruchit, good morning. Neeraj, I haven't spoken today at all, but Intellect Design Arena from amongst those tech names is showing quite a bit of resilience, quite a bit of movement, up 2% again today. Do you like it on the charts?
Yeah, hi, good morning, Neeraj. Well, I think signs of a pullback move only, not a change of trend. What we have seen in last 1.5 months, the stock has seen more of a consolidation with 780, 770 acting as a resistance. So I think we would wait for a breakout above that 770, 780 hurdle, that too with good volumes, to consider it for fresh longs.
Okay, very interesting. Ather Energy is trading with gains of about 4.7%, and I wonder, Kush, if you have enough data on the charts to talk about this one, would you buy into it at this level or hold?
Very well identified. I like this stock. और इसमें हमेशा कंपैरिजन करते हैं विद इट्स पेयर्स, ठीक है, तो मुझे तो नहीं पसंद वो वाला, ये वाला मुझे अच्छा लगता है।
बजाज ऑटो, ओला, ऑफ कोर्स, हीरो की बात कर रहे हो, ओला की बात कर रहे हो, ओके,
बस तुम भी ना। नो आई अगेन, यू नो, I've said in the past, you know, I don't really trust the moves that, you know, Ola gives. बहुत अच्छा ब्रेकआउट आता है, वॉल्यूम बैक्ड, फिर सारा डिस्ट्रीब्यूशन पैटर्न में चला जाता है, so I don't trust that move. Even this time around, if you see the 200-day moving average resistance acting up, stock not doing too well. Ather on the other hand, phenomenal. Whatever limited data I have initiated calls on this one in the past, going from strength to strength. Every decline that comes about, you know, 3 to 5%, maybe deeper, is actually more of a profit booking consolidation dip, and you know, that should be taken as an opportunity to buy. So very constructive on Ather. In the coming months, won't be surprised to see about 1175, 1200 odd kind of levels on this one. Now support zones building up around the 900 mark. Risk reward ratio still favorable, you know, with this kind of up move. Momentum to hai hi, so yeah, prefer this one, you know, in the space compared to Ola.
Okay, so KEI, I just want to mark this very quickly because we were talking about what happened with KEI, because the numbers look fine. There's a Morgan Stanley downgrade which has come in, and that's why you're seeing that drop in the stock. This is what Morgan Stanley is saying. It's on your screen as well on the ticker. Downgrade to equal weight from overweight, and they've hiked the target price despite that downgrade to 5,213. They've said despite higher commodity prices and a weaker INR, management aims to grow revenues at 20%. Q4 reflects soft volume growth, margins to benefit from operating leverage, but faces headwinds from increased competition in wires. Margins pose downside risks, balanced risk reward. So that's the reason I think you're seeing a bit of a soft move in KEI. The overall cables and wire space though, Parag bhai, and what Morgan Stanley is saying on KEI, you think there's some signs of worry there?
Yeah, definitely. There are some signs on every business. Some signs of worry in every business, in my view, except Bharti Airtel's, except telecom business. I would say. I
would have completed that sentence for you.
Or say pharma business, where you know it is absolute essential, like for Torrent Pharma, Chronic Pharma, or something like that.
Yeah.
Even in my favorites like Ultratech, also Cement, also there is some risk element there, right? So I would say,
in a sense, Parag bhai is right? To find out that there is trouble and there is worry, you will have to access data and use your phone or the internet.
March quarter results hardly tells you anything. And plus, if you remember, see KEI, all the stocks which you mentioned recently, KEI, Aarti, and one another stock I forgot. All three have rallied 25% last 1 month. I was just noticing that.
And Bharti hasn't.
No. So I'm saying that, see, all these stocks have rallied also, and now FY27 you are not very confident till this conflict settles down. So there is definitely a profit booking.
That's true. That's true. Parag, Indus Tower, any thoughts? Because it's salt, but there is a dividend, but it is salt now.
And see,
and you like playing this. That's why I'm asking. Is this an opportunity?
Yeah, annuity cash flow business, good business, and there is a good downside protection. Bharti Airtel itself wants to increase stake by 5%.
Yeah, but I believe the creeping thing maybe started. Let's wait and watch in Bharti too. Kush Bohra, opening thoughts, anything that stands out for a trade? It could well be one of the three stocks that you mentioned earlier.
You know what stands out is the Nifty move. One thing that, you know, I perhaps did not mention in the commentary. 24,000. जब से वीकली सीरीज शुरू हुई है 300-350 का प्रीमियम था ऑन द कॉल एंड द पुट. इफ यू सी द रेंज दैट्स व्हाट द निफ्टी इज डन, राइट? अबाउट 24,300 ऑन द अपसाइड, 23,800 on the downside. So didn't really test that lower end of the band, rebounded just from there. if you are an option writer, after a long time, I think you've sort of, you'd be laughing your way to the bank. ये सारा premium pocket होने वाला है. Of course, there could be some volatility, but I think 24,000 का ये band maintained रहेगा. तो अगर आपको dip मिलती है near 23,700, 23,800, तो बिल्कुल buy करना बनता है unless that is broken. So my view, consolidation continues on the Nifty. That range play still continues on the Nifty. And as far as stocks go, Linde India opened well, Manorama didn't, but now Manorama is catching up. And I think this is perhaps, from a medium to a long-term perspective also, a good addition to the portfolio. But for now, so it's got good momentum, so you could trade in Manorama.
AB Capital, it's cooling off even as we're speaking. It was up about 4% just a short while back, but take a look at that dip. There's an interesting note that has come through from Macquarie on AB Capital, and they've said that they maintain an outperform rating with a target price of 415. They say it's a strong performance with improving asset quality. The PAT was in line and higher OPEX offset by lower credit costs, however. AUM growth is also healthy and credit costs remain benign. And specifically, they're talking about ABSL. VNB margin expands on the back of rising protection mix. Do you have a view on this one, Parag bhai, AB Capital?
So if you remember, we had discussed AB Capital at 170.
Right.
And that time it was a thumping the table buy. Of course, some of my calls have gone wrong also, I must acknowledge. But here, again, it is a March quarter. We have to remember that going ahead, how things will shape up on the ground. There will be many SMEs, MSMEs which will be in problems. So I will not jump and buy just because the March quarter was good in many of the businesses.
So would you take money off the table with AB Capital?
So I don't own it right now.
If you manage to get it at 170?
See, from a short-term tactical perspective, yes.
You're nodding your head on the charts.
Yeah, so for me the structure is not bad on this one. Of course, it's rallied quite a bit. The structure is not bad. The only reason it doesn't become a strong buy is because there are multiple resistance points around that 360 to 370 zone. A couple of technical events occurring there. So अगर 370 take out कर जाता है तब वो जो consolidation है वो finish हो जाएगा. Resistance will be taken out. So then you can consider, and that's the only hitch. Otherwise, structurally it's not bad, and it's got good support zones around the 335 zone. So yeah, if you do have a position, you should hold this one with a stop loss at 335.
Let's just talk a bit about Wockhardt and look at what Wockhart's done since opening. Pull up that chart as well, going from strength to strength. And in fact, Varsha is with us to talk about what's really worked with the Wockhardt Q4 numbers. Varsha.
Well, overall a good set of numbers that the company has seen, and they reported profit in FY26, making its first profitable year since FY22. So a lot of products which were in research have done well for the company. They saw strong growth when it comes to the biotech and emerging markets. Insulin based biotech products perform very well. Even but of course the other income, there was a good spike in other income as well, which aided profit for the company. There was 85 crore one-time charges due to restructuring and compliance, and of course they received 35 crore from Dr. Reddy settlement as well. Now talking about the India business, which was up 18%, good growth over there, and this growth was driven by diabetes, MROC and derma products. Talking about UK, the Q4 sales were up 20% and FY26 sales were up almost 13%. Talking about emerging markets, over here also the portfolio doubled, so revenue doubled for them, and this growth was led by biotech, insulin and strong LATAM performance. So overall a solid performance that the company has seen, and it is expected that going forward a company is expected to maintain this growth trajectory.
Varsha, thanks so much for that. Arguably the stock of the day at this point, and quite a few things working in favor of the company. Of course, we pointed out to you that this is the first full year profit since FY22. Remember that. Now, on that note, I'd like to thank Ruchit as well as Parag bhai and Kush sitting in studio. Gentlemen, thanks so much for taking the time. Pleasure speaking with you as always. Let's stick with earnings though and talk about Tata Chemicals. It's another tough quarter with the loss widening on the back of significant US goodwill impairment charges and weak global pricing. Let's go back to Varsha because she's gone through the numbers in some detail to tell us about the context as well, Varsha. It's another tough quarter, isn't it?
Yes, absolutely. And even the performance impact that you're seeing, which was led by lower realization, soda ash realization, and there was a lower volume in US and UK also, which was offset by a strong volume in India and Kenya. And the lower EBITDA is due to increase in fixed costs, and the debt was increased due to unfavorable market conditions. And the non-soda revenue, though, grew 14%. Onto the US business, there was the impact was due to weak export pricing and goodwill impairment. Talking about the UK business, if I were to talk about, revenue was almost 1,461 crore. Lower revenue, this was because of the lower volumes that the company has seen. Even EBITDA was 88 crore. Onto the India business, higher volumes though, which supported revenue growth, and there was a benefit from completed soda ash and bicarb expansion. Strong demand momentum continued during FY26. Onto the international business, US and Europe impacted by weak pricing and demand. UK cost base improved though. Kenya operations supported volumes. Onto the balance sheet, capex spend was almost 1,205 crore, which was lower than FY25. Net debt increased due to lower cash generation. Balance sheet remains robust with low leverage. Onto the market overall industry analysis, global demand remains muted due to weak market condition. Energy and freight costs elevated due to geopolitical tensions.
All right, let's pick up the geopolitical tensions bit first with R. Mukundan, Managing Director and CEO of Tata Chemicals. Mr. Mukundan, very good morning to you and thank you so much for joining us. I want to talk about your Q4, where perhaps the current crisis would not have been priced in at all. Yet we are seeing some amount of export impairment. Can you just take us through what the highlights of this quarter were as per you?
See, in our books, there are goodwill of various acquisitions we have made, and I think this is the last of the goodwill which we have in our books. And the US asset was tested for the goodwill. It's an accounting practice at the year end. You do the test, and on the back of the lower China prices in Southeast Asia, mainly export prices in Southeast Asia, I think the accounting standards needed us to take the goodwill impairment, which we have done. The positive news is that I think our debt equity ratio is good. Our balance sheet is still in good strength, and it's been done in line with accounting standards. And also there's a reversal of, there's been mainly a tax charge also taken, mainly because of the weakness in the export market in the US asset. So both put together about 2,000 odd crores.
Okay. So that is what we have been seeing happening in the top line. You talked about the pricing pressure from China. Is that now continuing to trouble? Can you give us a sense of what's happening there, and also the demand on the other side that you're having in sectors like glass and chemicals?
So clearly, I think I'll just say what is the immediate concern, which could be issues which are caused by the Middle East crisis. But leaving that aside, on a structural front, I think the market which is most impacted by China overcapacity is Southeast Asia, and that impacts about 20% of the US exports and about 1/3 of the Kenya exports. And that's where the pricing pressure has been the highest. Otherwise, all of the markets are fairly priced. And in fact, because of the Middle East crisis, which is on now, we have actually seen increase in the landed price of most of the in most markets because of the increase in bunker fuel cost of exports from China. So we are seeing the market move up, and we've passed on our cost increase to customer. In some cases, the price increase has been more than enough to support the cost increase we've seen on logistics. In terms of the domestic market in India continues to be strong, and the domestic business continues to do well, both in standalone as well as in Rallis. We've seen the domestic market in US do very well, hardly any impact on the cost side, and also the customer side. LATAM is doing fine as we speak. So clearly the China capacity overhang is impacting us mainly in the Southeast Asian market.
Mr. Mukundan, good morning, this is Neeraj here. One of the thoughts that people who track the sector are saying is that with the yuan appreciation of nearly 18 to 20%, and logistic costs having gone up substantially, this whole low-cost import from China problem might be ebbing a little bit. Also, Indian exports might have a better chance relative to Chinese exports. Are these fair arguments, or is it wishful thinking?
No, they're fair arguments. Actually, very clearly we are seeing within domestic market in India, most customers saying that they want to increase the share of domestic sourcing because they've seen the impact of let's say, disrupted supply chain. So clearly, we are seeing our order book increase in India and also in all the markets. For example, if you count Americas as a market, most South American producers want to depend more on North American supplies. And within Africa, they want to depend on the African supplies. So there is a trend that there is an increased bias towards domestic sourcing. Secondly, I think the point which you make that while the cost increase on the bunker fuel is equal for everybody in terms of per ton, the impact in terms of logistic cost impacting is more for Chinese because they travel longer distance to these markets than, let's say, a domestic producer. So clearly that's increased margin pass through, and that's a fair ask from the supplier side. Where I think it is not playing out as strongly is the Southeast Asian market, where the logistic costs for Chinese are very competitive.
Okay.
And we won't be able to. So I think it's very structurally that the markets like Malaysia, Indonesia, which do comprise about 20% of the demand, that is where we are seeing that the price movement relative to our cost movement is not that strong.
Got it. So Mr. Mukundan, okay, but so in aggregate, after a number of years of kind of the sector-wide not looking that strong, could FY27 be a year where the chemical space comes into its own because of all the factors that we mentioned, plus the base effect, etc.?
So I will say one is a very much a tactical effect which is happening today because of the Middle East crisis. Then we go to structural effect. This tactical effect at some point can disappear, and if it disappears, then we are back to square one, waiting for the structural effect. On the structural side, I think capacity in China has to rationalize in many of the sectors, and I think that's a process which is underway now because many companies there are actually exporting below cost. And this is unsustainable. So they probably have to move, for example, in soda ash, at least by $15-20 just to break even. So we will see this fundamental shifting from either side. So you got to look at it saying that Middle East crisis is given a fillip to the China alternate. But I think at some point when it sort of ebbs, I think we'll be back to square one. So we need to focus on two things. One is building a very competitive portfolio. Also a portfolio where China is not a competitor. So one of the things we've been doing is to increase the non-soda ash sales, which has gone from 42% to 49%. And next year we'll see another 23% growth over this. So we are pushing hard in terms of capital allocation, everything to the fact that where I think we don't get hit by this overhang from China. Obviously, at some point this will end. At that point, we'll start doing capital allocation to that part of the business.
Interesting. All right. Mr. Mukundan, I want to take that maybe a couple of steps forward, right? And understand completely to say that you cannot call when this geopolitical crisis will end. And so therefore, everything will be seen from that lens or caveat. But having said that, as you stand right now with domestic having done better, and firing on all cylinders, not necessarily all cylinders, but doing better than other businesses, do you anticipate that double-digit growth will continue? The share of domestic as an overall pie will also increase. And to the point on soda ash, or rather non-soda ash, what are the implications for the financials in FY27?
So in terms of implication of financial 27, I think domestic is going to do well both in India, US, and also UK. We do believe that we preponed the shutdown in the last quarter, which is why one of the readouts was that the UK fixed costs have increased, which we believe was the right thing to do. Then we get a full year run with a much more efficient plant operation. So I think UK also would do well, and Kenya largely would also start to pivot towards Africa. So I think we will see increased throughput on all products, but also the ratio of non-soda ash to soda ash is going to shift further by 23% growth on the non-soda ash sales. And that would also change the ratio from 49%. I think next year it should probably clock about 58% or so. So I think we're increasingly moving our investments and our capital allocation and growth in that direction. In fact, this board meeting, we cleared 100 crore investment for expanding salt capacities further. And as you know, we are also working on expanding silica capacity, which is already underway, and further salt capacity in south of India. So all told, our capital allocation focus is on making sure that we grow the part of the business which is not cyclically impacted by China overcapacity.
Mr. Mukundan, always a pleasure. Thank you so much for taking the time. Wish you all the best for FY27.
Thank you.
All right, with that, let's go across to Coal India management to talk about the results and the path forward. Hiral is in conversation with them.
Coal India has posted a good set of numbers, and what's interesting is that the earnings beat has been driven by cost efficiencies as well as a higher e-auction mix. And what I want to address over here is that now the volume uptick is something that the street has been eyeing. So operationally, a good set of numbers that have been reported. Joining us to discuss more, we have Mr. B. Sairam, CMD at Coal India, Mr. Mukesh Agarwal, Director Finance, and Mr. Mukesh Chaudhary, Director Marketing, joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. My first question coming to you is, operationally, the numbers have been good. There has been a miss if you have to look at FY26 production target by approximately, 2%. What is that expected pickup that you're looking at now that we've entered FY27? Because the demand is expected to be peak in terms of the power side of it. And what specific operational changes are you looking at to make sure that the 1 billion ton milestone remains achievable for FY27, Mr. Saira?
Yeah, for the FY27, we have been assigned a target of 815 million ton. So at the start of the year, we have started with opening book stock, coal book stock of 130 million ton. So the first challenge was to liquidate this stock, and although the opening stock was 130 million ton, but in the month of April, with sustained efforts and with a steady liquidation over past 1 month, we were able to land at a book stock of 122 million ton on 1st of May. So there was a liquidation of around 8 million ton over past 1 month. So that is a good thing. And for FY27, as I had told, that 815 million ton per annum of target has been assigned to us. This target is based upon the requirement of a power sector as well as non-power sector. For power sector, the Ministry of Coal and Ministry of Power have assigned the target to Coal India. And for for non-power sector, we have taken a growth rate compared to the historical growth of non-power vertical. So based on all these two things, we expect that we will be able to dispatch coal to the level of 850 million ton. In fact, that is our capacity. If all the things of railway rack materialization, all these things take place in good shape, then we are ready for dispatching 850 million ton. And with that, the closing stock at the end of the year will be 95 million ton. So this translates to 27% reduction in the coal stock.
Okay.
And so as far as
yes. So you're talking about reduction in terms of coal stock. What about the production side of it? Because April production also seems to be slightly lower. And when you're talking about the 1 billion ton milestone, is that the production target itself?
So 1 billion ton is not the target of Coal India Limited for FY27. For FY27, it is 815 million ton. Okay. And we have got good enabling conditions that we have made ready for FY27. For example, clearances, environment clearance, there will be 22 million ton environment clearance will be accorded in this financial year. Forest clearance of 3,100 hectare. Land possession of 1,250 hectare will be there. We have engaged contractual capacity to the tune of 120% of our requirement. So this gives us an adequate execution buffer in our operational aspects. Then 5 number of new mines will also be added during this financial year. On rail evacuation front, because for any type of dispatch, rail evacuation is of utmost important. So we are adding the first mile connectivity projects, which is a closed loop mechanized coal transportation system along with the dovetailing with railway evacuation. So around 131 million ton capacity will be added to the existing capacity of 432 million ton, with 13 number of FMC projects coming up this year.
Got it.
So collectively, all these initiatives combined together, if you see, it will be going to give a big boost to our operational capabilities and readiness to meet the spurt in production and offtake.
Got it. So let's talk about the realizations as well, because the FSA realizations have improved in the 4th quarter, though the e-auction realizations have slipped slightly. What is your internal expectation or forecast when you talk about e-auction premiums, which are currently at around 30-35% for the remainder of the year then?
Yeah, Director Finance, please.
Actually, the e-auction premiums for the last year, they were slightly subdued at around 38 to 40%. But once the with the onset of the summer demand, in the month of April, the e-auction premiums have actually shot up to 51%. And going by the demand which is being projected and the way power sector is consuming coal, and also looking at the West Asia crisis, which is leading to a strengthening of the imported coal prices, we expect that it should be somewhere between 45 to 50% premiums we should be able to realize going ahead for the full year if we take that into account, with increased volumes, of course.
So, okay, tell me one thing then, does anything shift if you have to talk about the pricing strategy? Because the government is also planning to operationalize a coal exchange by FY27. So, what is the kind of impact you're seeing in terms of Coal India's price discovery as well as the current e-auction premium model, if you have to add to that, Mr. Agarwal?
If you permit, I'll take that. Coal trade exchange, we intend that it will be taking the spot coal what we are selling presently. And this mandate is for around 10% of our total production. Last year, we have sold around 101 million tons of coal through the spot auctions. And once the coal trade exchange comes, other players are also it's going to be a multi-buyer, multi-seller platform where the prices are going to be discovered based on the real-time listing. But we are still expecting that we should be in a position to maintain the premiums of somewhere around 40% plus going ahead, even if the coal trade exchange platform comes in and we offer a substantial quantity of our coal on that platform also.
Okay. Now, talking from the operational perspective where you're expecting good output, the impending wage revision that is planned in FY27, expectation is that somewhere it will come and put pressure when you talk about earnings. So what is the plan in order to offset the increased employee cost? Will you be doing this through price hikes or will it come in through volume growth? How are you looking at that aspect? Because the protection of EBITDA margins, because right now you're 34.5% is the kind of projections. How do you plan to protect that?
Actually, employee cost is going to be increased, but it will be offsetted by the natural attrition, which is around 9,000 to 10,000 employees are every year are superannuating. And we are recruiting only 1,000 executive level employees. So this will offset the increase, and otherwise we are also enhancing the digitization in operation and the more mechanization, FMCs, all these things will offset the increasing employee cost, and which will help us to maintain our EBITDA in the range of 32 to 33% in the coming year.
Understood.
All right, so that's the management of Coal India speaking to NDTV Profit. I'm taking a look at the markets right now, and you are more or less holding at 24,000. We haven't broken below that, or at least we've come back from very close to that level and holding at 24,032. Take a look at the heat map for the Nifty 50 just to see if there's a little bit more green on the screen than before. Well, I don't think so. So you're just about 18 or there about 16 companies that are holding out in the green. By the way, sticking to earnings, and we had a conversation, rather I had a conversation with Gaurav Pandey, Managing Director and Chief Executive Officer of Brokerage Properties, about the FY27 outlook on the back of a very strong Q4. Listen in. Stellar set of numbers by Brokerage Properties, and for good reason, because the collections in the quarter gone by are apparently the highest ever for any Indian realty company, standing at close to 8,000 crore rupees. That's an increase of about 14% on a year-on-year basis. And that set the tone for the quarter. What's the path ahead looking like? We'll find out in just a minute. We're joined by Gaurav Pandey, who's the Managing Director and Chief Executive Officer of Brokerage Properties. Gaurav, thanks so much for taking the time. Let me first ask about that number, right? That collections number in the quarter gone by is the linchpin for the performance. Would you agree? And what led to that?
Thank you so much for having me. And you're right. I mean, collections is a very critical metric in our business. And you kind of summed up very well in terms of the operating importance this lever has. I would say it was a combination of factors which led to, this massive uptake. I think, great execution strength during the year. We had a very strong strategy in place to accelerate construction, because if you have construction spends being good, you will start hitting construction milestones very well. And I think that was one. Our efficiency ratios are industry leading, meaning that percentage of customers that pay us within 1 month of raising the invoice is an industry benchmark. Most of our projects would be between 96% to 98% against the industry median estimate at 62%. So that again adds a lot of that, and high quality of sales. Eventually, if you sell well with the right payment plan and right cost of sales, this is more of an outcome. So yeah, extremely excited and thrilled what our teams could achieve.
It seems like, and if I look ahead, and please correct me if I'm wrong, FY27 customer collections estimated at 24,000 crore rupees. This obviously ties into the kind of project pipeline that you have.
Yes, you're right. We have given a guidance of 24,000 crores.
And so take us through that, right? What is the pipeline looking like? Is this going to be coupled with a few launches that are just around the corner?
So I think it is a combination, right? I mean, we have a launch pipeline, give or take, in excess of 48,000 odd crores. Through that, a lot of launches will come during the year. Give or take, we hold about 1,35,000 crores worth of high quality inventory. So from there, a 48,000 crore kind of inventory would be into launches this year, and a percentage of that we will sell. We've also given an external guidance this time of 39,000 crores of sales. So that will contribute very meaningfully. So that's one bucket of collections. And the second bucket of collections that will come is from, continued sales, construction acceleration, leading to collectible milestones being faster and therefore leading to more collections. So in our business, if you hit, say, a 4th slab or a 7th slab or a 10th slab, there are milestones attached to it, and customers tend to pay us when the invoice reaches them. So there's a lot of focus on acceleration of construction. You would be pleasantly surprised that in FY26, we could increase our direct construction spend by 62%. And all this finally, after some lag, leads to higher collections. So yeah, I mean, combination of sales and execution is going to, ensure that this robust growth of trajectory on collections continues in FY27 also.
Speaking of execution, Gaurav, the scenario that a lot of people are pointing to, not just in your industry, but anything that requires a significant supply chain, right? We're talking about cement prices heading higher as of the 5th of May. We're talking about several other raw materials going higher because of the geopolitical crisis. You're talking about rapid execution from your perspective, but is that also seeing an increase in costs? Are you able to pass that on? Are you going to see a lumpiness maybe in margins in the upcoming 4 quarters?
I think great question, and I'll probably divide it into two parts. One is the existing geopolitical risk. Yes, you're right. These do have intermittent sort of a impact on the entire larger economy because your oil rates are going to push many input materials pushing upward. But I feel, one, this is transitionary in nature, difficult to predict when it's going to lapse, but between a quarter or two, I think things should start settling down. And that is, while it does impact our margins, but from a scale point of view and economics of every project, this is very insignificant. Some estimates would be between 0.1% to 0.2% is the impact on the margin per quarter as a rule of thumb. That's one. The second is, I think, our ability to find frugal ways of cost control to overall manage the profile of profitability. And this is a combination of better overhead management, which is very controllable, and we've been working on that for a while. And the second is using forward contracts to our advantage. So we've got great economies of scale. We've got some great forward contracts on many materials. Exercising that judiciously well while partnering with our contractors, I think, is a second opportunity set that we would like to leverage upon. And third, we have some great inventory in every project. So we tend to hold the primemost inventory to some percentage always with us, so that we are prepared to manage some amount of margin uplift. So that could also easily compensate for this marginal drag. But yeah, I mean, beyond, say, 6 months or so, if this geopolitical crisis will compound, of course, it will have an impact on the economy and us. But I think to that extent, we are well covered, and hopefully, this is going to be over soon.
Certainly, I can't add anything to that sentiment. But let me ask you a follow-up on that, Gaurav, then, which is the margins. Of course, it comes with your typical safe harbor, right? And you've pointed that out to say that if there is a prolonged conflict, everyone gets affected. What would be a targeted range, perhaps, that you would like to keep it at in FY27?
I think, we've always consciously maintained that, we use a term called imputed PAT margin, basically the margin that we lock in at the point of time of sale of every inventory. So between 14 and 15% is what we feel our net PAT margin should be. And I think that we will be able to do with consistency. And we've been doing that very consistently. In fact, we've just declared our results and we've maintained a 14.9% PAT margin for last financial year. So I think between 14 and 15 is something we are very confident. Of course, there are times in some projects where this goes to even 20%. There are some projects it could be marginally lower. But I think at a portfolio level, reasonably confident to maintain this.
That's excellent. Just a last point that I want to raise with you, Gaurav. And typically in your industry, also in a few other industries, at times of stress, there is a tendency that larger players with more scale, with more ability to manage costs, as you've just described, are able to weather the storm. But smaller players tend to get left by the wayside. Does that present opportunity for more consolidation in a sector that has been seeing quite a bit of that already? And are you looking at or scouting opportunities even as we speak?
I think it's a great question. I would say, these opportunities continue to present both when there are supply side shocks like the ones we just talked about or any tailwinds on demand. I think consolidation accelerates because consumers initially, when in the bullseye property market, are reasonably agnostic and they're more price conscious, but they become more brand conscious as the cycle matures. So of course, we would definitely capture that opportunity. In fact, our market share has sort of doubled in the last 4-5 years. We were 2.4%. We're close to about 5% now. But compare that to many other industries, we're not even scratching the surface. So there is a huge headroom to sort of leverage on consolidation story. But beyond consolidation, I would say there are many cities where we're still seeing a huge opportunity to grow on ourselves, because the market is presenting those opportunities. Classic example being Bombay. And, for us, even South, Bombay business used to be about, give or take 3,000 odd crores 3 odd years back. Last year, it did close to about 11,000 crores. South used to be about 700 crores about 4 years back. And last financial year was 6,500 crores and did about 11,500 crores last year. So again, these are markets where agnostic to consolidation, we really anyways going to grow a lot. But yes, wherever markets will soften, micro markets will soften, where there are great opportunities to buy out, we will continue to strengthen our position.
Okay, Godrej Properties in focus. The stock has come off as that conversation was on with Alex, about 3% down right now. We'll take a very short break. We're coming back with some great conversations. We're giving you a ground report from Kolkata. After the results in West Bengal, what really is industry hoping to happen there? That screen that you're seeing will be populated with Sharad and a whole host of people after the break. We'll come right back.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you.
All right, welcome back. With political change in Bengal, what really is the hopes and aspirations? We at NDTV Profit decided that we're not going to talk about it just in the studios with people on the phone line or with Zoom. Let's send someone down to understand really what is the expectation that the people of West Bengal have, and especially the business community have, from the new government. Sharad Dubey, what is the mood in Kolkata right now?
Well, the mood in Kolkata, Tamanna, is very, we could say very positive. There's a sense of revival happening across the business communities. And I'm trying to talk to a lot of traders in Bada Bazaar. This is one of the oldest places where the trade happens, business happens, dhanda happens. And interestingly, a lot of listed companies started from here, based out of Kolkata. To just give it a little bit more perspective, we are joined in by Arijit Malakar from Ashika Group. He has understood this market. He's based from here. So we want to talk about how things happen and going ahead, what it means for Bengal. Hi Arijit.
Hello. So it is a big positive for the West Bengal, because we all know that West Bengal is very actually invested state since long time. And the thing is that BJP, all we know, is a very reform-led party and pro-business led party. So it will be very big positive for the mainly BJP will focus on the infrastructure, port, then power and transmission, distribution, road and highways. So these are the sectors which primarily BJP government will focus on that, and there are a lot of potential in this sector in West Bengal. So apart from that, BJP government is also focusing to boost up the consumption. So they will actually announce they committed to increase the cash subsidy of women to 3,000 rupees. Then they will promise that they will release all the dues of DA to state government, and they will bring the DA rate from
talking about a lot of government commitments, the street commitments, what's required. We are at Bada Bazaar. It's one of the largest trading hubs of Kolkata. I'm sure you must have talked to a lot of folks in this area. What is the sentiment here? Shops are also opening, and of course today it's opening with a different sentiment. So how is it looking like for the traders here?
It's a very positive sentiment. Actually, we all know that for the last many years the industry has not been actually growing here because of that, some geopoliticizing of the political parties. So now the sentiment has improved, and there will be a industrial resurgence in West Bengal, which we are going to see in the coming days. And lot of manufacturing companies, I think, will get the confidence to come here to set up their business here. So overall, it is very positive. And
so, talking about these free trade zones, these manufacturing setups, how are these located near Kolkata? How is the sentiment? Do we have that near Havra side?
Yes. The thing is, we all know that West Bengal is very strategic located area. We have the ports. We have two big ports. Haldia ports are there. Then Kolkata port are there. So the trade is very actually conducive in West Bengal. And most of the companies here are mainly based on SME and MSME segment, and SME and MSME companies are mainly based on the Howrah side, Haldia side. All those are will be very benefited if the big companies come here and set up their manufacturing bases here.
Right, Arijit.
All right, more sights and sounds from Kolkata coming your way through the day with Sharad Dubey. Quick look at what's happening in the markets. Tata Tech firing about 9% up right now. Is the worst over? Results were looking okay. Management commentary has been positive. Tata Tech, I'm talking about, not Ultratech. Tata Tech about 9% up right now. Wockhardt also 9% up. AB Capital firing. CAMS firing. Vodafone Idea having another good day. at the street after the feeling that some of those blues on AGR are now behind them. Nifty IT going strong, about 0.5% up. The Nifty is still very range bound. So this is not a market where you have to look only at the Nifty companies. That's going to be a tough one really to crack for some time. But talking about the large companies, Mahindra & Mahindra is set to announce its Q4 numbers today. Puneet is joining in to tell us what to expect.
Thank you for that. It's an important result today because our 22% revenue growth, while very positive, it's expected to have a margin impact on the downside this time. So it's a 15% EBITDA growth. Overall margins will be down by almost 80 basis points at 14.1%, but the profits will be higher by over 40%, led by operating leverage, also better utilization as well. But the margin impact could be something to watch in this quarter. Now, revenue has grown strongly because of volumes, and we already know the numbers for that. A 23% growth seen in the passenger vehicle or the car space. The tractors have grown even higher at 36%. They also launched the 7XO model this quarter, which has been a bumper sales growth for the company. So these are all the positives as well. But you have to watch out for the margin impact. That's one of the key ones. And also commentary on what quarter one could look like, because quarter four had impact for at least a couple of weeks, 3 weeks. But a larger impact is seen in quarter one based on what we've seen on the geopolitical crisis. Also on FY27, the growth commentary will be very important, and what the estimate is, because SIAM expects 5 to 7% growth. Maruti has said 10%. So a 15% growth number is what the street is expecting at this point of time for FY27. But do note that H2 of FY26 had the GST-led growth. So it will be a difficult year in terms of showing that growth that was replicated in FY26, but a crucial commentary as well as numbers for M&M this time around.
Also going to be important, frankly, is how they look at the outlook and the impact of the West Asia crisis coming in. All of those will be crucial to look at. Let's talk about 0.5% down right now. Marico also in focus, and this is something our in-house analysts are looking at very closely. They expected to report a steady Q4 with double-digit growth across key metrics. Mahima joining in to tell us what to expect.
Right, so Tamanna, for Marico, the growth in terms of top line is expected to be around 22%. The management also in the Q4 business update did say that it's going to be in low 20s. Overall, EBITDA might see an uptick of around 16%. Margins might take a soft hit, considering that the copra prices largely have remained range bound. But overall, in terms of crude prices going up, it might see some impact. Net profit might see an increase of around 14%. In terms of business update, just to give a recap of that to our viewers, the management has said that they're seeing double-digit operating profit growth this quarter. India business has sustained high single-digit volume growth. The number, of course, will be an important one to watch out for. Stable demand has been witnessed across categories for them. They're confident of healthy volume-led revenue growth in FY27 as well, and overall Parachute has seen low single-digit volume growth, and Sephora Oil has seen high single-digit revenue growth. I think key things to watch out for here will be in terms of commentary on the West Asia conflict and price hikes following that in raw material inflationary pressure in Q1 and Q2 going forward. In terms of volume growth, what is that going to look like going forward, and commentary on urban demand coming in is something that I'll be watching out for. So this is the overall view of what you can expect from Marico earnings.
Okay, well, we'll keep our eye out for this as well. Earnings galore, and Q4 hasn't turned out to be that bad, but could the real problem come in quarter one? The rupee is showing that there is a macro issue at hand too. Crude prices elevated. Vinay Jaising, CIO and Head of Equity Advisory at ASK Private Wealth, joins in right now on the show, and he's sent us some very good talking points as well. But Vinay, good morning. Neeraj here can't not start off by talking about the macro concerns at hand, right? Before the overnight events happened between UAE and Iran, the CEA had already warned of the possibility of the CAD doubling, having issues about the fiscal deficit meeting, and the rupee showing those issues. Is it therefore a risk of till the crude cool off happens, or do you think about it differently?
No, I think you've nailed it. It has to be a risk off till the crude comes down to sub 90 levels. If you look at the crude chart, 113, 114 now, going all the way down, backwardation to about 75, 80 in the next 3 years. This can change very quickly. The problem out here is India, like most of Asian countries, are net short crude, and hence our energy bill keeps on going up. In India, the equation is pretty simple. We net get about 5 million barrels per day of oil. So if oil prices are up to $113 as against an average of 70, add another $6-7 to freight. So you're actually seeing a $50 hike in crude oil compared to what you consumed last year, same time, 50 times 5. $250 million is a daily outflow purely on oil. Add another $30-40 million coming in from gas, because gas prices also have hiked by almost 70 to 80%. Multiply the two. Last month itself, our bet is the bill for energy went up by as much as $8 billion. So your outflows going up by $8 billion a month. 12 times that, you're losing as much as 80 to 100 billion dollars in a year. So the CAD can be as much as 2% negative to as much as 3% negative, depending on how long oil prices and gas prices are maintained. The net impact of that, and going to your second part, is the rupee dollar. Today, the rupee has been at its highest, weakest level at 95.3 levels. The RER suggests, it's oversold at about 93. But the fact of this is, this entire circular impact puts a lot of pressure on the economy, may not be on the earnings cycle of the company in the shorter term, but the economy, certainly the fiscal deficit, the current account deficit, the balance of payment, all are being questioned. And you will see analysts cut down the GDP estimates a bit if the war keeps on being maintained.
Vinay, very good morning. Tamanna here. I was just going through what you sent us for this conversation today, and I think what really stands out is India's stark underperformance versus other emerging markets, just because, in large part, that there is no AI trade. Do you think even if the war ends in 2 or 3 weeks, as US President Trump has now said in his latest statement, crude comes back and prices come down dramatically, that one part is still going to continue to hurt India's perspective from an FII lens?
So absolutely. If you look at just on a macro basis, whether there are big AI plays as indices, you look at Korea, you look at Taiwan, because of TSMC, because of Samsung, and those countries are direct plays. If you want to play an ETF, it's much easier for you to play if you're a global investor. Having said that, in India, you do not have as much AI plays in the indices. But what will happen is, as FIs start looking into the country, as the dollar, I think, just stops, stabilizes for a couple of weeks and crude goes below 90 for 4 to 5 days, it is high time, FIs would come into the country, because the FI ownership, at under 16% is virtually at a 15-year low. They would look at India. Though India is a non-AI play, in total perspective, what you do get is there are a lot of capital good companies in the country which provide generators, which provide hot boxes, or I would put it as, ancillaries or picks and shovels for the entire world. You have telecom companies in the country which are tying up with the NVIDIAs or the Googles of the world. So you will see selective AI-based plays coming up in the country, which would gain. And I think FIs, it's just as earnings visibility comes back that, yes, we are not seeing much downgrades, we are seeing upgrades, you would start seeing FIs come into the country. The question is when, and I think the answer to that is rupee stability, crude oil prices going down, all on the back of, the war being behind you.
Vinay, okay, so you've described the situation very well. Alex here, morning. I want to ask you from the perspective of an Indian investor that largely invests in India, and assume that this investor has listened to a large number of money managers and is almost completely deployed. His situation or her situation looks significantly better at the start of May than it did at the start of April, because you've had a broad-based bounce back. But now you're saying that there is a risk-off sentiment that you have to account for till crude cools off. How do you suggest that they action this? Because they've deployed, they've benefited from staying deployed because you've had a bounce back. Do they restructure, take money off the table selectively? Where do they hide?
So absolutely. If you look at just on a macro basis, whether there are big AI plays Right. I think it's a very good question, Alex. Thanks for that. Last month, Indian equity, which came into the DIS, was a high $15.5 billion. The number now is a third of that. So you've seen them get some profit, but that's the incremental customer. Also, last month was good for the market, small more than mid, more than large, in that order. You will have stocks in your portfolio which would have gone way above their 5-year averages, which have moved up by as much as 50-60% last month. It may be a wise idea to look at them if valuations are not going your way, to do some profit booking and keep some amount of that as cash on hand, or look at those defensive bets which are also dollar bets. Remember, the entire supply chain problem can come up if the war maintains for the next 3 months. So they got to work on understanding, is there a supply chain issue in companies which they are buying? If the answer is yes, they will want to shave off some money of it, keep some cash on hand, and then get back maybe into the same stocks in the months to come. Domestic story is doing relatively well. The GST numbers have been coming more or less in the right place, though our direct taxes were a little lower in the last month. The forex reserves are healthy. So if you add these two, I think India, if you have to look at a 2-year forward perspective, with FIs literally even this month having taken out $6.5 billion out of the country, are bound to come in, and they would start getting into those names which may not be in the indices, but which are giving you growth, assuming a crude oil price regime of $85-90. And that's what even the retail customer has to do. Look at those names which are resilient on earnings, considering an $85-90 oil price. Those names where you're depending a lot more on domestics, it may be pharmaceuticals, it may be the private banks, those sectors which are less hurt by the war is where you would want to, at least in the shorter term, stick around. The capex story in India looks robust, especially those which are exporting to the rest of the world. Focus on those names a lot more, Alex.
Vinay, I wonder if energy becomes a focal central point of a portfolio, considering it becomes a multi-year theme now. If you want to do data centers, if you want to do AI, if you want to do everything else, including basic GDP productivity, India is an energy deficit country. The plans are robust. Everybody's talking about that too. Is that a good space, or is it currently overvalued? And I mean both green energy as well as conventional energy.
Right. So I'm taking cue from the last part of the statement. Green energy is a lot more interesting to focus on, because remember, that's where China has an edge over US when it comes to the pricing of what they give to the data centers. Energy infrastructure players. So when you look at energy, what is the generator which goes into making the energy? What is the hot box you use to keep high temperature products into the picture? What are the airfoils you use? So there's an entire ecosystem which comes below the energy space where we are very excited for. Mind you, here the market is not just India data centers, there are also global data centers which buy from India. And that's where you're seeing the order books of lots of these companies swell up. Same thing, on the data centers, you look at optic fibers, which are doing a lot more better, which were called commodities earlier. The demand is increasing substantially out there. So you have that space of energy ancillary companies which you would focus on and buy. May not be the pure energy companies as well. On the pure energy conventional companies, it could be one-offs where you think valuations your way, and more importantly, they're growing substantially on the top line. I wouldn't look at companies, where the growth is 5 to 10%. I would look at companies which are really aggressively growing, even in the conventional energy part or renewable energy part, where the volume growth, they have a 5-year capex plan for doubling. I would look at those names. That's where I would look at. Valuations, obviously, keep in mind, have to be very attractive as well.
Vinay, can I ask you a follow-up here? Because I know you look at these healthcare chemical space very, very closely. A thought that is emanated in the last 24 to 48 hours, at least I came across it that way, is that with the Chinese yuan appreciating vis-a-vis the Indian rupee, logistic costs having doubled, so on and so forth, Indian chemicals might actually emerge as a dark horse, because that sector has done nothing for the last 5 years. Is that a valid argument, or is there too much that needs to be done for that argument to hold center stage?
So, very interesting question. The Indian currency has been one of the worst currencies, not just versus China, but versus most of the other currencies in the world. There's 11-12% depreciation. That makes India a good hub to get any manufacturing product to be sold to the rest of the world. So that's the starting point, be it in manufacturing or be it in chemicals. Now, when you look at chemicals, you got to break up chemicals into two parts. And, our analyst Sudarshan's really good at it. Specialty chemicals is the part where you need to focus on, where India has an edge. Now, the specialty chemicals may be used in pure agro, or may be used in chemical industries, or may be used in the pharmaceutical industry. I think where India has an edge is where it goes to the pharmaceutical industry. It may be the fluorine chain, maybe the bromine chain, which goes into making additives, or maybe going into electrolysis. So that's the space we are focusing on, to see if we want to buy names, which have corrected, or which are lower than their 5-year averages. But it's a hunting ground. It's not very easy, because the names you like, the market, at least in the last month, is pricing it very, very quickly.
Are you at all worried about, and since you've highlighted all of these macro headwinds, are you worried at all about an asset quality issue for small borrowers? Because that's not something that you saw for a lot of financial companies that have so far reported numbers. But I guess that will pan out in Q1, maybe, that you will perhaps have to look at the special mention accounts for some of these banks, particularly those that are external facing, right?
You're saying it really well, Alex. So think of it this way, right? Jan, Feb, March, the first quarter of the year, had probably 20 to 25 days of the war, and you had inventory, which meant that even if you had 1 month's inventory, the impact of the war would not come in the first quarter, it would come in the second quarter. So that's point one. Apart from obviously those restaurants in the last month, who could probably not sell anything if they worked on non-electrical induction cooking equipment. But apart from that, or even airlines, which would have had a tough time in the last month. So the impact of the war would only be analyzed, or you would get to get numbers in the next 1 to 3 months. The current quarter's numbers will be better than expected, because people would have assumed there's some impact. The pain points really come into those MSMEs where, just assume, you were not getting gas. Oil has now gone back virtually to 100%, just at a higher price for India. So no one's complaining that crude oil is not available in the country, instead of coming in from, let's say, it never came from Iran, but some parts of Middle East, it's coming a lot more from Russia now, a lot more from US now. So oil problem is got sorted, but gas still, in our numbers, our analyst tells us, is about 20-25% below what India needs to consume. So those gas consumers, are they shifting to coal? Are they shifting to oil? Is it that easy? Will their earnings be a question mark? Will that come into the banking picture? It may not impact the economy, but you'll have many one-off cases, and you would have to look at those MSMEs, and in the same way, those banks which have exposure to those MSMEs, and partly avoid it. I think the good way to look at it is, if the war to get over in a week or two, as you discussed in the start, you may just see a tepid this quarter, which is the first fiscal quarter of F27, and things will get a lot more better in the months to come. Or else you would start seeing the questions you're making, and you may start seeing earnings downgrade, but more importantly, question marks on the quality of the MSME's receivables.
That you've put it really well, Vinay. That is the suspense, right? Can companies hold out long enough, or will the West Asia crisis resolve itself in time? So it's a game of survival really right now. Thank you so much, Vinay Jaisingh, for joining us. Always a pleasure to have you on and speak with us. But we're also looking closely at what companies are reporting, and L&T is set to announce its Q4 numbers. Varsha joining in with what the street is penciling in.
Well, the revenue growth will be supported by strong execution across their core segments. Number one, their P&M business will drive steady growth despite global uncertainties. Margin is expected to be flat due to project mix change in the project mix and of course the cost pressures. Well, order inflows remains healthy, but high base may impact growth, and strong order for backlog continues to provide revenue visibility for the company. In case of expectations, revenue may rise 9%, EBITDA may rise almost 7.5%, margins are expected to be flat at 10.9% versus 11% last year, net profit may rise almost 7%. Talking about the segmental trends though, domestic execution remains key growth driver. International business may be impacted by global uncertainties and margins slightly impacted due to mix of projects. Lastly, the key monitorables when it comes to this counter: margin trajectory due to execution mix changes, order inflow growth versus elevated base, impact of Middle East geopolitical developments, and management commentary on order pipeline and margins, some of the key monitorables which investors should watch out.
Okay, thank you for that, Varsha. So much to watch out for, and hopefully something comes in to perk up the markets, because right now we're closing with the Nifty below the 24,000 mark. That's how we're wrapping up India market open this morning. Not really holding on to any kind of gains, and the weakness persists. There's some spots of green, but nothing much more than that, and I think that's going to continue. A weak rupee and a Brent at 112, 111 is something that is going to continuously hurt.
Yeah, unfortunately, the advanced decline is also worsened, so the broader market is participating in that downtick too. Not the best of starts.
It isn't, but there's a lot that you can ask in the show that comes up next, and that is Ask Profit. In the meanwhile, from Tamanna, Neeraj, myself, and the team that put this show together, thank you so much for watching. Stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use.
Hello and welcome to NDTV Profit. I am Mahima Vachajani and with me is Puneet Zaveri. And before we start taking all your stock related questions on this edition of Ask Profit, let's take a quick look as to how the markets are doing. With regards to where the benchmarks go, the Nifty 50 is trading by about 0.7% lower. Below the 24,000 levels is what we're seeing. A downtick of around 163 points is what we've seen since yesterday's close. The Bank Nifty is also almost moving in tandem with the Nifty 50. It's down by about 0.8%, hovering around the 54,400 levels. Let's try to pull up the Nifty 50 heat map and see as to what that chart is looking like, because at the start of the trade there was hardly anything on the green, but counters that are putting pressure. L&T ahead of earnings is down by about 1.6%. ICICI Bank is down 1.5%. Geo Financial also seeing a downtick of around 1.4%. ONGC, Max Health, Interglobe Aviation are some of the counters which are under pressure. But on the flip side, I think it's only HDFC Life which is holding up by about 1.5%, followed by a slight uptick in TCS of about 0.6%. So nothing much in terms of where the green side of the chart goes. Let's try to pull up the sectoral heat map and see as to what sectors are doing at this hour. You have defense leading that entire pack, up 0.8%, followed by IT. Although, you know, the uptick in IT has slightly slowed down since the start of the trade, but still trading around 0.3% higher. Nifty Realty seeing real profit booking today, down 1.6%, followed by Nifty Oil and Gas, which is also seeing profit booking today. Both of these sectors have been one of the top performing sectors in the last week, but today seeing profit booking, followed by Nifty Bank, which is down by about 0.8%. Let's also quickly pull up the advanced decline ratio, because that will paint a picture as to how the broader end of spectrum is looking like. The broad end of spectrum is also under pressure, but not as much as where the benchmarks go. The advanced decline ratio right now is around 1 to 1.5. That's the ratio, slightly in the favor of the bears, and that has interchanged at least thrice in the last 1 hour is what we're seeing since the start. In fact, 4 times since the start of the trade. But in terms of the mid cap 150, it's down by about 0.2 odd percent, and the small cap 250 is down by about 0.1 odd percent. So that's with regards to where the broad end of spectrum goes. But let me also get in our guest for the day to get all your stock related queries answered. We are joined by Tapan Doshi, research analyst at catapan.in, and Swati Hotkar, AVP technical research at Nirmal Bang, joining us now. Welcome to both of you and a very good morning to the both of you. I'll start by taking the first question, which is from Roshni, who's writing us from Bengaluru, asking about Coforge. She's got 300 odd shares at the levels of 1220, sitting on a loss of around 19k. Wants to know what should she do with the stock, sell, hold or average. Swati, a very good morning to you. I'll come to you on this one. Your view on Coforge?
Good morning, Mahima, and to all the panelists. The view is a little bit cautious at the current levels because the result session is ahead of the Coforge. It's trading below the 20 days moving average, which comes to nearby 1200 level. So the technical setup is a little bit cautious, but downside it has a good support at around 1135. The results comes out in a weak way, then I believe that we were likely to witness more selling pressures once the stock manages to give the breakdown of 1135. A more selling pressure is likely to be intensified, which will take a stock towards to 1100 to 1070 levels on the downside. So I would suggest, as of now, you can hold your long position, but please place a strict stop loss of 1135 on the low side. Any positive move towards to 1200 levels, one can exit the long positions.
Okay, all right. The next one that we have is from Bharat, who's writing us from Vijayawada, asking about Fortis Health. The buying price is 957. Wants to know whether to hold or sell this counter. He's not mentioned the time period, but I'm assuming that it will be from a slightly long-term perspective. So, Tapan, I'll come to you. Your view on Fortis Health?
Yeah, I'm quite positive. If you see last few quarters, this counter is giving a good result. Even if you see year-on-year growth also is good. And from here also, I think they will be able to maintain the margins. Even average revenue per bed is going to be double digit. And looking at the way the healthcare sector is growing, I think this is the hospital which is doing well, and their specialty department also doing well. So yes, please hold this stock for the long term. I think it will give you a good return.
Okay, all right. The next one that we have is on Canara Bank. This is from Arvind Manjeshwar. He's bought 2,000 shares at the levels of 161. He's saying as to what is the window for this counter to bounce back, considering 6 to 8 months. Swati, your view on the charts for Canara Bank?
My long-term view is definitely positive, but on a short period of time, no wonder the client is bought at elevated levels downside. It has a very crucial cluster supports trading nearby 130 levels. So as long as it manages those levels on the closing basis, a bounce back rally can be expected back towards to 150 at least. 161 is the levels can be reached out, but it will take a time. So if you're looking for a long-term horizon, definitely you can hold on this particular counter for immediate target of 150, then 160 levels can be seen.
Okay, the next one that we have is on MRPL. So Sheila from Benelli is holding at the levels of 184. She's got 5,155 odd shares. Wants to know as to what should be the short-term targets on this one. Swati, this counter is currently sitting at that 156 rupees. So buying price is 184. Do you think it can bounce back to those levels and maybe then give some returns to her possible on the cards from a short-term perspective?
The technical structure is as of now looking bearish as such. I believe that the downfall is likely to be continued in the near-term future, which will take a stock towards to 150 to 150 levels because it's approaching the oversold zones. So it will take some more time and then the stock will find out some consolidation phase and upward momentum rally can be seen. But definitely it has the potential to reach up to at least back towards to 180 to 195 levels. I will suggest you can hold on the long positions. If you're getting any dips between 150 those levels, you can average it out so that the buying price will come down, and any momentum towards to 180 to 190 levels, you can definitely book your profits.
Got that view, Swati. But the next question coming in now, it's on Vedanta. Now, a viewer is holding shares at 302 and he's holding 1,000 shares. So he's bought it, of course, post the demerger, I guess. And this is Krish from Chandigarh asking, a view on the stock now, and not mentioned if it's a long-term or a short-term one. But Swati, let me come, Tapan, let me come to you because, once the demerged entity happens, this will become essentially a holding company. So would you rather just, take this as a short-term kind of like an outlook because you have already, the demerger is already done. So he's bought it essentially post that. What would be your recommendation now?
I see that all depends on how the zinc prices move from here and silver prices, and I think major component of the profitability coming for that for Vedanta, at least holding company. And again, being the holding company, it will be having a discount also. That is also holding company, so one has to keep in mind. I think at 300 it's completely fully priced. I don't see a near-term uptick here. One has to see next quarter, then take a decision. Otherwise, I think Vedanta aluminum will be in future, which will be getting listed. That will be a better if we want to get it. Got it. Well, the next question coming in now, and this is from Satyan, and he's holding on to Godrej Consumer for the last 8 months at 1110. So 1110 is what he holds this stock at, Swati, and has been around a similar level as of now as well. His question being, should he wait for a couple of months, realize the target of 1300, or probably look at some other names in the FMCG space, maybe like Imami, Dabur, or something like Marico as well, which has been up and about. Results come today as well for that counter. What would be your opinion?
Looking towards the monthly charts, this stock literally looks very positive on the technical setups. Definitely, the buying price is nearby to CMP, not much at a higher level. So definitely, you can hold on. The stock has a potential to reach back towards to 1250 to 1300 levels because the stock is forming the W-shaped patterns on the monthly charts. So slowly and steadily, we will get a momentum on a positive side. You can hold on this particular counter. Downside, if you want to keep any kind of a stop loss, 1050 is acting as a very crucial support level. So as long as you hold those levels, the view will remain a positive for a target of 1250.
Got that view, Swati. But the next one coming in on HBL Engineering, it's another counter that's done well for its investors still that September 2024 mark, and has been in an interesting position yet again, trading at 800. But let's look at the 1 year chart for this counter and a longer term one as well if we can. So one of the COVID beneficiaries in that sense, stocks up 58% since that level also, and you're seeing that chart June 25 is that level where it was the highest, around November also climbed back to those levels. But largely his question being, that Chanukya from Hyderabad actually has been holding on to this counter, and he was lucky enough to buy it at 100, or maybe smart enough to buy it at 100. Now his question being, he's a long-term investor, 3 to 4 year plan is what he's asking. Tapan, should he book out some profits now, given the sharp up move of almost 58%? He's up almost 8x from his investment. What would you recommend?
Let's see, at this price, I think most of them is already discounted, whatever good thing. And again, from here, we have to see how the quarterly results will be. So of course, 3-4 years, instead of 3-4 years, just see quarter to quarter. He can book up 25% of his profit already. And I think from here, the demand will be strong. The management is quite optimistic. So he can hold on next 75%, and 25% he can allocate to other sector, which are like defense or something like that way, or power sector.
Got that view, Tapan. So that's on HBL Engineering. The next question coming in now, it's on Hero MotoCorp. Now, Anjali actually from Bangalore is tracking the counter well. She knows that the results are out today and asking if she should buy 50 shares. Now, she's not mentioned from the long-term or a short-term view, but Tapan, generally from Q4 this time around, we're looking at margin impact, if any, for all automakers. We also have that expectation from Mahindra as well to margins to fall. But what would you recommend on Hero? Is it a preferred play, or would you like something else from this space?
If you ask me, as per the valuation, I think Hero is well placed. It's not too expensive compared to its counterparts. And this last time, whatever numbers are there, even the electric vehicle sales are good. So my take is, I know the result is coming and all that, but I think if she can stay for more 6 on 1 year, I think because of the value play, I think this may play out a good way from here also. So I think it's a hold from my side.
Okay, all right. The next one that we have is on Union Bank. Bharat from Panchkula is holding 3,000 odd shares at the levels of 185. Wants a short-term view on this particular counter. Swati, on the charts, Union Bank, how is it looking?
The short-term view is a little bit cautious. We might witness some sort of a selling pressure, which will take the stock back towards to 157 to 156 levels, because it is a gap support which has been witnessed in the month of the January, 5th of Jan 2026. Till that time, we are likely to witness some profit bookings, and there onwards, if the stock manages to take the support of 155, 156 level, then some turnaround will be witnessed into this particular stock, and which will take a back towards to 180 to 185 levels. So wait for some more time. Short term, this profit booking session is likely to be seen. So I will suggest to hold on this particular counter as long as it sustains the 155 levels on the dark side.
Got that view. But Jatin from Chandigarh is asking us the next question. His question being on Amar Raja. He's holding 120 shares at 1071. And he can hold for the next 1 year, and asking what should he do with this counter now. Tapan, we've seen that up move on Amar Raja. Let's look at the 1 month chart, and you'll know what I'm talking about, where the expectation of a fresh capex was boosting the street, and there you go, the 20% up move, just a vertical jump that we've seen in the stock, and that buying from low of almost 730 odd levels. What would you recommend, Tapan? Should he wait for maybe getting some more clarity in Q4, because the expectation wasn't too great before this news came through?
Yeah, I do agree, Puneet. If you see the last moment is also good, and if you valuation wise also, it's not too expensive. Companies totally debt free, and they are having a healthy dividend payout also. And I think overall their working capital is also getting reduced, which is helping to maintain their margins also. Of course, I can see the revenue is not going up so fast, but the way they have the orders and all that, I think in future looks good. My take is that at this level, he can hold on, wait for 1 or 2 quarter more. I think things will be better from here.
All right. Okay. So that's the view coming in on Amara Raja. The next one that we have we taken Bharti Airtel? Okay. The next one is on Bharti Airtel. Our viewer is holding 30 shares, bought at the levels of 1850, and looking for an outlook for the next 12 months. Can I expect a 20% return before March 27 is what he or she is asking. We don't have the name, but Swati, I'll come to you on this one. From a 12 months chart perspective, do you think that's achievable?
See, Mahima, as of now, we have already seen 2025 was a good year for this particular counter, made a high at around 21s, beyond those levels, 2100s. And as of now, we are attracting some sort of a profit bookings. Now, the stock is under the consolidation phase. If you look towards the last 3 months data, it got stuck within the range of 1750 to 1800 to 1900. Those levels are the consolidation phase. If the stock gives the breakout of a lower lines at 1800 levels, then we are likely to witness some sort of a profit booking, which will take counter towards to 1650, 1600. Those are the levels I'm looking forward. But if it manages to give the breakout of 1900 levels on the high side, then we will see some turnaround or the major buying can be witnessed in this particular counter with the good volumes, and the target will open further to 2000, 2050 levels on the high sides. So as of now, it is a consolidation phase. We are not witnessing a major as such buying at the current momentum. If you're looking for a larger, for a long horizon, at least minimum 1 year to 2 years, definitely you can hold on this particular counter. 2050, 2100s are the likely target in the 1 or 1 and 2 years.
Good. Well, thanks so much for the detailed view, Swati. But before viewers, we go across and take the next question, time to dive into the F&O market setup today. And it's very interesting what we're seeing on the Sensex. Let's pull that up, because you're seeing, of course, moves across a couple of players, but largely what we've seen in a red screen across the board. So you're only seeing some IT names, Ultratech, Kotak Mahindra Bank, as well as Titan that are doing well. L&T before results is down. ICICI Bank also bearing the brunt today, down 1.5%. And you have Maruti Suzuki also down about a percentage as of now. But in terms of stock-specific action, you're seeing longs being built up on Vodafone Idea as well as Aditya Birla Capital. Now, Vodafone Idea, there was that relief that came in, 64,000 crore AGR bill. So, the second consecutive day, we're seeing that up move continue. But shorts yet again being built on Voltas. Now, results, of course, expected soon, but it's going to be a tough quarter for the company, is what the expectation is. We've seen some results from Havels also. Godrej Properties also down 4% today. Results were quite decent for the company yesterday, but Street's not having it one bit today. ONGC and Eternal seeing long being unwinded on these couple of counters, and shorts being covered actually on Keynes Tech, very interestingly, as well as on CAM. Stock up 6% today as well. But that's some of the key picture now. Coming in on a bunch of stocks. Let me go across and take another query now, and this one's on MRF. Now, our viewer Vishal from Chennai is holding on to 8 shares that he's bought, but at 150,000 rupees. So he's currently sitting on loss of almost 1.7 lakh rupees, and asking if he should continue to hold on or sell this counter. Tapan, what would be your recommendation? We saw that pressure on CEAT stock as well. That Q4 was very strong, but just because of the commentary, stock took a beating. Would you expect a similar picture for MRF, and do you think that there could be a bottom now to buy, look at this opportunity?
See, if you see the oil prices, crude oil prices are on higher side, and because of tire, I think their main raw materials is oil only. So the raw material pressure will be there for till Q1 also, and we don't know when this war is going to end. No, so that is a problem. If it remains above $100, it will be a problem for all these companies. But if you see, the stocks has already fallen a lot from the top, and I think from here margin will be in a pressure. But if you can hold for 2 quarters, at least 2 quarters more, I think then the relief will come. Otherwise, fundamentally, currently the stock looks weak.
We actually were discussing about the tire space only, Tapan. So let me just take this quick question from Sandhya as well. She's holding shares of CEAT at 3458 and asking if she should buy more now or wait for it to average a little bit. So stock's down from her buying level. Would you recommend a similar view that you said on MRF to applicable on CEAT as well?
Don't rush on buying all these stocks. Now we have to wait for the clarity once the war is going to end, because the more the delay will be, the more the pricing pressure, and then it may prolong to Q1, Q2 also. So my take is wait, don't rush. I think wait for 2 weeks, 3 weeks, then see if these things are getting settled for war front. I think then they can go and buy.
All right. Okay. So that's, of course, the view coming in on CEAT as well as the entire tire space. The next one that we have, I think we've got a caller. Sanjay is calling us from Vadodara. Sanjay, a very good morning to you. What's your query about? Hi, Sanjay. Can you hear me? Okay, I think we seem to have lost the caller, but we do have his query. It's on Sunflag Iron and Steel Company. Now, I don't think we've ever gotten a query with regards to this counter, but he's identified the stock very well. Entered at the right levels. He's entered at the levels of 78 rupees and 2,000 quantities what he's bought, and the stock is currently trading at 372 right now. He's sitting on profits of over 5.8 lakh rupees. Swati, considering the charts, do you think he can still continue to hold this one, or should he book profits?
First of all, Mahima, I would like to congratulate Mr. Sanjay that he bought it at very attractive levels and kept the patience and hold this particular positions for a longer term horizon. Definitely, the counter is sitting at all-time high levels. In the last two trading sessions, we have seen a very strong momentum rally. This week, within a span of two trading sessions, the stock has given almost 27% of gains. The stock is approaching the overbought zone. I will suggest book at least partial profit at the current momentums, and definitely you can hold on the another partial by keeping a stop loss of 300 rupees levels on the downside. And if the stock manages to continue such kind of a rally, upside 440, 420 levels can be seen very soon. So a partial profit should be booked at the current market price.
Okay, all right. So that's the view coming in on Sunflag Iron. The next one that we have is from Murli, who's writing us from Bengaluru, asking about Muthoot Finance. He's bought at the level of 3534 per share. Wants to know if he can add more of this counter from a 12 months point of view, considering the results also yesterday. Tapan, your view on Muthoot Finance?
Yeah, I'm quite positive on Muthoot Finance, the way they have handled their loan book and able to control NPA. Plus, gold loan is going to grow from here. And I know they have a good collateral also, so they don't have to worry about it regarding NPA. So from here also, I think this company will do well. Of course, at this level, he can buy a little bit, and in a SIP manner, he can buy. But for long term, I'm positive on Muthoot Finance. He can go and buy.
All right, well, the next question coming in now, it's on Coforge, and our viewer Lalita from Bangalore, who's a regular viewer, is holding shares at almost 1,325, and she's holding 16 shares. So Swati currently sitting on a loss, but you also have the results of the company today. Do you generally trade it on those days, Swati, or do you wait for the results and then probably just take a view on the charts? So what would you recommend Lalita to do?
I would suggest to hold on this particular counter, but definitely on the result trading session, we get a volatile movements in this particular counter. The earlier also I mentioned out that 1135 is acting as a crucial support level. So as long as it sustains above those levels, a pullback rally can be expected towards to 1300 to 1250 levels. So hold your long positions by keeping a strict stop loss of 1135. If it's break those levels, then more selling pressure is likely to be seen, which will take a stock towards 2060-65 levels. So place the stop loss and hold your long position. Any up move rally comes if we witness towards 1300, you should book your profits.
Okay, all right. We've got Ravi calling us from Hyderabad. Ravi, a very good morning to you. Go ahead, ask your question.
Yeah, very good morning. Yeah, I have query on KSH International.
Okay.
I'm currently holding 78 shares bought at the time of IPO at the price of 384.
Okay.
So since 5 consecutive sessions, the stock is falling down. So shall I hold, shall I sell, or shall I hold?
What is the time period that you're looking at, Ravi?
Next 6 months I can hold.
Next 6 months. Okay, then I take this up with Swati. Swati, it's seen a good run up, right? Since I think start of Feb, it's mid of Feb, it's seen a good run up. But I think now the stock is seeing some profit booking. Do you think he can continue to hold this for the next 6 months, or should he book profits?
Well, in the last quarter itself, we can say the stock has given almost 40% return, and no wonder on the technical front, it was trading at around all-time high levels. And as of now, if you look towards the technical charts, the stock is suggesting a negative divergence from the oversold zone. So the profit booking cannot be witnessed, cannot be denied after such kind of a rally from almost 380 to 700 levels. So at the current momentum, I will suggest to book your partial profits at the current market price 614.15 levels. Another half profit you can hold on by keeping a strict stop loss of 540 rupees on a downside. And if the stock manages to give the breakout of 660 levels, which is acting as a crucial resistance level, then up move rally can be resumed back towards, which will take a counter towards to new high at least about to 740 to 800 levels. So at CMT, book partial profits.
Got that view, Swati. But Swati, Tapan, as well as our viewers, it's time now for the rapid fire round in this edition of Fast Profit. You both know the drill. The first question coming in now on BL. Our viewers bought shares, 30 shares at 436. Tapan, should he continue to hold right now, wait for the guidance for the next year?
Hold and buy on dips.
Sectoral Technologies is the next one. Our viewer has bought 5 shares at the levels of 4,500. From a 1-year point of view, Swati, on the charts, continue to hold?
I will suggest to hold on this particular counter. Upside rally can be resumed towards 300 to 310.
Ease My Trip, a very, very volatile counter, and our viewers holding shares at almost 12 rupees. Swati is holding on to 500 shares and has been buying every dip. Should he just exit at this point, and what's your opinion on the stock?
Not to average it out at the current market price, but you can hold on by keeping a strict stop loss of 7 rupees. Any positive move towards to 10 to 12 levels, I should suggest to exit the longs.
Devyani International is currently going down. Is this the right time to make an entry, Tapan?
No.
MCX bought at 2,470 by Ronak. He's asking Tapan if she should continue to hold for at least 3 to 5 more years. What would be your opinion?
Yes, you can hold it and buy dips also.
Maharashtra Scooters, 10 share bought at the levels of 7,599. Yash wants to know as to what should he do next. Swati, on the charts?
I will suggest to book the partial profits at the current market price. The remaining partial you can hold on by keeping a strict stop loss of 5,000.
Raja is holding on to SBI, bought at 830, and Tapan, his question being if he can continue to hold on for the long term.
Yeah, please hold it.
The next one is on Sterlite Technologies. Aditya from Hyderabad is holding from a long-term perspective, is looking at it from a long-term perspective. Should he go ahead and buy right now, Tapan?
Yeah, it's a good stock, but wait for the correction.
Radhakrishnan from Kochi is asking if PNB is a good pick for the long term. Tapan, would it be a preferred one in the PSU banking space?
I prefer SBI rather than PNB.
Okay. The next one that we have is on Kotak Mahindra Bank. Vijay from Chennai wants to know the short-term target on this one. Swati, on the charts?
Kotak Bank looks very positive at the current market price. Short-term target is 400 to 420.
The next question on Finolex Cable. Swati, our viewer Sabita has bought at 815 and holding 35 shares, asking for a view on the stock now.
At the current levels, my view is positive. 1,080 to 1,100 levels can be seen.
Karnataka Bank, 800 shares bought at the levels of 172. Accumulate more, book profits. What should be the next course of action, Tapan?
Yeah, hold currently. Don't add.
Prashant from Bangalore holds on to CDSL, 152 shares at 1314, Swati, asking a slightly more long-term view on the charts. What's your opinion?
See, as of now, we are witnessing profit bookings or say the selling pressure is likely to be seen. The stock is likely to find out a good support nearby 1150 to the 1100 levels. Then we can see some turnaround, and for long-term horizon, the stock targets it we are looking forward to is 1550 to 1600 levels.
Okay, can I buy Titan today? Kunal from Chennai is asking this. Swati, on the charts?
At the current moment, no, just wait for some more time because it's facing a very cluster resistance at around 4400, 4420 levels. As long as it doesn't give the breakout of those levels, we should wait and watch this particular stock.
Okay.
Our viewer Lakka Raju is asking if between AB Capital, Bajaj Finance and Aditya Birla Money, what's a preferred pick, Tapan?
I think AB Capital is a much more diversified NBFC. That's a safe bet comparatively.
Indian Overseas Bank, 20,000 shares bought at the levels of 38 rupees. What's the target price for the next 12 months? Swati, on the charts?
For next 12 months, 42 to 44 levels can be. Definitely you can hold on.
Mr. Rao wants to know if it's a good time to enter City Union Bank for the long term. Tapan, good results. There's been a management change now. What would be your opinion?
Yeah, we can. Slowly and gradually we can add it.
Okay, what should be the entry price for Geo Finance? Swati, your view?
At the current momentum also, you can take at least 30-40% of buying at the CMP or any dips towards to 225 you can add on. We are looking for a target of 300 to 320 levels.
Okay, alright. So that brings us to the end of this first round of rapid fire. But viewers, we'll be taking a lot more of your stock related questions on this other side of the break. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either give us a WhatsApp question on the number that's flashing on your screen up there, or even call us on the number that's flashing up there. But Prashant, who's done the same, is calling us from Bengaluru. Prashant, a very good morning to you. What's your query about?
Good morning, Mahima. So my question is on Nippon India AMC and Aditya Birla AMC. The question is on Swati. What would be the good entry level that she would recommend based on the charts? I see both are almost trading at the all-time high. So would it be you recommend one, and which would be the better one, and what time? What is the entry price among these two stocks?
Okay, all right. So Ati, he's asking about Nippon India AMC and Aditya Birla Sun Life AMC. First of all, which of these, according to you, is a more attractive one, and what should be the entry price?
Yeah, Aditya Birla Sun Life really looks attractive on the charts because the counter is trading in the high tops, high bottom formations, upward rising channel. So the counter has given a very strong breakout of 900 levels. But since it is currently trading at a nearby all-time high level, I will suggest to wait for some more time. If you're getting any dips towards to 950 to between the 850 levels, those levels are very attractive level. Risk reward ratio will be favorable. And for the longer term horizon, definitely I'm looking for a target of 1200 to 1300. So any dips towards to 950 to 850 levels, you can start accumulating this particular stock.
Okay, all right. So that's the view coming in on these AMCs. The next one that we have is on Lemon Tree. This is this is not on Lemon Tree. This is coming in from Sriram Raghuraman from Chennai, who's asking about Idea Forge. He's bought at an average price of 480. 25 shares is what he's holding. He wants a fundamental view on this particular counter and wants to know whether to add more of this counter or not. But before we do that, we're cutting across let's hear a view coming in from the business tycoon Deepak Parekh talking about his view on oil. Listening to that space.
Impact, it's still an open issue, and we have to wait and see how it impacts, whether we lose jobs or it improves productivity. It enhances productivity for sure.
With the FDI interest in so many financial services companies, what does this mean for the next phase of growth for the BFSI sectors?
No, next phase there'll be more investments by foreign companies. There'll be more investment. Indian groups are getting into financial services. Practically every large Indian group wants to be in the financial services. You see the Tatas, you see the Mahindras, you see the Birlas. They all are in financial services, and more will get into financial services.
Challenges associated with the housing financing sector, especially with the affordable housing, sir?
No, I would like more developers to build affordable homes. What we see is large homes coming up in larger quantities. What the need of the country is smaller 400 to 600 square feet apartments, not only in tier 1 but in tier 2 and tier 3 cities. And somehow we have to encourage developers to do smaller homes, and because it's easier to do larger homes because they're selling. But who will take care of the people who want smaller homes? So we have to incentivize developers to make smaller homes.
You speak about the affordable housing, sir. Means like in metro cities, means like in tier 1 cities, not even a single house is available for.
I know you have to go 30 kilometers out of the city or something like that.
But sir, how do you incentivize developers in the affordable sector?
Thank you, sir.
Thank you, sir.
Thank you, sir. Thanks a lot.
Okay, you heard Deepak Parekh, the former chairman of HDFC Bank, with regards to how the BFSI space is looking like right now. But coming back and circling back to your queries, Sriram Raghuraman, by the way, was asking about Idea Forge Technologies. He's already holding 25 shares at the levels of 480. Wants to know if he can add more from a fundamental point of view to average at the current levels. Tapan, would you recommend that?
Well, the stock has already run up a lot, and you see this was a bumper result this time. But I think we have to see whether next quarter it's a follow-on or not, because from last many quarters this company was not doing good, and there is a lot of lumpiness in the order booking also, and also revenue booking. So my take is just wait. Already stock has gone up a lot, so wait for the correction, then only enter, and also see the next quarter.
Okay, all right. The next one that we have is on Latent View. Ramesh from Bengaluru is holding 10 shares at the levels of 308. He's sitting on a loss of around 173 rupees right now. Wants to know as to what should be the next course of action for him. Swati, on the charts.
If you have a longer term horizon, definitely you can hold on because the counter is already trading at the lower levels. We have seen a very strong sell-off from almost 500 to 250 levels. So at the current level, it will wait for some more time. Positive move can be witnessed if it manages to give the breakout of 300 levels. Any move above those levels will witness some sort of a buying, and which will take the stock towards to 370 to 400 levels. So have some patience, but definitely you can hold on this long.
Okay, all right. The next one, I think Uddeep is calling us from Mumbai. I hope I'm pronouncing your name correctly. A very good morning to you. What's your query about?
Good morning, Mahima. Good morning, Puneet. It has been a while since I called you up. That's why you thought you were pronouncing it wrong, but you are not. I mean, you are pronouncing it right. Okay, my query is on Asoka Buildcon, Mahima.
Okay.
150 shares, 150 a piece. Would like to know long-term views on this sector, on these companies, and what would be the price like if I keep it for a year and a half.
Okay, got your question. I'll take this up with Tapan. Tapan, he's holding since the levels of 150. The stock is currently trading at 134. He's holding around 150 shares. Should he continue to hold from a one-year perspective to see an upside? And if yes, any target price if you can give him?
See, if you see the last 1 year was not so great for this company, it has already fallen a lot from the top. And still their borrowing cost quite high, that is what is, impacting their margins. But I think overall the demand is quite strong and hopefully they'll continue to what they've done in last few years. So I think last year was not so good. Hopefully next 1 or 2 quarters should be good. Currently the valuation looks okay to me completely. So no need to get out from here. Wait for 1 year more. I think things will be better from here.
Okay, the next one that we have is coming in on NTPC Green. Saurabh from Bengaluru is holding 400 shares at the levels of 110. He bought it last year and it's negative since then is what he's saying. He wants to know the target for the next 3 months or, what should be the exit price is what he wants to know. Swati, on the charts for NTPC Green?
In the last 2 months, we are witnessing a pullback rally from this particular stock. The buying price is at the CMP itself. I would suggest to hold on this particular counter downside. It has a very good support of 103, 104 levels, which are the previous swings high. Now they will act as a support levels in the near-term future. It's well placed above the 20-day moving average. So setup is really positive. No wonder since we have seen a very strong pullback rally from 90 to 120 levels. So that's why we're witnessing some profit booking. So setup is positive. Can hold on by keeping a stop loss of 104. A short-term target I'm looking forward to at least 125 to 130 levels. So you can definitely hold on this long.
Okay, all right. The next one that we have is from Siva, who's writing us from Singapore. He's holding 500 shares of Kansai and Nerolac at an average price of 237. He bought it from a medium to long-term view. Wants to know if it's time to accumulate more. Tapan, he's already sitting on loss of over 21,000 rupees. Plus, crude prices going up is certainly not a positive for this one. I mean, it's been, over and above that $100 per barrel. Do you think it's the right time to maybe accumulate more of this one or no?
The already paint industry is struggling a lot, and again their margins are in pressure because of too much of competition. Again, the oil prices are on a higher side. I don't think there will be a uptick now in future. Also, a big uptick from here for whole paint industry. So I'm completely bearish on the paint industry for the long term angle. So my suggestion is to get out from this stock and go to a better sector where the growth is looking. So my term will be exit from here.
Okay, all right. Seemant, I think, is our next caller from Bhopal. Seemant, a very good morning to you. What's your query about?
Yeah, good morning to you as well. My query is on Zaggle. I've been holding this share for almost a year. I have close to about 50 of them at 275. I would, because they have been doing quite well. They have been getting a lot of new customers. But still the stock has not taken the rise that it has to. What would be the midterm view for this share? Should I hold or should I average or should I sell?
Okay, all right. I'll take this up with Swati. Swati, Zaggle, his buying price is 275. Should he continue to hold? What should be the next course of action?
I would suggest to hold on this particular counter because whatever the rally we have seen in 2023 to the mid of initial start of 2025, the stock has retraced already 100%. So it is currently trading at a lower levels of 2023. So no need to book your losses at the CMP. I would suggest to hold on within a period of 6 to 1 year months. Definitely the stock has a potential to reach up to 350 to 370 levels. So you can hold on if you want to average your positions to if we witness some sort of a correction due to the market corrections, 200 levels are the good levels to average it out positions. So at the current levels, you can hold on for a target of 350 to 370 levels.
Okay, all right. The next one that we have is on Colgate Palmolive. Jay from Prayagraj wants to know as to what should he do with this counter, whether to hold, sell at any profits or continue to hold is the question. He's not giving us the quantity or the buying price, but what are the charts looking like, Swati, right now for Colgate?
Remember, my view is very positive on this particular counter because since 2024, we are witnessing a profit bookings in this particular stock. If we look towards 2025 data, the counter is under the strong selling pressure. Trading was under the low top, slow bottom formation. And the interesting part that this month, the counter has given the breakouts of a downward sloping channel. Means it's showing us some positive trend in the near-term future, and the stock has a very strong potential to continue this rally up to 2600 to 2700 levels. So it's an investment call. Definitely one can go for a long position at the CMP as well, and you can hold on at this current market price. Initial target will be at 2600, beyond at 2000 levels can be seen.
Right, so that's the view coming in on Colgate-Palmolive. The next one is on NBCC. Vijay Kishore from Hyderabad has bought 2817 shares at an average price of 103. Add more at the current levels to average out or sell? Swati, it's a short-term view that he wants. So I'll stick with you on the charts for NBCC. Is already sitting on a loss of around 32,000 rupees.
See, my view is a little bit cautious at the CMP. No need to average out positions because it has a very good support at around 90 to 88 levels. Those are the support bands. So as long as it sustains those bands, support bands, it might reach up to 104 to 105 levels. So sell on rise strategy should be implemented at the current market price. Hold for some more time. If you're getting any rise towards 204, try to exit the longs.
Got that view, Swati. But let's go across, take another caller now from Bareilly. And Arvind has a stock query for us. Arvind, very good morning to you. Welcome to the show. What's your query?
गुड मॉर्निंग सर. गुड मॉर्निंग सर. सर मेरा क्वेश्चन है HDB फाइनेंशियल के ऊपर. मेरे पास इसके 730 पे 90 शेयर्स पड़े हुए हैं. पर ये स्टॉक, इसके मैंने रिजल्ट्स देखे थे, अभी रिजल्ट्स आए थे एक हफ्ते पहले करीबन.
हाँ जी.
रिजल्ट्स तो काफी अच्छे हैं पर स्टॉक परफॉर्म नहीं कर रहा है.
करेक्ट.
तो ये टेक्निकल लेवल पे क्या व्यू है आप लोगों का, इस पे मैं जानना चाह रहा था.
देखिए अरविंद जी, आपने जब लिया था तो चार्ट देखे थे, तो मैं आपको स्वाति का व्यू दे सकता हूँ. तो क्या आपने चार्ट देख के लिया था शॉर्ट टर्म के लिए या लॉन्ग टर्म के लिए लिया था रिजल्ट देख के?
नहीं, मैंने तो ये जब लिया था तो जब इसका आईपीओ आया था उसके बाद मैंने लिया था.
करेक्ट. बट लंबे समय के लिए लिया था या थोड़े टाइम के लिए लिया था अरविंद जी?
लंबे समय तो कुछ होता ही नहीं है ना. मतलब ऐसा है कि लंबा समय कुछ होता नहीं. फंड मैनेजर्स को रुपए बनाने, इसलिए लंबा समय है. अब हमें तो अपना जितनी जल्दी रुपए हमारा बन जाए, बैंक को हम पीछे छोड़ते, बस यही है हमारा.
ठीक है. मैं एक्चुअली मैं काम करता हूँ, मैं तपन से व्यू लेता हूँ. बिकॉज तपन, हमने रिजल्ट देखा था Q4 का, काफी स्ट्रॉन्ग था. बट एंड स्टॉक उस लो लेवल से रिकवर भी हुआ है. 580 से स्टॉक रिकवर भी हुआ है. बट अभी क्या राय रहेगी आपकी HDB फाइनेंशियल पे?
देखिए रिजल्ट तो काफी ठीक ठाक ही रहा, और लेकिन एक ही चीज है कि अभी इंटरेस्ट रेट अभी कम होना कम हुए तो आगे जाके नेट इंटरेस्ट मार्जिन में थोड़ा इशू रहेगा इनका. और इनिशियली ये इसलिए गिरा क्योंकि उनके प्राइस टू बुक वैल्यू काफी हाई थी, वैल्यूएशन काफी हाई था. अभी नॉर्मलाइज हुआ है. सो मेरे हिसाब से थोड़ा एक आध क्वार्टर आप होल्ड कीजिए अगर आप थोड़ा लॉन्ग टर्म रख सके तो. मेरे हिसाब से आई थिंक थोड़ा यहाँ रिकवरी आनी चाहिए. अदरवाइज जो ऊपर से नीचे है, आई थिंक काफी हद तक जो ओवर वैल्यूएशन था वो कम हो गया है.
Okay, all right. The next one is on Z Entertainment. Our viewer has bought 550 shares at the levels of 275. Can I hold more? Can I continue to hold for 1 or more years? Is the question that he has. Any view on this, Tapan?
Well, I'm quite negative on Z Entertainment, because this company has not been performing. Again, lot of governance issue, management issue. Again, no clarity where the things are going on. And overall, all media sectors companies are struggling a little bit. So my take is now better to exit from this stock and go to better sector.
Got that view. But the next query now coming in. This one, it's on BEL, and our viewer has been holding 443 share price, of course, holding 1,700 shares. So he is a medium-term investor, and this is Sai, asking what he should do with this counter now. I think we discussed this, Tapan, but just from Q4, I think the guidance, the revenue numbers were also quite strong, right, in terms of the update. What's your view? Tapan, that's for you. Okay, we seem to have some connection issue with Tapan, but Swati, on the charts, is there currently a buying opportunity right now, given the up move, or what would you recommend?
No, I would suggest not to average it out to positions. The chart is not showing any major positive setups as such. We might witness some sort of a selling pressure, which will take a counter towards back to 410 to 400 levels. Try to exit out whenever you get a chance, and if the stock manages to get the loans back rally towards 450 to 460 levels, I would suggest to exit the longs on every rise.
Okay, all right. So that's the view coming in on BEL. The next one that we have is on KPIT Tech. Our viewer Mansi is asking if she can go ahead and buy and average out this one at the current level. She's already bought some at the levels of 1231. Okay, okay, 1231 maybe. Swati, on the charts, what's the strategy that you would be adopting?
The client has bought at a very elevated level, but though the current levels are very attractive, take a long positions, but for the longer term horizon or for the short period of time, you should wait for at least 2 years. Then only this particular counter will give a very strong profits on the higher sides. The stock has a potential to reach up to 4-digit levels, at least 1,000 to 1,100 levels. So on an investment purpose, definitely you can hold the generate the long positions at the current market price, because the momentum indicators such as the RSI showing a positive crossovers from the oversold zone. So the risk reward ratio is really favorable at the current market price. So you can take a long positions in for a target of 1,000 to 1,200 rupees in the near term.
Got the view, Swati. That's on KPIT Tech, and again, crucial results for the company this quarter around. But next question coming in on Arvind Shukla is from a similar space on Sagility. He's holding 45,000 shares of the company at 44.7. So it's almost a 20 lakh position that he's built on this one. Hopefully, it's not a meaningful part of his portfolio. The amount is quite big in one stock, but currently asking from a near to medium term, what's the advice? Should he sell or hold? Swati, since he said near term, likely on the charts, we saw, I think, a pullback from those 37 odd levels. What's the view at 41 now?
See, the short-term view is little bit cautious because the stock is strongly facing a very strong resistance of 45 levels, and those levels are their buying levels. So as long as it sustains, doesn't give the breakout of 45 levels, such kind of shortfalls can be witnessed, and which will take a stock back towards 240 to 38 levels. So my short-term view is little bit cautious, but on a longer-term horizon, you can definitely hold on long positions. On a monthly chart, it's forming a very positive setups, and for a year end, so I'm looking for a target of 54. So if you're looking for a short-term horizon, I will suggest on every rise, you can exit the long positions or hold if keeping a stop loss of 40 rupees on the downside.
Okay, the next one that we have is from Madhu Babu, who's writing us from Hyderabad, asking about IEX. He's holding 500 shares at the levels of 145. This is also a short-term related query. So Swati, I'll stick with you. 3 to 6 months view on this particular counter.
Definitely, you can hold on this particular counter. Energies are really doing very well from the last few months as such. The counter is on the verge of giving the breakout of 20 DMA, which comes to nearby 131 levels. And I believe that very soon we are likely to witness the good breakouts with the volumes. Slowly and steadily, the stock is likely to set up the rally towards to 138 to 140 levels. So at the current market price, you can definitely hold on the longs.
Got that view. The next one coming in on data patterns, and our viewer is holding 25 shares at 2242. So he's almost in gains of over 80% in this particular counter, and asking an exit range for a partial profit booking. And this is Sabu from Kerala. Swati, are these the current levels to do that?
Not at all. Definitely the counter is forming a very strong setups on the daily chart. That is a flat pattern, and it's on the verge of giving the breakout those level. If the stock manages to give a positive closing about 42.20, this rally is likely to be extended towards to 4,500. So 4,500, 4,450 are the good levels to book your partial profits. Not at the current market price, but you can keep the strict stop loss of 4,000. Markets are really very uncertain at the current market times. So 4,000 will be your profit stop loss. Till the time you can hold on to long positions for a target of 4,500. And if it's break those levels, then 5,000 levels can be seen.
Okay, so that's the view, in fact, constructive view coming in on data patterns. But time for a rapid fire round. Tapan and Swati, try to keep your answers as short as possible. Padma from Bengaluru is asking about Canes. Is this a good stock to buy for the next 1 year, Tapan?
Yeah, you can.
But Tapan, are you giving the view before the quarter four results? Because it's a big quarter in terms of guidance. So you're saying buy right now or buy after the quarter?
No, even the quarter results, I think this is the valuation which is comfortable. I know some corporate governance issues are there, but I think things will be settled.
Okay, the next question now coming in, it's from Suresh from Kerala, and he's asking on KPI Green from a long-term perspective. Is it a good buy, Tapan?
Yeah, buy on dips.
Good time to enter Suzlon Energy. Shankar from Bengaluru wants to know, he's planning to buy 1,000 shares. Swati?
Not at the current market price, any dips towards to 45 rupees per category.
Swati, you gave your view on data patterns, but MTAR has been the other counter, right? Flying through over the last 3 months, 1 year. Our viewers bought her at 4730. Should she sell or the momentum continues?
The momentum is still positive. You can hold on for initial targets will be 6,600, but maintain the strict stop loss of 61 on the downside.
BSC bought at the levels of 3,556. 38 shares is what Prakash from Bengaluru is holding. What's the future like? Swati on the charts.
3,900 to 4,000 are the likely targets. You can hold on by maintaining a stop loss of 3,700.
Mahesh from Bangalore, from Andhra Pradesh, pardon me, holds the Indian Hotels 30 shares at 704. Asking if it's the long-term view persists and can he buy on dips? Tapan?
It will be always a buy on dips, but yeah, it's a good stock to hold.
Okay, enter Mazagon Dock at the current price, or what should be the right price? Swati on the charts.
Not at the current momentum. Wait for some more time. Any tips towards 2,400 to 2,450 will be attractive levels to take the longs.
Lingaraju is holding on to Kalyan Jewellers at 412. He's holding almost 45 shares, Tapan, and he's asking what he should do with this counter now. Results on 8th, should he wait for those?
He can wait, but my gut feeling is that things are better for Kalyan from here. So buy on dips will be the category, but he can wait for the result.
Okay, the next one is on Punjab National Bank. 1,800 shares bought. Okay, the levels are not given, but Sony from Hyderabad is sitting at a 3% loss. Swati, should he continue to hold?
Yes, hold with a stop loss of 106. Upside short-term target is 115 to 18.
Chennai Petro, Swati holding at 1123. This is Sachin from Bangalore asking a near-term view on the stock now. As the breakout happen is his question.
Breakout has been happened. Definitely slowly and steadily up move rally can be witnessed towards to 1,200 rupees. Downside you can keep a stop loss of 1,020 and carry your longs.
Got it. Well, we will try and continue with a few more stock-related queries, but an important update there about Biocon. Claire Majumdar seen as the long-term successor to Kiran Majumdar Shaw of Biocon, and these are some of the key and important story coming in, and my colleague Nimit is now joining in to give us more perspective. Nimit, over to you.
Yes, absolutely. Sources from the industry have told us very clearly that Claire Majumdar is seen as a long-term ownership successor in Biocon by Kiran Majumdar Shaw. Now, who is Claire Majumdar is important. Claire is the niece of Kiran Majumdar Shaw. How she's her brother Ravi Majumdar's daughter. Now, she's in the US right now. She is the CEO and founder of Bicara Therapeutics, which is a NASDAQ listed company listed in 2024. In fact, she holds a biological engineering degree from MIT and she holds an MBA from Stanford Graduate School of Business. She also has a PhD in cancer biology from Stanford School of Business. Now, sources tell us that while this is a long-term ownership strategic decision and it's a process there's no decision that's been taken today, there's no effect on the management of the company or the day-to-day operations. It's only from the perspective of a long-term ownership change that Kiran Majumdar is looking at Claire as an eventual successor to the company itself.
Thank you so much for joining and giving us that important update. But viewers, unfortunately, all the time on this edition of Fast Profit. Thanks so much for watching. But we'll start taking all your stock-related queries again from 2 p.m. on Ask Profit, the afternoon edition. But curtains on this edition of the show. KYC comes up next. Thanks so much for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Hello and welcome back to NDTV Profit. You're watching KYC or Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and get perspective on that one company today. It's also very buzzing in trade on the back of its quarterly results. So very timely in that sense. And I'm talking about KEI Industries. Now, for the wires and cable space, it's been a very interesting time frame because of copper price volatility. So do stay tuned for the management interview as well. But very importantly, first, just to give you some perspective about where KEI started from and where it has got itself to at this point of time. Founded in 1968, company went public in 1992 and now has become the second largest cables and wire company in India. Now we've seen that, over the years, the company has of course commanded over a 9% share in India's cable and wire segment. It's gotten both industrial as well as the retail side of things, but supplies to infrastructure, power industry as well as the real estate and exports, which is now a very high growth strategy for the company. You've also seen that, the company's pan-India presence has been growing, as well as global presence have been going with over 60 plus countries now to where it exports to. Growth continues to be one of the higher ones in the export market with higher margins as well. So that share continues to be important. In terms of revenue mix, of course, majority is coming in from the cables and wire space, while they also have EPC and stainless steel wire. But we continue to focus on the cables and wire space as of now on the revenue mix. Now, very interestingly though, in terms of what we've seen in retail as well as the institutional side of things is where there's been quite an even split at this point of time. Now, when you look at the institutional side, they will be working with real estate players, they'll be working with power companies, and hence that is a slightly more stable business because the demand is quite subjective. Retail requires you to go on the ground, build that relationship with distributors, more sticky also in that sense, and hence both those verticals continue to be very important for the company at this point of time. But we will be, of course, speaking to Anil Gupta today on all of these key parameters. But let's look at what we'll be focusing on across the key bunch of results. Of course, the first one is income statement, as you must have watched on the show. Balance sheet, cash flow, and return ratios. Now, these are very, very important metrics, especially for KEI, which has seen a stupendous growth over the last 3 to 4 years. But there are some key aspects to watch in terms of future outlook. Shareholding, street cred, valuation, as well as what analysts make of it are some of the other parameters that we'll be focusing on. But a lot of goodness that the company has done will be visible in these parameters, but you also have to watch out for the future as well. But income statement coming up first because FY26 numbers have been quite strong for the company. Revenue has jumped from almost 8,000 crores to 11,000 odd crores in terms of the last 3-year performance. Margins, if you see, have been largely stable, but seeing a slight downtick. So it's recovered from the lows which we saw from FY25 levels, recovered back to that 10.5 mark, but we'll get some perspective from the management. Net profit also inched up from 581 crores and has done very well in this particular year by itself. When you look at quarter 4, it was a strong quarter for the company, 3,400 crores in terms of revenues, a 19% jump. But when you look at the EBITDA as well as the profitability, here is where the meat has come in terms of the growth. They've also done 12.2% margins in quarter 4. This is the highest that the company has done ever in one particular quarter. And hence, we've given this a neutral rating only because of purely what the company has done in terms of the yearly revenue. So, quarter 4 margins helped it to get to 10.5, but still away from that FY24 level. We're being very, very stringent on these parameters as of now, but a neutral rating for the company at this point of time. Balance sheet is the other one. Now, over the last couple of years, you must have seen that the other equity reserves have almost doubled. So from 3,000 odd crores to 6,600 crores now. This has been a very strong number for the company. Book value is also increased substantially, but the borrowing number has vanished away. So the company has paid through its borrowings over the last couple of years. Long-term borrowings have now gone through and payment is quite done. And hence the cash at bank has also seen a big, meaningful jump in the particular quarter as well. When you look at the cash flow also, that is the other key parameter. So balance sheet, of course, gets a big thumbs up right now at this point of time. But when you look at the cash flow, last year there was one of the key concerns because of higher capex. Cash flow from operations was the other key factor that got impacted. So you did see that dip to almost just 32 crores from over 600 crores. But FY26 picture has changed yet again back to those strong numbers of 840 crores. Profits also have been subsequently seen in the last slide as well for income statement, and hence the operations to PAT is now back to a very, very meaningful level compared to last year. Net cash flow also continues to be quite strong and stable at this point of time at almost 400 odd crores, and hence a big thumbs up to the company at this point of time on this metric as well. Return ratios are the other key factors. Now, the company has been in a capex cycle. So you saw the return ratios dip in the last year for the company at this point of time. Used to be quite stable at the 24 to 25% mark over the last FY22 to FY23 level. But the important factor here to note is that they have another plant coming up in Sanand, which was expected to come and start from this quarter itself. Some more commentary when we speak to the management today on this aspect. And hence, return ratios will have to be monitored at this point of time. Hence, we've given this kind of like a neutral rating at this point of time. A similar return ratio picture seen across the level. Used to be at 17 to 18%, but then has come down at this point of time. So, a neutral rating for now on this one. Shareholding, very, very stable for the company. You have associated that with the stability that Anil Gupta offers to shareholders at this point of time. There was that selling in March 25, which led to the company's share splitting to almost 35% at this point of time. But largely, we've seen consistently that the shareholding has been stable. Foreign investors reduced their stake to March 25 levels to almost 25%. Some being brought in and built up yet again in this year as we go into another year for the company. DIs have also plowed into at this point of time wherever there has been a reduction, while the retail investors have actually sold off and reduced some of their stake in the company. So we're seeing a very, very interesting picture here where DIs have actually done over the last 2 years, invested heavily in the company, increased their stake to the highest over the last 5 years. For investors starting to build that position, but retail investors who generally are quite shrewd with their investments, they've seen the street credit, and we'll get to that in just a bit, taken some money off the table at the end of this quarter. But as I talk about the street credit, there are a couple of key things to watch out for. You've seen the 6-month performance of the company being quite healthy at almost 22%, but there are some caveats. First one being that there has been copper price volatility. So that has helped the revenue grow faster. In terms of margins, that generally has a lag of a couple of quarters. So the copper prices which have grown in quarter 2, quarter 3 and quarter 4, some margin lag would have been seen as well. But that's one of the key reasons why the revenue growth has been much faster, and it's visible in the 6-month performance. The year to date also very stable. The 1-year performance up 62%. So valuations, and we'll get to that in just a bit, are pricey at this point of time. The 5-year return also has been quite stupendous. So it's gone through a very big re-rating cycle in that sense. And this 840% definitely trumps the other key players and the growth that we've seen also at this point of time for all these companies. But as we speak about valuations, here's the interesting picture. KEI Industries has been essentially there for quite a bit, but Polycab always used to command a higher valuations versus the other peers. Now you've seen that essentially reverse for the company given the strong 62% up move for KEI Industries. now trades at 44 times for FY27 price to earnings. Interestingly, Polycab also expected to report strong results in this quarter, is at 39 times price to earnings. RR Kabel saw very strong results in quarter 4. You saw the stock up almost 12% in this week itself, is now at 33 times price to earnings, while you have players like Finolex Cables, who generally trades at the lower valuation at 21, and Havels, which had a disappointing quarter largely because of the AC side of the business, because of Lloyd, and the consumer discretionary durable side of business, is now trading at 42 times. So a lot of the positives now priced in for this particular metric, for this particular valuation metric at this point of time for KEI, but the commentary will be very crucial and we'll get to that as well. But for now, we've given this a thumbs down, given what we've seen in terms of the pricing as well. Analyst stake is the other one. Now we is yet to get the company to get all the analyst stakes in. There has been a couple of interesting ones because Morgan Stanley has now downgraded the stock just today morning itself. But 18 analysts continue to maintain a buy. But you look at the likely return potential, that's quite negative at just 2.5%. So analyst call is yet to happen. So we'll get a lot more reports for the company tomorrow. But important to get you the perspective directly right here on NDTV Profit from the management itself. So let's go across, look at the other rating parameters and get a final count as well. Because this, of course, it's a neutral rating at this point of time. But in terms of income statement, we've given the company a rating as well as on the balance sheet. Income statement, of course, is a neutral rating, balance sheet and cash flow. It's been a very, very stark difference that's very visible in the company over FY25 and into FY26. Both those metrics get a thumbs up. Return ratios, the Sanand plant will be something to watch and hence a neutral rating for now. Shareholding, very stable. But the street cred and the analyst stake we just spoke about will be something to watch in the future. Valuations only because of being 44 times in terms of price to earnings for a business growing at 20% will be something to watch, especially at this point of time given the volatility seen in commodities. So let's get the final total up on the screen as well for you. We've given the company a 5 out of 8 as of now for this company given what we've seen in terms of valuation. But we will be speaking to Anil Gupta. He is the managing director of the company after this very short break. Do stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate.
Hello and welcome back to NDTV Profit. You're watching KYC and KEI Industries is the one that we're focusing on. But at this point of time, let me welcome in the management, Anil Gupta. He's the managing director of the company as well. But Mr. Gupta, very good morning to you, sir. Thanks so much for joining and giving us time here at NDTV Profit. It's been a very strong year for the company, very strong quarter 4 as well, highest ever margins. But give us some perspective of what the quarter has been like, because we've seen a very big crisis, geopolitical crisis unveiling right now between Israel and Iran. You've seen commodity prices also spike up, but despite that, at this point of time, you've reported its highest ever margins. How much of that is the pass through from quarter 3 to quarter 4 that has given you that benefit? And in terms of margin picture going into quarter 1, I know it's a very difficult period, but what could be some of the key aspects to watch on the margin side, according to you, for investors now?
Yeah, good afternoon, Puneet. We have been stating in our commentary always that the raw material price or input price cost increase or decrease is a pass-through. So we always keep sufficient raw materials to maintain our inventory vis-a-vis our order book, so that we don't lose on at least on the raw material fluctuations. So similar is the position now. I don't see much difference in the margins in the Q1 also, and the growth should continue to be strong because order book is strong, and I think in energy landscape the investments are quite strong.
But Mr. Gupta, what could, as you rightly mentioned, that a lot of it is passed through. But in terms of that aspect, could you give us some perspective of how much has been the operational benefit in this 12.2% margin number? And is it something that's sustainable? Because I know going through quarter 4 is one of the highest margins that you have. So in that sense, how much is the benefit from operational side of things? How much is the benefit from what we've seen on the commodity price impact passed through from the last quarter?
There is... I have maintained that we are getting a regular EBITDA anywhere between 10.30 to 11%. The 1% extra margin is mainly because of the either exchange fluctuation, because dollar has depreciated, and since our export remittances comes later and we don't hedge our positions, so that is it, and some treasury income from the interest on the FDRs. So the operational margins are around 11%.
Got it. Well, the other aspect, Mr. Gupta, has been the growth. Now, you've always guided for a 20% growth and you achieved that in this year as well. So many congratulations for that. But going into FY27, there have been a couple of key metrics. Now, one has been in terms of the raw material volatility, and the other aspect has been on commodity price, as you mentioned specifically, and the rupee depreciation impact too. Now, of course, we don't know what the rupee will go through, but expectations are that it's not going to be a very sudden fall back to those 90 rupee per dollar mark. In that sense, and given that context, do you think that the growth will be higher for FY27? Should we expect a 23 to 25% growth versus the 20% growth that you always highlighted because of these two metrics now?
It may be possible, but we don't project high. I'm always conservative in projecting the growth. So I will still maintain we will definitely grow by more than 20%. How much? And definitely it will be faster. So far as exchange fluctuation is concerned, our most buys of raw material is in rupee, barring a very less imports, which we hedge through our export orders. We don't do hedging, but it is a natural hedge between our against our exports. So we have been always insulated in our margins due to any rupee depreciation, which may lead to the reduction in our margins in our imports. But we have always benefited from our export revenues due to exchange fluctuations if the rupee is devaluing. And this is what we have seen in the quarter 4 as well.
Mr. Gupta, the other key aspect that has been the key picture. So is there assessment that the growth will be at least 20% in FY27 and it could be higher because of these two metrics, but you don't want to put a number to that? Is that a correct assessment?
Exactly.
Okay. And the other one that has been, and we were speaking to you about it in quarter 2 as well, was the plant coming up in Sanand. Now, you had guided us that it was delayed from quarter 1 to quarter 4 of 27. as we stand today in 26, is the expectation that there will be another 4 quarters as the plant comes up? Is that the correct expectation that we should have from that plant now?
First phase, we have already commenced production. So that is operational, which will add to the growth of the company's revenue this year. So far as second phase is concerned, which is the final phase, that will come up by Q4 only. I don't see much improvement in the time frame in that.
Also, sir, in terms of the extra high voltage cables, because a lot of that was only coming up and a big expectation was that it will come through basically at that time through the Sanand plant expectation. So another layer of margin growth was expected from these premium products. Is there anything that you can do at this point of time as we wait for that second phase of the plant to come through to address the EHV segment, or do you feel that the share of that will be quite stable for you as we've seen in FY26 as well?
I think share of that will be quite stable because that EHV segment will come up in Q4 only.
The other, so in terms of that expectation, what is the capex plan that you have for FY27? Is it largely going to be only for Sanand, and what's the number that you're penciling in?
Our capex in this FY27 is expected to be anywhere between 650 to 700 crore, wherein around 400 crore will be put in Sanand and balance in our existing factories.
Got it. And Mr. Gupta, how has been the momentum for dealers at this point of time? Because in March specifically, because we've done a lot of channel checks also, we had brokerages also come out of it, that distributors remained a little wary in the start of March, somewhere around mid-March as well. How has that mood changed as we go into the month of May? Is it largely that the dealers have stocked through in April, or what is the expectation that a lot of that stocking will happen now for this year? What has been the expectation for the industry? What's that for KEI?
We had seen a good sales from the pickup from the dealers in March because of the year-end targets. And in April, we have seen normal stockpile. And I think this normal purchases should continue through the quarter. But I don't see any exceptional jump in the stocks by the dealers in the May or June.
Got it. So no exceptional jump, that's seeing business as usual. Got it. And also, sir, in terms of exports, because that has been the other key factor that you've guided consistently at 20% growth. Now, your share of revenue roughly translates around 17 to 18% from the export market. What is some of the key targets that you're targeting for the next year, as well as in perspective of growth, what could we expect?
At the moment, this year we achieved around 16% of the sales from exports, and we hope that this financial year we expect to take it up to 18 to 20%. We will definitely aim for the higher side.
And Mr. Gupta, we generally see just a slighter, more margin comfort that a lot of players do tell us about in terms of the export market. So for you specifically, is that also the case? Could you quantify that in that sense, and also give us some perspective of, is it likely that what kind of products also that you're exporting? Is it that the extra high voltage, the higher margin business that gets sold more in the export market, or is it more unilateral as you run through in India as well?
No, we are mostly exporting medium voltage ST cables and extra high voltage cables in exports. We also export a lot of control and instrumentation cables for oil and gas sector. So and as well as the cables for solar and wind projects.
In terms of what we've seen essentially in terms of the margin pictures for you specifically, how has that been? Is that largely continues to be in the solar and the wind projects for oil and gas as well? Is that largely quite similar to the EHV side of things, or largely more stable towards the other wires that you sell in India?
I think I would not like to comment on the specific margins on exports. because our business is a mix of domestic and exports, and domestic is more. So, and the EBITDA margins, what you see is in front of you. So the specific margins on exports, we are not quantifying.
And Mr. Gupta, just as we wrap up this conversation, the other factor has been that you've consistently guided for a 20% growth, and you've maintained a 16 to 19% kind of a volume growth in your earlier in this year as well, as we've seen. For the next year, since you've mentioned that there could be a chance of going over 20% in terms of revenue growth, but should the volume picture likely be stable at the 16 to 19% mark?
Actually, we have not yet worked out on the volume growth, but volume growth could be anywhere between around 15%. This is my estimation as of now.
And around 15%, okay. But isn't it, sir, a little lower than what you usually do? So at this point of time?
We will definitely get more, but...
so it's just something that you're being conservative at this point of time as we start the year. Okay, got it, Mr. Gupta. The other one also, Mr. Gupta, has been on how you've been in terms of your pending order book. Now, it has grown steadily. You mentioned that you want to enter export into newer markets as well. But currently, since you are already exporting to 60 countries, could you give us some perspective of how much share does the top 10 contribute? Is it meaningful that almost 50% come from those top 10 heavy wire-use markets, while the rest are into newer opportunities and growth could increase there in that sense?
I have not understood your question.
So my question being that since you already export to all 60 odd countries, how much is the share of the top 10 that you highlighted? Is it already half of that goes into the top 10?
No, I think 90% of the exports goes to top 10.
90%. And is this the major hubs which we know for the wires and cables within Europe, within America as well, that you already target through? So the 90% share is coming from those major geographies?
Our major hubs of exports are Middle East, Australia, and Africa, and and now US as well.
Got it. Well, Mr. Gupta, always a pleasure speaking to you. Thanks so much, sir, for joining in, giving us this perspective for KA. I know you have the analyst call at 12, so we'll let you go on this note. But thanks so much for joining us today, giving us so much guidance, so much clarity on the time forward for FY27 for you as well as for the company. We wish you the best. Always look forward to our next conversation, sir.
Thank you. Thank you.
Well, that was the management of KA Industries. They have guided for a very strong growth of over 20%. Could be a little higher also is what the expectation is, given that we could have some impact of rupee, could have some impact on the commodity side of things. But he is currently maintaining a 15% volume growth. Generally, a 16 to 19% number is what we expect. But it could have some upside risks is what Mr. Gupta has also highlighted. But all the time on this edition of KYC, thanks so much for watching. Stay tuned to NDTV Profit for more.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Benchmarks trade under pressure. Nifty 50 trades below 24,000. Realty as well as oil and gas trade under pressure. Most sectors trade in the red. Delivery is under pressure today after Amazon unveiled its own delivery services, with Amazon and other e-commerce players accounting for nearly 60% of deliveries revenues. The move raises competitive intensity and margin risks. Mahindra & Mahindra is expected to post a strong Q4 number, driven by robust SUV and tractor volumes. Revenue and profits should rise sharply, though margins may moderate on higher commodity costs. Rupee hovers close to record low of 95 rupees 41 paise against the dollar. A strong dollar and elevated oil prices continue to keep the currency on the defensive. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and let's take you through the market. And yes, there is considerable pressure when it comes to the Indian markets today, and that is also across the board that is being seen. Nifty 50 is touching the lowest point of trading session at the current moment at midday, and 23,898 levels at the moment. So really finding it difficult to hold on to that 24,000 level as well. There's across the board selling pressure that is being seen on account of, also remember, the global cues being weak, your crude oil prices being lower, and very important to note over here is also the rupee really touching its new record low of 95 rupees 41 paise against the dollar. So that is also an impact and a sentimental drawdown on the market. So keep an eye out on rupee, and a lot of effort was made by the Reserve Bank of India to keep the rupee at a much more comfortable level, but it has been dwindling because of also the global pressure, uncertainty from Middle East crisis and the crude oil prices, which also weigh on our economy. When we take a look at the overall market momentum, well, all the sectors are in the red except defense and a slight bit of green tinge when it comes to the pharma space. When we take a look at some of the components which are really impacting Nifty 50, well, Infi is showing up in the green. Titan, Nestle from consumption pack IT has TCS as well as Infi. So these are the slight bit of companies with some gains and some impact, but hardly of 3, 4, 5 points. But the real damage is really coming in from the top banks, HDFC Bank, ICICI Bank. They are the top draggers along with the big boy SBI, Larsen & Toubro, Bharti Airtel also causing enough damage. So there is across the board some bit of nervousness in the market and therefore some selling pressure as well. Let's also get an important corporate voice. HDFC Bank is strong and well capitalized. That's the word really coming in from the former HDFC chairman Deepak Parekh. Listen in to what he had to say.
Are you talking of HDFC Bank? Yes, I have nothing to do with HDFC Bank. I've retired. I'm not on the board. So I can't say anything about it. Except that you must read the Reserve Bank of India statement that the bank is strong, well capitalized, and there are no ethical issues.
All right. So HDFC Bank, the top dragger in today's trade, also a mechanism of trade-off and the global, momentum when it comes to the FII outflows from the Indian markets. Now let's get chatting on the market momentum and what lies ahead and how to really tackle the volatility that's really playing out in the market. Nishal Maheshwari, a market expert, joins in. Nishal, always a pleasure to speak to you and get your insights on the markets. In today's scenario, how do you see the pressure points and what really has changed from a day of gains to a day of losses, really, in your view? And this volatility is going to be a norm for some time, according to you?
It seems so, basically, because I think the geopolitical situation, as you are aware, basically is quite fluid and keeps on changing. I think at the moment, the market is not looking or discounting that we are going out to a full-fledged war once again. I personally also do not think so. Both the parties are, judging each other, trying to push and trying to maximize their outcomes. And that's what is happening at the moment. But I do not see, and the market also doesn't seem to be suggesting at the moment that we are going back to this pre-issue time, basically. So after that stalemate has happened, basically, I think we are not headed back to the pre-issue time.
Right. So Nishal, of course, yesterday's big announcements coming in and the outcomes from election results. What do you think it really means for the market? And the gains of yesterday has really not sustained today. So clearly the global, uncertainties are playing a bigger role. But what does the West Bengal and even Tamil Nadu, which was quite a surprise with Vijay's, popularity in the state, what does this really mean for the market momentum overall?
So overall, I don't think that state elections matter much, basically. Fortunately, the ruling party is winning. If they would have lost a couple of them, basically market would have reacted a bit negatively. But I think in the medium term, market just forgets it. Until and unless it's a central election. So every 5 years, basically, that's a one big event which happens basically because that decides the policies for the next 5 years. Who comes in the government, whether it's a stable government or not, whether they are somebody is getting a clear majority. I think that is a very important part. But I think state elections have got so much excitement, but then it's over. So yes, I think especially for West Bengal, I can say yes, after maybe whatever 4 or 5 decades, maybe a pro-industry government is in place. And that may help West Bengal particularly.
That's right. So market was really closely watching out for these developments to really come in, and the central government really strengthening its position in a large state. That was something that really impacted the market yesterday. But Nishal, we are halfway through the earnings cycle this time. What's your view and what are the important highlights for you from the earnings momentum and therefore the stock pick and the sector pick?
So I think earnings have been pretty decent. We're seeing a good run up basically as far as top lines are concerned. FMCG, I think a couple of these guys have come in. Basically, they've been better than the market volumes or market expectations in terms of volumes. Similarly, on the retail side also, I think the benefits of GST are coming in basically in the last quarter. Now, the important thing is most of these companies, after declaring a decent Q4, they have been cautious because of what is really happening on the Middle East issue. So that is where I think one needs to be cautious because how long this will continue and what kind of impact it will happen, because I think this impact is not going to be a quarter, a few months, but maybe a few quarters. Because even after the war stops, I think this is going to take a bit of time to settle down, getting the supply chains in place, getting the raw materials in place, getting the prices down. I think all this is going to take time. So I think companies are cautioning about that. I think most of the markets, most of the broking houses have cut their earnings guidance for the current year. And it is sort of getting discounted at the moment.
All right, it's getting discounted. But Nishchal, if you really have to pick and strategize in this particular market to still make money, what will your strategy be?
So I think 3 or 4 sectors which I've been highlighting on your channel earlier also, I think banking is one of them. Metals, so commodities, particularly metals, I think even cement results are coming fine. So I think within that you can look at it. The third focus remains to be power, because that's going to be after this energy issues. I think government will come out with a very comprehensive policy about energy security. I think power is another area basically one should focus on. And then consumption still continues to be okay. So I think these are 3 or 4 areas basically I would be looking to invest in.
All right, Nishchal, thank you so much. Always a pleasure speaking to you. Thank you so much for joining us. Thanks. So that was all about the market, but let's get chatting on an important set of results that were announced. We're talking about Ather Energy, and the stock is gaining by over 0.5%, around lower than that, and it has seen its fair bit of volatility through the day as it digests the numbers. The net loss for the company has really narrowed on a year-on-year basis. Revenues have jumped. EBITDA loss has also narrowed, and of course the deliveries registrations have really shot up. So the momentum is really building. Let's get chatting with Tarun Mehta, who's the co-founder and CEO of Ather Energy. Tarun, always a pleasure to welcome you on NDTV Profit. My first question to you, of course, the net loss has really, now narrowed, and there is a considerable momentum on the electric vehicle side that is being seen by the registration numbers also were shown, for the last month. What is the momentum like, and does your targets on the break-even really change from here on? Any guidance on that?
Right. Thanks, Nisha. So there's definitely a considerable amount of momentum in our industry. We've been actually talking about this for a good part of a year now. Electric two-wheelers priced above 1 lakh have been always doing really well. And that's a space where Ather operates for the most part. There was a lot of reduction of sale of products priced below 1 lakh. And hence, in totality, it seemed like the industry was not growing. But as both segments have now found the natural level, over the last 4 to 5 months, we have seen incredible growth across the industry, across all players. We've been very lucky. In Q4, we saw an almost 75% growth in volume over same time last year. In fact, actual retails were neck to neck or even higher than what we were able to wholesale. Telangana results were not in at the time of publication, but it seems like we seem to have likely retailed even more than we wholesaled. So incredible tailwinds here for the industry and the business. For FY27, I'm very excited about the new platform and the new product which we are going to be introducing, our lower cost platform, EL platform, and the new scooter basis that. And that gives us an entry in the mass market segment, which is the 1 to 1.25 lakh rupee priced electric scooter. So very excited about that. It will happen towards the end of this year. There are near-term headwinds coming from elevated commodities. Little that the industry can do to solve that because that's a larger macro challenge, particularly elevated by the Hormuz crisis. And we've guided that expect margins to stay under pressure for a few quarters. While commodities find the natural level later this year. But that aside, I think incredible tailwinds on volumes and overall deliveries.
Right. So, Tarun, I'm glad that you yourself mentioned the headwinds as well. And of course, these are very interesting times and very chaotic as well when it comes to supply chain constraints. Considering that the battery supply, and we have had this chat earlier once, if you remember, about the battery being captive and you sourcing it from outside and that whole debate in your sector. But when we talk about an unusual time like this, apart from the prices rising, is there also constraint on supply chain in terms of availability? And when you talk about the margins being under pressure, what is the estimated pressure point and some number put to it which can be really incorporated in the guidance for next few quarters?
Right. So we've seen this pressure build up for a long time, and particularly it's a very delicate dance to do because we're also seeing volumes grow up 70, 80, 90% quarter on quarterly results, and demand we believe is actually even higher than what we're actually able to deliver. But on the other side, when you look at the larger global macro, there are obviously constraints, and you have to do a very delicate balance to make sure that you can marry both of these realities together. On lithium-ion cells, we've been diversifying on three fronts, which is technology, vendor, and geography. So Ather was the first large e-two-wheeler brand to diversify to LFP as a technology out from NMC and NCA. This has given us a massive cushion because the sources of LFP are many, and it also provides us two different technologies to tap into. Yes. We've also been recently working on diversifying a supplier base, both at the company level and the production source level. Right. We continue to work with Indian manufacturers who are trying to move cell production to India. There are near-term challenges in honestly getting any cell production to India because it completely depends on securing all materials from China, which is under even more pressure than the final produced cell. So it's easier to secure a cell coming from China or Malaysia at this point, or South Korea, rather than get materials coming out from pure play China. So we remain more bullish on securing cells, and we're diversifying our vendor base and the geography of production.
All right, so this diversification is going to offset some of the costs escalation and also supply chain constraints. But Tarun, when we talk about the volume versus the margin play, right now with the momentum building on the demand side, while the depression is being seen in the margin, is the push towards the volume, and what is the kind of volume that you're anticipating and market share that you really aim for this financial year?
Right. So in Q4, we were actually able to improve our margins, even in this kind of a climate, by about 100 bips. And this has been possible because of all the diversification we have done and constant value engineering that we've been running across our entire product line. We've also been very disciplined, taking price hikes every few months. So for example, in January, we took a 1,500 rupee price hike. And in April, we've taken another 2,500 rupee price hike. My belief is that between this and the continuous cost reductions, particularly with the new scooter platform, the EL scooter platform, we will be able to absorb a meaningful chunk of the commodities that will be inflated. But if you take a super short-term view, let's say the next few quarters, then yes, there will still be a commodity impact. Maybe it'll get balanced out by volume. But in the long term, I think the business is landing up at a much better place because all these price hikes and all the innovation in the business model and the cost structures is yielding long-term benefits while navigating the short-term challenges.
Right. So, Tarun, could you mention that because I also wanted to understand in terms of your strategy, you have diversified your sourcing of what remains as a supply constraint, and you also sourced have increased the prices. How has been the demand after pushing the price hike? Are you able to push it down to the consumers without hitting the demand side and impacting your volumes and market share? Are you confident of that? And are there any more price hikes that needs to be taken and can be taken given the market scenario and the competitive edge also?
Demand is strong, Nisha. So, for example, in the recent months, let's look at the month of April. Our internal estimate is that we were able to satisfy only about 70 to 75% of the real demand. So, actual demand remains considerably higher. I think what we have to really what we have to really understand is that this entire Iran war is changing the mindset of the consumer, is rewiring the mind of the consumer quite fundamentally. My favorite example right now is we are suddenly switching from a customer or a family thinking that, oh, we want to buy electric, great, but let's make sure we have one petrol scooter or car in the family, to suddenly they are switching to, oh yeah, sure, we can have multiple petrol cars, petrol scooters in the family, but we should at least have one electric vehicle, because electricity has surprisingly become the most reliable commodity, particularly with how the government's beautifully built up energy independence, at least on electricity. So I think this is a massive rewiring at the consumer layer, and this is going to fundamentally rewrite the demand for electric vehicles in the coming year.
That's right, Tarun. In fact, that's a very important point, that our fuel energy choice and the dependence to overseas crude, that is really impacting the other electric vehicles as well as other sources of energy transformation, and that you are also benefiting from. But my final question to you, in terms of market share and the competitive intensity, can you give us some guidance on how you're going to take forward, and some of the old players who transgressed into the EV space where you are purely in, they are giving quite a competition to the new players like yourself. So what will be your moat when it comes to the competitive intensity? What is the market share that you're looking at? Any numbers on the guidance also for this year?
So 4 quick things. First, our market share has improved considerably in the last 2 years. It has gone from roughly about 9% market share 2 years ago to about 13% market share a year ago to about 18% market share today. So there's been a very, very, very large shift in how the entire market share has played out. B, I do believe that our current market shares are still not real picture because they are supply constrained. And if we could supply all that the market demands, the real market shares could be and should be higher. C, right now, Ather's market share is coming almost completely by selling products priced above 1,25,000 rupees. As we enter the 1 to 1.25 lakh rupee price segment over the course of the next year, over the next 12 months, I believe it will drive substantial market share. It could substantially drive market share gains because that segment where Ather is not even present is something like almost half of the industry's size. So it's one of the largest chunks to go after.
Right. So paths to profitability, Tarun, very quickly.
Oh, that we're not sharing any guidance. I think the trajectory.
It's high time that we got some path to profitability with the kind of boost that is being seen from the overall ecosystem to your space.
I think you will see us very happily share our quarterly numbers, but we will not try and predict.
You have a timeline in mind in how many years?
I think if the commodities hadn't run off like what they have in the last few months, yes, honestly, I would have felt comfortable over the next few months and quarters. But obviously, this changed the picture, so it'll add some more time. Difficult to predict how much.
All right, so that gives a good indication in a few months you could have done if there were not unusual circumstances and factors at play at the moment. All the best for that, Tarun. Always a pleasure to welcome you on NDTV Profit. All the best for the next quarter. Thank you. All right, so that was Ather Energy. The stock is gaining in trade, and of course, the losses have narrowed. Moving on to another important story, sources tell NDTV Profit that the India-US trade talks are likely to see momentum after May 8th hearing on Section 301 investigations. In fact, my colleague Rishabh Bhatnagar joins in with all the details on this. Rishabh, what are your sources telling you on this?
Absolutely. What we're picking up from very well-placed sources in the Indian government is that you'll see more of a momentum in the India-US trade talks after the May 8th hearing. So in a few days, you'll have a hearing by the US trade representative. This is, of course, with regards to the various probes that the US has carried out against several economies, not just India. So India is a group of the 16 economies that are being probed on excess capacity. Nifty, and a group of 60 economies, 60 economies that are being probed for forced labor. So now on the forced labor fronts, the public hearings have taken place. India has put forth all the sort of submissions and evidence that it has to put forward. On the excess capacity side, the hearing is set for May 8th, and post that is when we can expect some sort of talks on a new trade round that could come up between India and the US. Remember, the India-US trade team was in Washington last month, April 20th to 22nd. 3-day negotiations were kept in mind sort of to take forward the India-US trade deal. Remember, a framework has already been agreed upon, but given the fact that the Supreme Court had taken down all of Trump's tariffs, so there was a lot of need for some sort of a tweaking to that trade deal and to make it even better for India than it was. Currently, all countries are at the same tariff level, so there's no sort of competitive advantage that India is getting being a trading partner of the US. So that is something that will be talked upon after May 8th. That's what we're picking up from well-placed sources.
All right, thank you, Rishabh, for that important set of numbers coming in. Mahindra & Mahindra, it's a beat on revenue as well as profit for the company from what the street was estimating, 3737 crore rupees. That's the net profit number, and the revenue number, 39,500 odd crores. And the estimate was lower than that. So slight beat, and that is what is also reflecting on the stock price. It has zoomed after the results have really been announced, and 0.65% up at the current moment, and it's a slight uptick that has been seen after the results really came in. The to pay final dividend as well that is being announced by the company, and the profit figure stands at 3737 crore rupees versus the estimate of under 3500 crore rupees, and that's what the stock is really reacting to. So looks like a good set of numbers, but of course we have to see the profitability aspect and the margin aspect and how that is panning out, and whether or not the input costs, because of the uncertainty, global uncertainty, is really impacting it. 14.1% versus the estimate of 14.1% when it comes to EBITDA margin. So yes, there is a beat on revenue, there is a beat on profit, but there are elements that are eroding the profitability for the company, and therefore the margins are flat. And that's what the picture is looking like for Mahindra & Mahindra, one of the top automakers. And definitely it was expected to be a good quarter, except for some of the cost pressures which is being dealt with by the overall industry. Let's get Puneet, who's joining in. He tracks the auto sector closely. If he's available to give us the first reactions on what the numbers really look like. Puneet.
Well, thank you for that. The revenue as well as the profitability have come in much higher than the estimates were. So, and that's one of the key aspects, because the revenue has been higher than the estimates. So because of that, the absolute EBITDA at 5,564 is higher than the estimate that we were working with of 5,300 odd crores. But the margin number in terms of percentage is coming exactly as per our estimate. So because of the higher revenue growth that the company has shown in this quarter, the absolute EBITDA number of 5,564 crores is higher than the estimate that we were working with. But the percentage margin, as mentioned, is clearly at 14.1. So it's an 80 basis point downtick that the company has shown in margins, and commodity cost has been one of the key factors. Now, Mahindra & Mahindra, because they have the tractor side of the business as well, will be more impacted in terms of margins compared to the other car makers like Maruti Suzuki, where the impact was very minimal in this quarter. So quarter one, there will be some key commentary to watch out for from the company, because commodity has made its headwinds into April as well. So that will be the other key factor if Mahindra is able to hold. But in terms of the numbers, both for automotive and tractors, volume growth was well known of 23 and 36% respectively. But it's been a very good quarter for the company. But margins will be something to watch in terms of commentary. So that will be the other key factor. And in terms of course, guidance for the next year for both passenger vehicles as well as for the tractor business will be something to watch. Very high base for FY26. But numbers on fit is in line with the estimate that we were working with, and come in line with the estimates as well.
All right, Puneet, thanks so much for the quick take. Let's take it straight across to another expert on autos. Avinash joins in. He's a director research at Profit Mart Securities. Avinash, your quick take. Of course, there is a big, there's a slight beat when it comes to the revenues as well as profit. Even the margin figure, as Puneet was mentioning, is higher than the estimates. There is a beat on all these three fronts. But of course, the margin percentage is coming in exactly at the estimate, and looks like the cost pressure on commodity, which the industry is dealing with, and more for the tractor side of the business for M&M, is really impacting. What's your view after these results on M&M?
No, I think I've not seen the numbers, but from the commentary which you gave, I think clearly this was expected. The markets were expecting a good, strong performance in Q4. I think both the utility vehicles and the tractor business has done well in terms of volume growth. The electric vehicle portfolio has also done well. I think the company has a strong waiting list here. As far as margins are concerned, I think this was on anticipated lines. I think you're going to see some more margin pressure in the Q1 of FY 26-27, because clearly commodity prices have risen, and considering the geopolitical situation as of now, I would believe that the company would take a decent amount of price hike to ensure that some part of the cost is neutralized. But nevertheless, looking at the kind of tailwinds in the sector, specifically in terms of both tractors as well as utility vehicles and the electric vehicle portfolio, I would believe that the market would like to hear out the commentary today. The conference call is at 3:30 today. So the market would be looking forward to the management commentary on the kind of growth outlook the management would share on any new product development, and how they are going to address the margin pressure issue. I think the price hike cannot be ruled out, but net, I think, we are structurally positive. So I think definitely I would expect that the management would sound quite confident and positive on the growth outlook. So we'll wait and watch.
Right, very well pointed out that the next quarter, that is Q1 of FY27, could also be difficult, Avinash, on the margin front, given that the war is really continuing into the month of May as well. When it comes to this performance and looking at the future outlook of the pressure really building on the margin front, what is your estimate in terms of the upgrade or downgrade of the stock? Does it call for an action at the current valuations?
No, I think, the stock may, possibly, be a little soft once the numbers have come out, because today the markets have also been very volatile and have been on the selling side. But I think from an investment perspective, I would believe that the M&M management has got a kind of a very strong bandwidth to manage the cost pressure very well. And most importantly, maybe you could see a good, strong stock revival, from the second half. Maybe the first 2 quarters could be challenging, but I think at 3,000 odd levels, if an investor were to take positions here, my sense is that our fair value estimate is around 3,400 to 3,450. So, there's a recent amount of risk reward available. But I think investors should take a slight longer term view, because typically what we see is post the numbers, the stock corrects and then consolidates and then starts moving up again. So maybe the numbers after the stock after the results may not move up immediately, but 12 to 15 months forward, definitely the outlook looks promising.
All right. Thank you so much for joining us with your quick take on the analysis of Mahindra & Mahindra's numbers. And there you go. The stock has been zooming. It likes the numbers. It has been a beat on revenue, profit, as well as EBITDA figures. But EBITDA margin on a YOY basis has gone down by 80 basis points. And that is because of the commodity cost, which is going to also impact the company in this particular quarter. And there can be an expectation of a price hike to mitigate the cost pressure coming in for the company. But apart from the margin percentage, it is a beat on all counts, and that's what is being rewarded on the stock price as well. With that, it's a wrap on this edition of Market at 12, and keep it with NDTV Profit. Lots of market news and action on the other side. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New Year.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and we have Somit Sarkar, who's standing at the market pit. Somit, with the way earnings have panned out so far, plus you had the verdict of the state elections, how are you reading it in terms of what market reaction we're seeing today?
Well, it's a tough day for market. At one point of time, we had slipped below the 23,900 level. From there, we have seen a recovery of around 50 odd points, but still a tough day. And two factors that is leading to this. Firstly is the fact that rupee has depreciated to 95.42 and Brent crude has surged back to around $113 per barrel. So intraday basis, we slipped around 23,900 and we are now trading around the 50 DMA, which is a very crucial level for the benchmark index. If you look at the sectoral indices, it was the bank and the real estate which has performed the worst, while on the flip side is the defensives, which have been trying to hold on to some gains in the market. FMCG and pharma largely flat to positive in trade is what I had seen last. When it comes to small and mid caps, they are down, but again, they are still managing to outperform the benchmark index. They have fallen much lesser compared to what the Nifty 50 has fallen. Now for Nifty 50, the crucial support level is around 23,800. We are comfortably above that level, but again, it's not that people are going all in and buying in market. Technically, Nifty Bank, if you look at that, appears to be much more weaker compared to Nifty Bank. It seems that the rally in Nifty Bank has largely exhausted when compared to Nifty 50, and it's also trading below all its key moving averages. Now for Nifty Bank, if you look at the crucial, until unless it reclaims the 55,500 level, the bias will remain sideways to negative is what technical analysts are indicating. And the key resistance right now for Nifty Bank stands at around 55,000, while the support stands at close to 54,000 for the Nifty Bank index.
All right, thank you so much, Somit, for that. But let's quickly just take you through the watch list. ICICI Bank, that stock has been declining in 4 out of the last 5 sessions. L&T is in focus as well ahead of Q4 numbers. Hero Moto also will be reporting numbers today. Wockhardt, they've actually posted the first profit after 2022 on a financial basis, and that's the reason why you're seeing these kind of gains. Quest Corp has also turned profitable in the 4th quarter. Tata Tech, the company has posted inline set of numbers and a strong set of numbers that have been reported by Aarti Industries, but it's interesting to see the stock which is under pressure. Godrej Properties is in focus along with the Dynacons on the back of a project win. Manappuram Finance, where the gold segment is what is leading the growth, and KEA Industries is reflecting soft volume growth. Idea Forge, Meesho, Delivery, a few of the other stocks which are in focus in today's session. But let me go back to Somit to take the rapid fire with Somil Mehta.
Well, yes, in the rapid fire segment, firstly, it's Aarti Industries which remains in focus. The company has reported a strong set of numbers in the fourth quarter of FY26. But Somil, how are you looking on Aarti Industries on charts?
The Aarti Industries is looking good to me. Overall uptrend, trading above key averages, short-term averages. I'm positive on it. However, it can go down till 460, 440 levels, but that will be a buying opportunity. So I'll be positive in the medium term, but not in the short term. Short term, you can stay away.
Well, the second stock is Dynacons, where they have received a new order from RBI worth nearly 750 crore rupees. This is one of the large orders that I've heard for Dynacons. The stock has been gaining in trade. Technically, any view on this, Somil?
I'll be positive on this stock. I'll be expecting a target of at least 1350, 1360 levels. Medium term outlook positive. It has been trading above key averages, so positive on this stock.
Well, Manappuram also remains in focus on the back of the Q4 numbers, and specifically on the fundamental side. Jefferies had upgraded its rating on the counter to buy, and they had also hiked the target price to around 360 odd rupees. How's Manappuram looking on charts, Somil?
Again, positive on the stock. I'll be expecting a target of 1320 in the very short term, but I think it can go up till 1380, 1390 levels in the medium term outlook. So positive in the short term, medium term both.
And for Idea Forge, it's a turnaround quarter, strong Q4. The stock has been on an uptrend. Yesterday on the bull deal, there was a big FII who had also bought some stake in the counter. Somil, how's the chart looking for Idea Forge?
Positive on the stock. It has been rallying one way since last 1 month. Broken out of a consolidation. Short-term targets would be around 860 levels, but I think it can go up till 1000.
Right. Hiral, back to you for what's been trending on Google.
Thank you so much, Somit, for that. And thank you, Somil, as well, for joining in. Always a pleasure to speak to you. But let's shift focus to stocks which are trending on Google today, because you do see interesting trends that come in. If you can just pull up the ones which are trending as we speak. Idea Forge, for obvious reasons. Kotak Mahindra Bank has made it to the list. Vodafone Idea post numbers. And, post the AGR news relief that has come in continues to trend for a second consecutive session. CAMS is reacting to numbers, and that's what is coming up on Google Trends, as well as along with MTAR Technology. So interesting names that we're talking about here. But let's shift focus on some of the earnings interactions today. CSB Bank is on our radar. Let's quickly pull up that one on the screens and see what the bank is doing in trade, because an inline set of numbers is what the bank has reported. Lower provisions has aided profitability growth, and the credit growth also is coming pretty much healthy. Though the stock is under pressure with cuts of 1.5%. To discuss more on the quarter gone by, Pralay Mondal, MD and CEO at CSB Bank, joins in. And I have my colleague Piyush Shukla also, who will be a part of this conversation. Mr. Mondal, welcome to the show. Always a pleasure to speak to you. My question coming to you is, the highlight when everyone is talking about this quarter is with what's happened with gold prices and the gold loan portfolio. And that's what I want to start my conversation with. Loans have surged, 53% in FY26 as a year for you. And they're little over 50% of your net advances. From here on, do you see it moving in a similar direction? Because managing the risk of over concentration also creeps in then.
Good afternoon, Hiral, and very relevant point. While the gold is growing at this point of time, our main focus as per our SBS 2030 journey is to have a balanced portfolio, and hence you'll see that we have started growing our wholesale business very well. It grew by around 36% this year on year, and we believe that that can continue to grow. On the SME portfolio, we have been little cautious. And because of the global environment, not for us, our portfolio is doing extremely well. And hence, the last year we didn't grow. This year, we may look at growth once we have better clarity. And retail is something based on the entire transformative journey on the technology. We are now launching products. First, we'll get the retail liability, and then we'll cross-sell and get the retail asset. So given this journey ahead, gold is just holding up to where it is, around 50% of our portfolio, a little more than that. And it grew pretty well last year. But it's not that is a single business which we want to grow. Rest of the business will continue to grow, and gold will come to somewhere around 30% by FY 2030. That's the plan for us.
Okay, one quick follow-up, Mr. Mondal, is you mentioned about being cautious in terms of the SME portfolio. When do you expect to resume that aggressive growth in this segment then? I mean, what are you looking at in terms of visibility?
So the good thing that has happened in SME is, see, we are growing pretty well till FY25. And last year we had turned cautious primarily because of the tariff-related issues, and then it followed with the West Asia crisis, supply chain issues, etc. So given all these, and the portfolio is now very good, because whatever little slippages we saw last year in this Q2 and Q3, most of it has been upgraded and recovered, because you have seen in our overall portfolio quality, we are around 18 basis points on credit cost and 40 basis points on NIM. So overall slippages is almost 5-quarter low. So from that perspective, SME is also doing well. It's just that we want little clarity that which are the industries where there could be some challenge given the global crisis. And hopefully once it settles down and the supply chain issues get sorted out, the dry powder is on, we can grow that at any point of time.
Well, good afternoon, Mr. Mondal. I wanted to understand on the liability side, the share of CASA in your deposits have fallen to around 19%, 19.5 odd percent. How do you plan to improve the CASA levels in your deposit book? And subsequently also, in terms of margin, what would be your guidance for FY27?
Good afternoon, Piyush. Very relevant point. CASA is something where our focus will be from now onwards, because so far we couldn't have launched new products, or hence didn't spend enough in terms of building the channels, because you have to take the right products to the customers. But now we have done our tech transformation, so we are going to launch 3 to 4 products every quarter. And with transaction banking also coming in, current account will also do extremely well. We are creating a separate sales channel for this. Of course, the branches will continue to do wholesale, SM will continue to do, especially on the current account side. So given all this, I think the inputs are there in CASA right now. Eventually, I think FY28 onwards, we'll see the CASA ratio growing, because when you're growing at 27% on the fixed deposit side, even to keep the ratio same where it is today, you have to grow at 27%. So I don't think we'll reach there this year, but the inputs are there and it will grow. On the NIM, I think your second question was, I think we have sort of flattish quarter on quarter on NIM, and it will remain. I've said in my guidance before that will be somewhere between 3.75 to 4%. I think we will be somewhere there in between at this point of time. And once we get clarity how the entire deposit liquidity and all of these things gets better, how the credit growth comes up in this FY, we should be able to give better clarity. But right now we are keeping it in that range of 3.75 to 4%.
Another question I wanted to ask you, I mean, CSB has one of the most pristine asset quality amongst the set of lenders, of course, aided by gold loans. But the RBI has come out with final guidelines on ECL. In your estimate, what would be the sort of provision that would be needed to be made to ensure implementation and the shift to expected credit loss model, one, and the hit on your capital adequacy ratio as well because of these new norms?
Yeah, Piyush, one thing leads to the other. So ultimately it's the same thing. We have done our analysis. Final numbers are yet to come, but broadly we are seeing that impact will be very limited. There will be some positive impact as well, because we are carrying a contingency provision and excess provision of around overall 210 crores, including 105 crores of contingency provisions. So all that will get adjusted now under the new ECL framework, and that will be the positive. Of course, the negative side will be from a ECL perspective is the SMA portfolio, the stage 2 and all that will have some play, and gold loan portfolio will also have some play, but fortunately the gold loan has been brought down to 1.5% in the, I mean, it's a little technical. So there, I think we have done our calculation and we are seeing that broadly, if you are at a CRR of 2.69%, it is not going to materially impact that much that worries us too much at this point of time. Of course, on the HTM side, we have to get a little more clarification. And that's at an industry level. We'll see how it plays out. But broadly, it is not something which is keeping us awake at night right now.
Okay. Okay, so, but this is going to be an important aspect that the street is going to monitor as well. But thank you, Mr. Mondal, so much for joining in. Always a pleasure to speak to you. So that's the management of CSB Bank as we speak. Gaurang Shah, in fact, from Geojet Investments also joins in. Gaurang, welcome to the show. Always a pleasure to speak to you.
Thank you.
We are slightly short on time, so we're going to do this very quick. Your view in terms of CSB?
Yeah, so here are all disclosures in place according to SEBI. No personal investments. Our company also have no personal investments in the recommendations that I'll be giving. No financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might have their investment interest. So we used to cover CSB some time back. Our targets were in place and currently we don't have coverage. But we have positive coverage on the entire BFSI segment, Hiral. And likewise, we like City Union Bank in the similar category and Federal Bank.
Right. Let's focus on Tata Tech. The company has come out with a strong set of numbers, a beat on all fronts. Let's get in Jasmeet to understand what has been the reason why we are seeing this kind of numbers.
Well, thank you for that, Sobat. Now, if you look at Tata Tech as a company, it operates in ER&D space, and ER&D generally have quite high valuation as growth has been slower for the company over past few months. But this company has come out as a ray of hope, given the company has beat in terms of the guidance estimate. Further, they've also seen a double-digit growth in terms of the overall revenue, and even margin has expanded 120 basis point, which is acting well for the company. If you look at what worked in this particular quarter is the order win. Company sees the full vehicle programming orders to be increasing quarter after quarter, and they see that the momentum of Q3, what they had seen in the prior quarter, continuing in the Q4 as well. While the management also guides for double-digit growth, strong growth in FY27, and the management remains confident that the overall ER&D space will grow in the similar aspect. While the overall CC growth has come really quite big compared to what IT companies have given between 1 to 2%, but this company has come out with a CC growth of 7.8 to 8%, so which is quite strong. And given the valuations are quite expensive compared to the IT companies, the company is trading in positive altogether. So this is what worked for the Tata company, and that's why the stock is buzzing in today's trade.
Gaurang, better growth compared to what other players have reported, but valuations are on the expensive side. How are you looking at this counter? Gaurang, your view on Tata Tech?
Sorry, Somit. I hope you can hear me. So we, as a disclosure, we have an accumulated stance on Tata Technologies, and it is good to see this kind of performance after a prolonged period of time. The stock IPO, I believe, was at about 700, correct me if I'm wrong, went up to 1400, and then it has been an absolute underperformer. In fact, below the IPO price currently, even if you actually go to see, if I'm not mistaken, I stand to be corrected. But we have a positive accumulated stance on Tata Technologies from the fundamental side.
Okay, delivery is another counter that remains in focus. Now this is largely, the stock is down largely because Amazon has announced on the global level that it will be launching its own delivery services for self and others as well. Now do remember that in the India business, e-commerce and other players like Amazon contribute nearly 60% to deliveries volume. So right now the street is expecting that similar services will be launched in the India unit as well, and that could lead to some pricing pressure, some competition that could come in delivery. Now when this announcement was made at the global level, the share prices of delivery companies like FedEx and UPS were down as much as 9%, and today delivery slipped as much as 4% in trade. So competition could be on the higher side for delivery going forward. Another risk that persists now for delivery is the fact that if there's an increase in retail fuel prices, that is petrol and diesel, that could also impact the margins of the company if they're not able to pass it on to consumers. So that is one counter that we should keep an eye out for. Gaurang, how are you looking at delivery given the fact that there is possibility of increasing competition and also some margin pressure could come in if there is an increase in petrol and diesel prices?
So, Somit, I think this increase in petrol and diesel is not going to be restricted to delivery. I think it will impact all the logistic companies, right? Again, as a disclosure, we have a positive coverage on delivery from a long-term point of view. And I think there is a lot of space still there for more players to come in and contribute. one player coming in a particular sector doesn't mean that other players would tend to, start showing degrowth. My sense is they can equally coexist and complement each other. So we have positive coverage on delivery. And we need to wait and see what is this status as far as the petrol and diesel prices are concerned.
Okay, so that's with regards to where delivery goes. But moving on, rising geopolitical tensions are adding fresh pressure on the air conditioner industry, with costs and demand now being key challenges. My colleague Ridhima Bhatnagar spoke to Veer Advani, Chairman MD at Blue Star, on the sidelines of CII BFSI Summit 2026. Let's listen in to a slice of that conversation.
I want to start by asking you that with the West Asia crisis, coming from March onwards, what sort of an impact has been there on the industry? We've seen an AC's cost of copper rising, and also the AC components getting more expensive due to the rupee weakening. What sort of an impact have you been assessing?
So yeah, thank you very much for having me. It's been a tough few months. Following the crisis, of course, we started with the LPG shortage, which impacted our supply chain, but very quickly that has got resolved largely by the government's intervention, and we appreciate that. Having solved the supply side problems, I think we have run into demand side challenge, and that's basically because input cost has shot up. So whether it's copper, aluminum, steel, and these apply to many industries, not just to ours. Impact of that is 8 to 10% on the product cost, which obviously is a big shock in the market. Consumers are not going to be able to afford that kind of increase. So one is industry will have to absorb some of this increase. Of course, consumers will also have to bear some of it. And really what we have to do now for the rest of the year is to focus on how to optimize and bring down that cost, because market can't grow if we're talking about cost increase of double digits. So a lot of work to be done by the industry.
Would you like to give an exact guidance on the pricing? Is it 10 to 15% or?
It depends on where, because obviously everyone has a supply chain, and everyone's got moving average price of raw materials. So you won't see a 7, 8, 10% impact immediately. I think it'll come in stages, 2, 3% every few months is probably what is going to happen. The industry, from what I know, in April has already raised prices 3, 4%.
And in March, 3 to 10% was also.
Yeah, so it's happening. Every brand is doing it depending on their supply chain. So in Blue Star, we have raised prices again in April, and we may need to do so again in the next few months. It's a moving target right now. But on the positive side, tertiary and secondary sales are up because it's hot outside. So consumers still want and need air conditioning. So we're trying our best to fulfill their aspirations and make sure that we don't pass on all this cost to them.
Right. Wockhardt, given the fact that it's earnings season going on, Wockhardt is also one of the counters that have reported a strong set of numbers. Was it insulin, biotech, which was the key product that led to such strong numbers? Before that, let's get L&T review from you, Varsha.
So overall, L&T preview, I would say the expectation is stable numbers is expected. One is, of course, one need to keep an eye on the order outlook as well. Now, onto the key highlights. Revenue growth will be supported by strong execution across core segments. Their P&M business will drive steady set of growth despite global uncertainties. Margins are expected to remain flat. This is on the back of change in product mix and of course the cost pressure. While order inflow remains healthy, but high base may impact growth. Strong order backlog continues to provide revenue visibility. Onto the segmental trends, domestic execution remains key growth driver. International business is stable, but is expected to be impacted by global uncertainties, and margins are slightly impacted due to mix of products. Lastly, the key things to watch: one is margin trajectory, order inflow growth, impact of Middle East, geopolitical developments, and of course management commentary on order pipeline and margins.
Right, Gaurang, what is that key thing or key commentary that you will be watching out for when L&T comes out with their number?
Sumit, I think we all know that they have a great order book across verticals, right? And my sense is that they are equally experienced and they have the sufficient technology and manpower to execute that. I do agree with Varsha. I think one particular portion of the order book is in the Middle East. And we heard from the management when this conflict was going on that despite of the ongoing conflict in the Middle East, there are just 2 projects where the work is going on slow space. So I don't think that there'll be major disappointment. I think it should be inline numbers. But finally, I think the commentary from the management is something that we'll watch out for. And of course, their contribution that is happening as far as defense is concerned, I think I'll be more keen on listening into that part of the commentary as far as the defense business vertical is concerned.
Okay, so the defense vertical is something that the street should be eyeing as well with regards to L&T today. But thank you, Gaurang, so much for joining in. Always a pleasure to speak to you as well and get you on NDTV Profit. But completely out of time, viewers, it's a wrap on this edition of Trending Stocks from Somit, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit for
Benchmarks trade under pressure. Nifty 50 trades below 24,000. Realty, oil and gas trade under pressure as well. Most sectors, in fact, trade in the red. And delivery is under pressure after Amazon unveiled its own delivery services, with Amazon and other e-commerce players accounting for nearly 60% of deliveries revenues. The move raises competitive intensity and margin risks. Meanwhile, Mahindra and Mahindra beats estimates, profit up about 53.5% with EBITDA also rising 18.8% on a year-on-year basis. On the currency front, then rupee hovers close to a record low of 95.41. A strong dollar and elevated oil prices continue to keep the currency on the defensive. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a very quick look at the markets right now. And when you talk about Nifty 50, it's trading with a cut of about 100 odd points. That cut, of course, is much deeper when it comes to the Sensex, about 300 odd points lower as we speak as well. But even when you talk about the sectoral picture, that's not looking that flattering as well, because realty, PSU banks, Nifty Bank, oil and gas, financial services, as well as consumption, exactly in that order. Those are your top losers as well. And, you know, of course, you do have some sectors that are doing quite well, but one stock to really look at right now is M&M. Let's go across and listen into the management commentary also coming in at this point in time.
And it is up 35% for the year. Excuse me. This is at the consolidated level across the group. And this is driven literally by all our businesses, and we've seen this continued performance across the past few quarters where all our businesses have contributed significantly. Let's start with our auto and farm businesses. Auto volume is up 19% and margin is up 80 basis points. Farm volume is up 24% and margin is up 150 basis points. In addition to that, it has been a transformational year for multiple businesses. A breakthrough year for Mahindra Finance, where PAT is up 60% after accounting for the release in provisions that occurred last year. But more than the number in terms of profit after tax, it's just the strength of the business overall. We've talked about asset quality in the past, and GS3 is now at 3.41%. Well, we've talked about that being less than 4.5. It's literally at 3.41 right now. There's been a lot of work done to bring technology and data. We've been talking about that for the last 3 years, and happy to announce that Project Udaan, which has been the flagship project for this, is completed. Adoption is 100%, and that has significantly changed customer experience as well as efficiency across the company. There's been a lot of work to put controls in place, and with all of that, Mahindra Finance is a much stronger business, has now pivoted to growth, and you see that in the AUM growth as well, which we will share shortly. Life Spaces has also had a breakthrough year with profit up 7x and a number of actions across projects that are starting to take this business to a very different level now. Growth gems have seen tremendous momentum that have again been outstanding in terms of growth. Aerostructures with a very strong order book over the last year. Little more than a year, we've got $1 billion of orders, and that is very, very significant compared to where we've been so far. And again, more than the numbers for this year, it's how it's positioned to be able to do a lot more in future. Logistics, again, a strong breakthrough year for logistics. Has broken even after 11 quarters of losses, not just for Q4 but for the entire year as well, and is again poised well to drive strong execution as it has over the last year and to get to a much higher level as we go forward. Advanced technology on a strong growth path, fueled by very strong demand that it's seeing, and a truck and bus business having completed the SML acquisition. Integrations on track. In fact, numbers are looking better than what we had planned for from an integration standpoint, and that positions the business really well. It's gained some market share also. So across the board, we've seen a very strong performance. I haven't covered other businesses, but we'll do some of that a little later in the presentation today. So at the consolidated level, revenue is up 29% for Q4. Profit for Q4 up 42%. For the year, revenue up 25%, profits up 35%. By business, you see growth gems up 50% collectively from a profit after tax standpoint. We see our auto business up 33%, Mahindra Finance 60%. I talked about AUM growth, it's at 12% for the year. And as we start pivoting to growth, we start looking at diversification as well. TechM up 14%. Our farm business, very strong performance overall, but offset by our international subsidiaries where we've exited 3 of them and we've taken impairments for the same. And you see that reflected in the numbers. So after those numbers, farm is up 13% for the year. And our investments are up 2x, driven by a gain of sale from CIE. So that's essentially the strength of all our businesses really driving the profit numbers that we have for the year. A brief summary on auto comes and talks about this in detail. SUV volume is up 20%. We had talked about growth in mid to high teens at the start of the year and have beaten that. Margins up, continued EV penetration. This is a key number. And we're at 9.6% now. And that's a great place to be. So we can round it up to 10% at this point. But 10% is still small in compared to where we want to be and where we can go from here. LCV market share also up 60 basis points off a very high base. Our farm business, you see the numbers to the top right, up 36% for the year, excluding the international subsidiaries. When we bring the impact of that impairment in, they're up 13% for the year. And that's the key action this year, in fact, in terms of cleaning out the challenges we had internationally. And that positions the farm business much better as we go forward. Market share up 30 basis points. Farm machinery is up 32% for the year. So as we just look at execution across the board, it has been very, very strong. Not just in auto and farm, but in Mahindra Finance and TechM as well, and Agro Gems. Mahindra Finance, we talked about the numbers, we talked about the AUM and the tech and controls that are in place. I mentioned diversification that will be into mortgage, SME, a few other areas, and we started to really position Mahindra Finance as the lender of choice, the financial services provider of choice for rural and semi-urban in India. And given its strength in those marketplaces, it's very well positioned to really be the leader in rural and semi-urban India. TechM on a solid path. There were specific targets laid out for F27, on track to achieve them. And what we have talked about is once that is achieved, we will lay out the plan for the next few years, which will be a further acceleration. And therefore, we see strong execution, a good team in place in TechM. And we've therefore been able to address all our weak spots that we've had in terms of getting them on a very strong footing. And that has resulted in a very consistent delivery in our commitments. We had talked about maintaining an ROE of 18%. We are at 20, but as I always do, I will say that our target is 18. We may be slightly higher or lower depending on the investments we make in the short run. At this point, we are higher at 20%, which is a good place to be, but our target remains to be 18. On EPS, we had promised a 15 to 20% EPS growth at the start of fiscal 21. And that's something that we have not just achieved, but we've beaten that quite significantly at a CAGR of 57%. We're looking at growth from F21 onwards, given the time we promised it, rather than F20, which is a low number. It's obviously we're going to be much higher off that low base. But a very strong performance across EPS growth, and the trajectory so far has been very good. As we look at the future, all I'd say is we have a strong foundation in place, a strong team in place, and we're going to do everything we can to continue the growth that we've shown so far. So as we look ahead, despite all the challenges in the world around us, we see the Indian economy on a very strong footing. Yes, there will be some inflationary pressure in the short term, but there are a number of reasons why India is going to continue to shine, and we'll talk about what those are. We'll also get into some detail on the resilience that we built to withstand shocks. And that, to some extent, is evident from the numbers that you see here, despite some of the challenges that we've seen, especially in the fourth quarter.
Another, there you go. So that's the word coming in from M&M, and they're clearly suggesting that their, logistics segment is something that they're looking at in terms of sharpening focus. Tech also is something that they've talked about as well in the trucks business right now, as well as aero and logistics. That's really doing well for this particular company as well. But let's also keep it going with earnings and talk to you about Punjab National Bank that reported a strong set of numbers in the fourth quarter as well. You're looking at profit uptick of about 14.5% on a year-on-year basis. But let's also look at some of the other earnings fine print as well. Piyush is joining in with all of those important details. Piyush.
That's right. Punjab National Bank has reported a 14% jump in its PAT for Q4 FY26 at around 5,225 crore. However, we have seen that the bank's core income, which is the net interest income, has actually come down by 3.5% YOY to 10,380 crore in the reporting quarter. The bank's other income as well has taken a bit of a hit, and other income has come down to 4,162 crore, which is down 12% year on year. The bank's provisions actually helped it report net profit. The growth that we have seen, the provisions are down around 33% to 906 crore in Q4. And the other helping aspect was that the bank has sharply cut its OPEX. The operating expenses has come down by 19% YOY to 7,042 crore in the reporting quarter. Back to you.
Absolutely, and thank you so much, Piyush, for joining us with that update also coming in for something like a PNB. So the profit, you're looking at a little bit of an uptick also coming in on that front. And when you talk about the NII, a fall that you're looking at there, when you talk about this particular counter, you've seen a little bit of a dip coming in the last few minutes, and now the stock is also edging just a little bit up as well. So that's largely the setup right now for something like a PNB. But let's also get you the word coming in for commodities, some insights as well. Before we do that, quick look at the prices. Oil prices declined, paired some of those gains from earlier as well after those sharp gains, and traders right now reassessing your escalation risk. Along with that, you do have Hormuz tensions that are really keeping some of those supply risks also elevated. And no doubts that you're seeing crude prices as well elevated. Other than that, you do have that Fujairah strike also that you're looking at. And the regional infrastructure is very clearly vulnerable right now, even at this point in time. And that's also something that's also helping gold prices as well on the flip side. So you do have Middle East tensions adding to that little bit of safe haven demand right now as we speak. Other than that, of course, dip buying is also something that you're seeing emerge just a tad bit when it comes to gold prices. But let's also put all of this into context. Anuj Gupta, commodity expert, joining us on the show right now. Mr. Gupta, a very good afternoon to you. It is looking like a very interesting setup right now, when you talk about crude prices, because on one hand, you do have prices that are elevated. And not only that, the base for prices, in fact, has been shifted by this particular war. How are you looking at all of the developments that we've seen of late when it comes to oil prices, and what do you then expect going forward?
Good afternoon. We have seen again a disruption on the Strait of Hormuz between US and Iran, and after that we saw a sharp rally in crude prices, particularly Brent and the WTI. However, since the morning we also noticed some profit booking on the both the pairs. But yes, the geopolitical tension is there that will provide support to Brent and WTI, and I'm expecting very range bound kind of thing maybe there in the prices. However, OPEC plus members decided to increase the production for the crude. That will impact on the supply, and the production will increase, so that will be provided the supply for the crude oil prices. So we are expecting a very range bound kind of thing, because supplies definitely disturb is there, but OPEC plus members increase the production, so that will nullify the impact on the crude oil. So we are expecting a very sharp range bound momentum in crude oil prices.
No, absolutely. And that said, when you talk about gold as well, there's a little bit of a rebound that you're seeing from those over 1 month lows that we've seen. On the flip side, you do have inflation that is capping gains just a tad bit. When you talk about gold prices, couple of, triggers that you're looking at very clearly emerge for gold prices. But where do you see gold also headed from here on? And do you think the fundamentals seem to be intact?
Yesterday we saw a sharp correction in gold and silver prices, and currently gold is trading around $45-50 per ounce, and on domestic market is trading around 1,49,750, and silver is also trading around $73, and in domestic market is trading around 2,45,000. So we are again very skeptical for the gold and silver momentum, because it is trading in a very tight range from last couple of days. However, central banks, decided to keep interest rates stable. They are not cutting interest rate as far. But yes, they are also saying that the inflation will be in their eyes, and they will do some monetary tightening for the in the coming central banks meeting. So we are expecting a very range bound momentum in gold and silver. But yes, it also facing some resistance on higher level as monetary tightening is there, inflation is there. So we are not expecting a sharp rebound in gold and silver prices. We are expecting sell on rise kind of strategy in gold and silver for very short term perspective.
No, absolutely, and that makes a lot of sense in terms of how you should be looking at gold prices as well. But given this entire fundamental setup that you've outlined when it comes to gold prices, what do you think is going to cause gold prices to really break out of this range that we've seen, right? You've highlighted that it's been a little bit of a range-bound trading session that we've seen of late. What do you think is going to get it to, get out of this entire rut right now?
See, for the higher side, if crude oil prices corrected and supplies will start and all the things will remain on a calm side, so that will provide the investment demand support to the gold and silver and industrial demand support to the silver prices. So if we saw any kind of calmness in the war between US and Iran, then that will provide support to the gold and silver prices. But yes, definitely, if there is any again disruption between gold and silver, and if crude oil prices again rally, that will put selling pressure on the gold and silver.
No, absolutely, and that makes a lot of sense in terms of how you should be seeing prices right now. That said, are you looking at a similar, and very quickly before we let you go also, are you looking at a similar trade setup for silver as well, or do you think that it's going to be trading differently from here on?
See, definitely silver is a part of industrial segment, and due to this crude oil, we have seen a very slow demand from the industrial side. So whenever this issue is there, that will work as a negative for the silver prices. But if there is any calmness and if there is any ceasefire or positive news, that will provide support to the silver as industrial demand will increase.
No, absolutely, and that makes a lot of sense in terms of that entire setup really for silver as well as gold prices. Thank you so much for taking time out and joining us. So there you go. That's the update coming in, and those are some of the insights that you should be making sense of when it comes to oil, gold as well as silver. But that said, let's take a look at something like a Wockhardt that is also buzzing away in trade on the back of a decent set of numbers. Now, it was a turnaround quarter that you were looking at. Look at that 8.5% uptick also coming in on this particular counter. In fact, Varsha is joining in with all of those important details when it comes to the earnings fine print here. Varsha.
Overall a good set of numbers that the company has seen, and they reported profit in FY26, making its first profitable year since FY22. So a lot of products which were in research have done well for the company. They saw strong growth when it comes to the biotech and emerging markets. Insulin based biotech products perform very well, even but of course the other income, there was a good spike in other income as well, which aided profit for the company. There was 85 crore one-time charges due to restructuring and compliance, and of course they received 35 crore from Dr. Reddy settlement as well. Now talking about the India business, which was up 18%, good growth over there, and this growth was driven by diabetes, MROC and derma products. Talking about UK, the Q4 sales were up 20% and FY26 sales were up almost 13%. Talking about emerging markets, over here also the portfolio doubled, so revenue doubled for them, and this growth was led by biotech, insulin and strong LATAM performance. So overall a solid performance that the company has seen, and it is expected that going forward a company is expected to maintain this growth trajectory.
Absolutely, and thank you so much, Varsha, for joining us with that update. So not only is it a turnaround quarter, but the growth is going to be upbeat from here, and that's also the commentary coming in from the management. The street, of course, cheering that with that 8.5% odd gain also coming in. But let's also shift focus and talk to you about a source-based story. Now, sources are telling NDTV Profit that Biocon is putting a long-term succession plan in place with Claire Mazumdar seen as a potential future successor to the founder as well. In fact, Nimit Dixit is joining in with all of those important details. Nimit, over to you.
Yes, absolutely. As we had reported earlier today, that Claire Mazumdar has been looked at as a long-term ownership succession plan for Biocon, and Kiran Mazumdar-Shah has confirmed that on social media that she's not looking to hang up her boots just yet, but this is a part of that long-term thinking as we had reported earlier today. Now, the important question is, who is Claire Mazumdar? Now, 37-year-old Claire Mazumdar Mazumdar is the niece of Kiran Mazumdar Shah. She is the daughter of her brother, Ravi Mazumdar. Now she's the founder and CEO of Bikara Therapeutics, which is listed on NASDAQ since 2024. Her academic qualification is also quite great. She holds a biological engineering degree from MIT, an MBA from Stanford Graduate School of Business, and a PhD from Cancer Biology from Stanford School. Now, what is important is sources tell us that this is not a short-term plan. It's not going to affect the management or day-to-day operations of the company. This is simply part of the company's and Kiran Mazumdar Shah's long-term thinking for a replacement. And as every company does, they are planning for the long-term, but she is being looked at primarily as the long-term ownership head for Biocon in the future.
And thank you so much, Nimit, for joining us with all of those important details. But you have another source-based story from us. In fact, you're gathering from your sources about former IndusInd Bank CFO also moving to Bombay High Court over the alleged unlawful exit. Let's also talk about that one.
Yeah, absolutely. So what we understand from sources is that the former CFO of IndusInd Bank, Gobind Jain, has filed a case against the bank for unlawful exit. He has claimed 70 crores, 20 crores, of course, as payment for unlawful termination. He's saying that a lot of equity benefits, etc., have been taken from him because of this termination, which was unlawful, which he calls unlawful, and 50 crores as reputational damage. Now, what he says is that he wants to be restored to the role. And he also says that the termination process ignored a lot of contractual safeguards. The petition was also taken as a measure of false allegations that were made against him and an unfair process that was made. He also says in his petition that the banks acted without completing internal checks. This plea sort of flags accountability of the board and top management in this termination and says that there was an unfair, obscure process that happened, and he's claimed these damages. Now, what is important to note is the matter is yet to be moved in the Bombay High Court while the plea has been filed and seen by us. We are waiting to see when Gobind Jain will move the court to claim the plea that he's seeking here against IndusInd Bank.
No, absolutely, and thank you so much, Nimit, for getting us all of those very important details. So there you go, that's something to look at in terms of IndusInd Bank as well. But let's also talk about delivery that is back in focus after Amazon announced plans to open up its own delivery services. Now, the stock has taken a knock of about 2.5%, and this announcement deepens competition in the logistics space. You do have Amazon and other e-commerce players that are contributing close to 60% of deliveries revenues. The move, in fact, raises questions around pricing power, client concentration, and you do have volumes that may stay intact, but the competitive intensity nonetheless is clearly set to rise, keeping margins and long-term differentiation really firmly under the street's scanner, and the stock as well on a scanner with that 2.5% odd downtick also coming in for this particular counter. But with that in mind, let's also move on and get you the latest coming in on one of the most defining political moments in recent Indian electoral history. In fact, the BJP has announced that its oath-taking ceremony is going to be happening on May 9th. And this is after a landmark lotus bloom in the state as Mamata Banerjee lost a state that she ruled for 15 years and her bastion as well in a high-stakes battle. So that's something that you're looking at. When it comes to West Bengal, Suvendu defeated Mamata in the key election battleground of Bhabanipur in a state where the BJP had almost no foothold, mind you, a decade ago. So that's something that you're looking at on your screens. Of course, you can see some of those celebration visuals as well. But let's also talk about Vijay scripting history in his electoral debut. And post-poll allies will help the TVK-led government also come to power. So that's also something that you're looking at. Talking about Assam as well, BJP is leading here as well, and they've bagged a lot of seats, as you can very clearly see, 102 seats thereabout of the 126 seats to retain power for a third straight term. And that's an important update that you're looking at when you talk about Puducherry as well. The National Democratic Alliance is set to form the next government, securing a comfortable majority in the 30-member House as well. Meanwhile, the biggest ideological defeat may be seen in Kerala, where the left lost their last bastion in the country. Congress-supported UDF is set to form the government, but BJP as well opened the account, and it's quite the comfortable sort of opening of this particular account that you're looking at, and the last bastion remaining for the left also lost now with Kerala. So that's the latest that you have coming in on the election front as well. But that's all the time that we have on the show. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So what's on the show today? Firstly, we'll be getting you an exclusive interaction with Senco Gold. Now, why this company is important? Because it has a massive footprint in Bengal. Nearly 105 stores are located in Bengal out of the 196 stores that the company has across India. Around 7, and then we'll be also speaking about Dynacon's system. Now, they have won a major RBI project worth around 751 crore rupees, and that stock has been buzzing on that. Apart from that, we'll be also discussing on stocks like EMS. Now, they have received a letter of acceptance of around 144 crore for UP Jal Nigam, and that stock has been buzzing. Gopal Snacks is another counter which has been gaining in trade for the third consecutive session. Volumes are strong, around nearly 3.4 times its 20-day average. And lastly, we'll be also speaking about Make Money Organics. That stock has been gaining on the back of the approval that the company has received for nano fertilizer. Even volumes are quite strong on this counter, nearly 7.5 times its 20-day average. So this is broadly that we'll be discussing on the show today on the small cap show. Now if you look at the markets, the Nifty, we have seen a strong recovery from the day's lowest point, but at one point of time we had fallen below the 23,900 level. Currently we are again holding on to 24,000 level and the market, which is a good point at this point of time if you look at. Even apart from that, if you look at the sectoral indices, it's the Nifty Defense and Nifty Metal which has been gaining in trade. On the flip side, it's real estate, consumer durables and banking index is also slightly weak compared to what the benchmark has been doing. Small cap and mid cap, strong performance there compared to what the benchmark has been doing. But Varsha, which are the key stocks that have been gaining here?
A lot of stocks are actually in focus. Let's start with Omax Auto, wherein stock is buzzing. This is on the back of volumes. The volumes are trading at 27 times of its 30-day average. You have MMP Industries as well, which is in focus. Of course, volumes are 10 times of its 30-day average. Garuda Construction, if I were to talk about, is buzzing on the back of volumes of 5 times. There you go. The stock is up almost 11% in trade. Even NACL Industries is also buzzing. On the loser side, though, you have Southwest Pinnacle Exploration, which is under pressure. Also, you have Nath Biogenes, which is under pressure. So, two stocks under pressure, and a lot of stocks are actually gaining. There you go. Nath Bio is almost down 7.8%. But one stock, which is in focus is Senco Gold. Before we start our small cap buzzers, here is an exclusive chat my colleague Sharad had with Senco Gold Management, a company which is highly focused in West Bengal, and with the change of wind in the state, let's hear the management's view.
We are at Senco Gold's important showroom in Kolkata in the Molali region, and interestingly the company is one of the largest players in the jewelry segment. And to understand a little bit more, and of course the sentiment which is there in West Bengal right now, we are joined in by Suvankar Sen, the CMD of the company. Good afternoon, Suvankar da. First question is, how's the sentiment looking like, the business sentiment overall for West Bengal right now?
So I think that, with whatever is happening currently, the sentiment is very positive. It is filled with optimism, a lot of hope, a lot of expectations that yes, there will be a resurgent. We will be seeing that Bengal always had the potential, had the skill, had the knowledge, had the want. But somehow there was a perception challenge. There was a lack of capital availability. There were certain hurdles and hindrances that was not letting it go as much as it could have. But now with the alignment where we see the state and the center aligning, there is some hope that yes, this is the time for Bengal to rise again.
Right, it's a very important point, Bengal's time to rise again. But let's talk about the industry perspective. I'm seeing a lot of jewelry products over here. How is the jewelry industry taking this, announcements? How the public mandate has changed for the state, for the jewelry industry as a whole. Of course, you are largely concentrated in the Eastern India. How do you see that?
See, Calcutta and Bengal has been one of the pillars in the jewelry industry, because the skilled craftsmen, the karigars, they come from the districts of Hooghly, Howrah, Mednipur. Whichever part of the country you go in, whether be it in diamond jewelry or gold jewelry, it is the Bengali karigars that have always been the behind the scenes people. They are the Vishwakarmas. And, they have always been, looking for jobs. Bengal is providing jobs, but then they have to go to the other states, other cities to look for those opportunities. But now I think that with the focus coming back to Bengal, they would be in a challenging situation for the people outside, that yes, the people would want to come back home. They would want to see infrastructure happening, investment happening, factories happening. And I think that for the industry also, there are challenges. The gold prices are at, all-time highs. The volumes are coming down. So how do we ensure that the skill and the future generation karigars are also trained and motivated and preserved? So I think that there is a lot of discussion. It's not that we are talking something new. In the last 2-3 years, there have been discussions with the state, the center, that how do we improve the skill of the people? How do we make much more clusters in the state in which they could get, jobs? Employment gets created. So I think that all those things that have been planned but is yet to be executed fully, this is something that could be executed, and that will really make the industry stronger, because overall India is planning to be the jewelry center of the world.
Well, that's a very important point, Shivankar. But just come back to your company also. Of course, Q4 numbers are not out yet, but how the outlook is looking like right now in terms of your expansion plans, and also give us a little bit of flavor on the lab-grown diamond front. Both of these questions.
So see, Q4 overall, if you look at the growth rate, it's been around 25-30% growth. Even we just ended April Akshaya Tritiya season, and I must tell you that we've seen a 50% growth and above 50% for the overall performance compared to last year. So I think that even though the prices are high, if we are making the right kind of jewelry, what the customer wants, and within their budget, then the sales will continue to happen. And the promotions, the old gold exchanges, the monthly installment schemes, it's just going to make easier for the consumer to plan and buy over the years. So that's how it is. We have to focus. We've launched 9-carat jewelry, which is making jewelry affordable. We're focusing on diamond-studded jewelry, which is in 14-carat, 9-carat. So it's cheaper and it's much more stylish and fashionable. And the penetration into the tier 2-3 towns and cities. So I must tell you that Senco has been one of the pioneers in the franchisee business for almost 20 years. And how did we all start? From Calcutta, we penetrated into the tier 2-3-4 towns of Bengal and East India, Orissa, Bihar, Jharkhand, Assam. And today we have almost close to 200 stores. So that's been our focus on tier 2-3-4 towns and cities. And I think that if the correct product is manufactured by our skilled karigars, then growth is not a problem. And as far as lab-grown diamond is concerned, it is a future. Like we will see people buying gold also, silver also, diamonds also, but lab-grown diamond will stand for fashion. People have the desire, the aspiration to own bigger size diamond or to wear bigger size diamond. With natural, it gets a little expensive. So that dream and desire can be fulfilled by a lab-grown.
All right, very nicely put up, Shivankar Da, and very candid as usual. It's always a pleasure to have you with us at NDTV Profit.
Thank you.
Well, that was an exclusive interaction coming in from Senco Gold, who's saying that the business environment and mood can improve going forward. Let's get in Avinash's view on this. But before that, Avinash, a very happy birthday to you.
Yeah, Somit. Actually, my birthday is tomorrow. So I don't know how people have started wishing me today. Anyway, Somit, thanks for the wishes. Somit, as far as Senco Gold is concerned, I think, it's been a very good, strong market performer in the jewelry segment. I think the elections which have ended now clearly give a better and a much stronger visibility to the entire state. And there is a very strong possibility that the government could now recharge the state with a lot of infra, a lot of investments, from investors outside the state of Bengal. So definitely, I think, this is definitely a good positive news. Apart from Senco Gold Jewelry, this market presents a very large opportunity, which I think going forward, obviously progressive managements will take advantage. So net, it's good. I think longer term, definitely prospects appear to be quite promising.
Right. Well, moving on, EMS, let's pull up that stock. The stock was up almost 6% in trade. There you go, 6% in trade. This is on the back of order win. Well, to speak more about it, let's bring in Jasmeet to give us more details.
Well, thank you for that. If you look at EMS as a company, the stock is buzzing in trade. That's on the back of that recent order win that the company has received. But before we get into the order win, let's quickly understand what does the company do. Well, the company operates as an EPC network where they provide turnkey solutions for water waste management and sewer systems. Now, if you look at the stock performance, the stock is nearly up 26% over a month. We see a rally coming in the particular counter. But when you look at over the 6 months, the stock is on 23%. Over a year, the stock is down nearly 40%. Now, let's quickly talk about the recent order win. Well, the company receives an order from UP Jal Nigam worth rupees 144 crore, and the order is to make the sewer systems in Varanasi. Further, if you look at the overall order win compared to last 2 months, the company has won nearly order worth 208 crore in the month of April alone. Now, in terms of the Q3 financials, the financials remained weak for the particular counter. The net profit is down nearly 60%, but the overall top line also has suffered and been flattish on quarter after quarter. Now, in terms of the overall outlook, we look at the overall company says nearly 30 to 40% of tier 1 cities have a maintained sewer system, but rest needs development, where the company sees a huge order potential going ahead. Further, the company sees some kind of delays in the previous quarter. The Q4 is something to watch out for. How does the delays have panned out, and if the delays have really shifted up into ramping up and company's top line is improved. Well, lastly, if you look at the overall Q1, management expects the Q1 to see a rebound in terms of the overall slowness in the past 2 quarters.
Well, thank you so much, Jasmeet, for all the details. Avinash, there was a time when EMS used to buzz a lot, and then there came a time when the stocks saw so much of pressure considering the problems in the water infra projects. Now coming back to 2.0 Jal Jeevan mission and all that, now the shift has been towards the water projects. What is your view when it comes to this counter and of course the overall sector?
No, I think my sense is, Varsha, the revival in this sector has started. The government has also, revitalized the Jal Jeevan 2 package program, which presents a very large opportunity. But I think, one thing which is very important is these are all government projects, and therefore the working capital and the cash flow, receivables in this, in this business take a very long period of time. So basically, EMS has been in this space for a very long period of time. They've been able to, bag fresh contracts and sit on a reasonably good, healthy order book. So my sense is FY27 should be a significantly better year. But most importantly, I think in terms of the quarterly performance for the last 1 or 2 quarters, numbers were very disappointing. So I think the markets would obviously give the stock a little more re-rating once they see little more visibility in the numbers. And once quarterly numbers, especially June and September numbers, actually get better than the previous 2 quarters. So my sense is, investors who hold the stock should hold on. It's more of a long-term structural story. And our sense is that anything, between the next 12 to 18 months, I think one could definitely expect a decent risk reward because the stock has corrected from its previous 52-week high. So business apart, definitely the management has the bandwidth and I think it should do well. But you'll have to hold it for the medium term.
Right, Jasmeet, while you are with us, also give us some detail on Dynacons. They have also seen a big order win coming in here. I believe a couple of days back, few days back, there was yet another order win that was announced by the company, right?
Well, right, Somit, absolutely. It's a very interesting counter, must say. If you look at the overall company, it operates as IT integrators, and the stock has nearly rallied 28% over last 1 month. If you look at the key structure of the stock is nearly up 670% over the last 5 years. So we see a good rally coming in this particular counter, but given that it's an IT stock and IT stocks have suffered a lot in the past couple of years, this stock is performing opposite of what market is performing. Now, if you look at the order win, as you rightly mentioned, the company wins its largest ever order win ever in the history of the company, where they win an order worth to be 750 odd crore, and this order is coming from RBI. While the particular order is for the data center service, where they'll provide the service of installation as well as maintaining the entire private data center for the particular counter. Now, in terms of the order, this order is expanded over next 5 years, and the overall revenue expected to flow into the company over the span of 5 years. We look at the market cap of the particular counter, it's 1.6 thousand crores, and winning an order with 750 is something that's pulling the stock upwards, and there's a rally in the stock. Now, in terms of overall Q3 performance, company had a decent Q3 where the revenue grew by 10% and the profit also saw a decent jump of nearly 28%. But management does make a note that the overall data center demand has been increasing quarter after quarter, and in Q3 they see the overall data center business growing from 18% to nearly 37%. Now, in terms of the order book, as of the December stands at 2,800 odd crores, which is expected to ramp up in next 2 years. Now, in terms of the overall export revenue, company nearly has 35% of its revenue coming from the exports, and even company has market clients like Facebook, Meta, Uber, S&P Global, and as well as Google. Now, in terms of outlook, management remains key focused to expand the business in India and then move on to specific Asia countries and then further to Europe as well as Middle East. Now, in terms of the lastly, look at data center and private clouding is something that's helping the company to pull up and the company's momentum. While the key question remains, after this huge rally in the stock over last 1 month and last 6 months, is it still an interesting buy?
Right. Well, that's the question that we'll ask Avinash about this. Avinash, do you think it's a good time to enter this counter after the recent rally that we have seen?
No, I think, clearly the stock is basically zooming up largely because of the fact that the order book is very strong. The target segment data center business is also growing very rapidly. the stock has definitely gained significantly. So, Somit, I would say that at these levels, if one were to invest, it's better to look at buying in a staggered approach because the base is small and the opportunity is very large. And I believe very few players operate in this segment, so the company has got a significant amount of lead in this market. So I think I would prefer to buy the stock, but in a staggered manner and keep a time frame of at least next 12 to 18 months because incremental orders which have come in now, the real impact of that would be felt in the second half of FY 26-27. So structurally we are positive, but buying should be in a staggered manner.
Well, with that, let's slip into a short break and we'll go on to our next small cap stocks on the other side of the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade.
Welcome back. You're watching Small Cap Buzzers. Now, shifting our focus to next small cap stock, which is Make Money Organics. Well, the stock is buzzing. There you go. The stock is up almost 10%. This is on the back of company receiving approval from the Ministry of Agriculture. Now, this is for nano fertilizer products, which include your nano DAP, nano NPK, and nano zinc. Now, these products will be manufactured in Gujarat facility of a subsidiary company. No additional capex needed for this products. Commercial production to commence during Kharif season. Now, talking about the other business highlights or other key highlights of this company. No major capex is being planned for the next 2 years. Focus is on maintenance and de-bottlenecking. Talking about the different segmental outlook, crop protection, where the current mix is 60% of technicals and 40% of formulation. The focus is on increasing formulation share, which will offer better profitability and utilization for the company, and the sustainable EBITDA margin has been guided at around 15 to 17%. Talking about the next business segment, which is pigments, well, improvement is expected from Q1 FY27 because this segment was under pressure due to various reasons, and the renewable benefits will be visible from Q2 and Q3 of FY27. Target EBITDA margin over here lies around 8 to 9%. Talking about crop nutrition, export growth is expected in FY27, and the scaling will depend on, of course, the regulatory approvals. But more or such, the stock is buzzing on the back of approval from Ministry of Agriculture for various nano fertilizer products. Avinash, what's your view on Make Money Organics, and what will you advise to investors considering the huge run-up that we have seen?
No, I think, Varsha, the opportunity in the nano fertilizer space is very large, and in fact, these are specialized fertilizers where the spillage and wastage also is very minimal. The government of India is actively looking at using nano fertilizers in a big way for the farmers, and this definitely will be a big boost for Make Money Organics. They have been working on this product for a very long time, and their own R&D has helped them develop this product. Our sense is that we need to see some visible numbers from the benefits of this nano fertilizer product, which the company has got approval. Most importantly, this year will be a very important year because in the current year the IMD has mentioned that this year the monsoon forecast may not be all that great, and typically the first half for most pesticide and agrochemical companies is very important. So we'll have to wait and watch. Definitely the long-term prospects are good, but in the near term, I think we need to see visible numbers from the benefit of this nano fertilizer product approval which the company has gotten.
Marico has reported its numbers seems to be pretty much in line with what the street was anticipating. Net profit has come in at close to 391 crore as against an estimate of 392 crore. If you look at the top line, again bang on in line with what analyst estimates were. Revenue at 3,333 as against 3,325. EBITDA has come in slightly lower, but not much of a miss here. 521 crore as against 533. While margins are also at around 15.6% as against 16.1 estimates of the street. I think the key here to watch out would be what is the commentary coming in from the management on raw material. I believe the press release is still not out, so we'll have to wait and watch for that. But Mahima, we'll get in Mahima anytime soon to give us more detail on this one. But what I can see from the numbers as of now here is the fact that the company has reported an inline set of numbers. EBITDA has come in pretty much again similar. Advertisement cost is advertisement cost has also remained largely stable. Now this is something different than what we had seen for other FMCG companies where they had increased their advertisement cost on a YY basis. It has increased, but not much of an increase. In fact, on a sequential basis, it has come down. Revenue seems to be again in line, and other expenses now that has shot up from 350 crore to 420 crore, and on a sequential basis from 370 to 420. So that is one thing that we need to get a clarity on, whether is this because of forex loss that the company had seen, or is there any one-off in that item. From 370 this has increased to around 420 odd crore rupees on a sequential basis. Tax expense also looks pretty much stable compared to what the pretty much stable on tax expense as well. But Mahima, anything that you're picking up from from the Marico numbers firstly?
Yeah, so Somit, like you said, right, it is largely in line, in terms of where the estimates go. So revenue is seeing an uptick of around 22% which was expected, and that's the number that has largely come in for Marico. In terms of EBITDA margin, that has come slightly lower as compared to what the street was expecting. The expectation was of a 16.1%, but it's come in at that 15.6%. Largely, this is on account of the crude oil prices going up, impacting the raw material inflation, and that's probably causing the pressure on the margins. The net profit is seen an uptick of around 14%, which was also something that the street was expecting earlier. So even net profit numbers have largely been in line with what the street has been estimating. EBITDA number has come slightly at the lower end. The expectation was of a 16 odd percent uptick, but it's coming at that 14 odd percent uptick mark. So we've seen in the past couple of quarters, EBITDA growth has been slower as compared to the top line growth, and largely this is on account of raw material inflation, which the company is facing. And like Somit was mentioning, both HUL, even HUL had gone out and said that they're not going to go very big on advertisement costs. Looks like the same for Marico as well right now. In terms of the percentage of advertisement cost to revenue, that has not significantly gone up. So I think and as that is compared to a year-on-year basis number, that has also not gone up much. It's just gone from 114 odd crore to 133 odd crore. So overall advertisement costs have also not gone up, but largely I think the numbers seem to be in line with what the street was expecting. Of course, we'll wait for the press release to come out to get us more perspective on how volume growth has been like, and overall the commentary I think will be important. Watch out for something that we'll be watching out for will be Q1 FY27. What are the price hikes that they're going to take? Because the entire for Q4 they would have had inventory in place, but Q1 FY27 is where they're going to have the inventory impact of this entire West Asia conflict. So that's of course with regards to where Marico goes. They've also declared a final dividend of 4 rupees per share. The stock of course is not reacting well to the earnings. It's down 2.7% as we speak. At its day's low point, it was hovering throughout the day in that one line, but it's now come down and trading around 2.5% lower, probably on because of the way FMCG companies have come out with their earnings, this is largely in line, not beaten the estimates. All other companies like HR and Nestle have kind of beaten the estimates and have seen up move coming in those counters. But Marico is seeing a downtick of around 2.5% as we speak, Somit.
Right, thank you, Mahima, for that. Avinash, quickly your view on Marico numbers firstly.
Well, I think inline numbers, Somit, typically on the EBITDA as well as on the top line growth. But I think what is crucial is, what kind of cost push inflation impacts the company in the coming Q1 of FY 26-27, and what is the outlook on copra prices? What's the outlook on other petro-based raw materials? I think the markets would definitely like to hear this in the conference call commentary, which is scheduled. And I think the outlook and the price increases which the management will take will decide the future trend of the stock. But on a longer term basis, yes, the company has done well. Post results, this was expected, some selling. But I think once the con call is over, you will get a better view. So we continue to maintain a hold.
Well, thank you, Avinash. Thank you for joining us and giving us your view on all the stocks that we discussed, including Marico. Well, with that, it's a wrap on this edition of Small Cap Bazaars. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it mattered.
And in the second half, we'll see capacity addition of, I think, 4,000. Please correct me if I'm wrong on your EV capacity addition for FY27. So is it more slightly slower than your earlier plan because you are already running at quite high capacity utilization already for the EVs, and you mentioned the number for the 9S as well. So if you can give us some perspective on that, and is it that the Nagpur facility, once it comes in, will also, of course, help you with the EV capacities on that? And the second question, just on tractor growth, we've seen FY26 be a record year, and congratulations for all the success in that sense. Is it that we could expect some revision in the second half based on how the first half goes, as we saw in FY26? And within the growth, are you seeing that LCVs within the smaller space continue to see that higher growth because GST rate cut that we've seen almost 6 to 7 months ago? Thank you.
I think now you said one question per person, but I found some 4 questions there. So I'll just try and do these very quickly. So we're not seeing a slowdown in EV capacity utilization. It is in line with our plan. So we had, when we announced the launch of the 9S, said that we'll go up to about 8,000 a month. Right now we are at a little over 6,000 a month. So over the course of the year, the 6 will move to 8. And then we add 4 as we go into the next year, which is by which time we'll have a new product launch. So as we get into F28, it will be 8 plus 4, 12. So that's broadly what it is, and that's in line with our plan, which will be roughly 12 a month, about 140,000, which is what we had spoken about at the time of launch, that will be somewhere within that range of 100 to 150, 200,000. So we are roughly on that ballpark. Tractor industry, as we've said often, you have to keep updating it as we go along, and we will once the monsoons come in and we see what's happening. At this point of time, this is our best forecast, which is mid-single digits. LCV momentum continues to be very good, as we've seen after the GST drop, and you're absolutely right, that momentum is very strong. At this point of time, we are pegging it at high single digits. The reason being, we don't know what will happen depending on how much price increases are necessitated because of inflation over the next few months, and whether that may have a slowdown effect. But at this point of time, LCV is growing faster in double digits. But we've kind of assumed that there will be some price increase, and that may moderate demand.
Hello. Yeah, hi. If you can just provide some outlook for your complete CV portfolio for your pickups, LCV, and also your SML businesses. That is one. And second question, during the slide, explain Mahindra Finance's less than 5%.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to
Welcome back. You're watching Ask Profit here at NDTV Profit. We were just talking about the Marico earnings, and the press release has also come out. Just to give viewers a perspective from that end, overall Q4 volume growth has stood at that 9% mark for FY26. The volume growth has stood at 8%, which is the highest in 7 years. For international, constant currency growth has been at 20% for FY26, which is the highest in 14 years. Overall, like I said, Q4 volume growth is at 9%. They've also gone ahead and given guidance. They have said they expect to sustain high single-digit volume growth in FY27, expect to deliver mid-teen constant currency growth in FY27, and this is in terms of the international business. Aim to achieve double-digit revenue growth and to cross 15,000 crores in FY27. Aspire high-teen EBITDA growth in FY27, subject to stable macros is what they've said. So this is the outlook that they've gone ahead and given in their presentation. And they've also, of course, talked about the raw material pricing and the way things have fared in terms of West Asia conflict. But overall, the medium-term guidance is that they are accelerating towards a 20,000 plus top-line growth by 2030. That's the overall vision that they've mentioned in their investor presentation that they've come out with, which is an important one to note, because they've gone ahead and given a guidance, specific guidance of 20,000 crore by FY30 is what they are aiming at. So this is the overall view that we have on Marico. The stock, of course, did tank to almost 2.5%, but on the back of positive guidance, we're seeing that recovery in the counter coming in. There you go, beautiful recovery coming in the Marico charts. Now just trading around 0.9% lower, and probably as soon as these lines unfold, we'll see some recovery coming in the stock as well. Let's try to take a perspective from our guests as well. We're now joined by Radharaman Agrawal, who's the Managing Director and CEO of Swayam Capital, joining us now, and Gaurav Sharma, Associate VP and Head of Research at Globe Capital, joining us now. Welcome to both of you, gentlemen. Radharaman, your quick view, if you've had the chance to take a look at Marico earnings, what is the initial reading for the same?
The Marico anyways issues sales updates, so by and large that piece was anyways factored in. But I think good piece what we look at is the whole guidance. So we might have to deep dive and understand what guidance they are giving, but it seems positive in terms of growth, and by and large I think they have delivered a good set of numbers. So it looks positive for moving ahead, and the guidance seems very encouraging.
Absolutely. I mean, they've said that they're poised to deliver double-digit revenue CAGR by FY30, and 20,000 crore plus top line is what their vision is for FY30. So most certainly a positive one coming in for the fundamentals for sure. But Gaurav, any view on the charts for this one? There's again some tanking that we're seeing right now, but overall your view on the charts for Marico?
Hi, Mahima. Very good afternoon to you and to all the viewers of NDTV Profit. On chart, the stock is looking impressive. It has done well for itself in the past. Clearly outperformed many of the FMCG peers. Still, it is holding ground, trading close to its record highs. One should maintain a long position till the stock is trading above 740 levels. A level beyond 810 will take it towards 900 in the next 1 to 2 quarters.
That's the overall view coming in on Marico. The stock now seeing a downtick for around 1.8%. But let's start with all your stock related queries. For viewers who are tuning in, you can either WhatsApp us or call us on the numbers that are flashing on your screen up there, and go ahead and ask all your stock related queries. The first query that we have on the show is from Lalita, who's writing us from Hyderabad, asking about Suzlon. She's got around 1,008 shares at the levels of 39. Wants to know if she can go ahead and buy more from a slightly long-term perspective. Radharaman, would you recommend that?
She can maybe add to that extent. If you look at what has happened in the company, also what is moving out, so it makes sense to basically add to this extent, and she can add to the positions what she's holding on.
So that's the view coming in on Suzlon. The next one is on Sona Comstar. This is from Mahesh, who's writing us from Andhra Pradesh. He's got around 50 shares at the levels of 480. Says that he is already sitting on 19% of profits. Can he continue to hold this one from a long-term perspective, or should I maybe average at the current levels to continue to hold? I'll stick with you for this one. Radharaman, your view on Sona BLW?
I think he should hold on. He should not add at these levels, but from a medium to long term perspective, I think he should continue holding the stock.
Okay, all right. The next one that we have is coming in, and this is on PNB. Our viewer wants to know if this is the right time to make an entry. Kiran from Bengaluru, by the way, is asking. Gaurav, your view on the charts for PNB, is this the right time to make an entry?
Otherwise, we are very much bullish on the PSU banking pack, including PNB, but this is not the perfect timing. I believe the stock would come down a little more. 100, 102 is a better price to add up to the position. At that point, he can consider adding up, taking a stop at 90, and then holding the stock for the next couple of, say, months or so. He can expect targets close to 130 odd levels.
Okay, all right. So that's the view coming in on PNB, but I think we've got a first caller for this afternoon edition. Anjali is calling us from Hyderabad. Anjali, a very good afternoon to you. Go ahead, ask your question.
Yeah, hi ma'am. Good afternoon to all of you.
Good afternoon.
Yeah, I'm having a lot of slabs of 400 quantity at 1050 average. So in the short term, what is the target?
Okay. All right. Okay, got your question. Sorry, Anjali, just to get things straight, you're looking at the charts while looking at Laurus Labs, or did you see the fundamentals of the company?
Charts only I look at, ma'am.
Charts only you look at. Okay, all right. Gaurav, your view on Laurus Labs, where charts are concerned, she's already sitting on certain profits. Should she continue to hold?
Well, the stock came up with reasonable set of numbers on all fronts, top line, bottom line, margins, etc. The stock is doing good. It has done well in the past, trading at its lifetime highs. I think she should continue holding her position. Already she is in a 10% profit. Take a stop at somewhere around 1090 levels. Hold your position. Look for targets close to 1250 odd levels.
Okay, all right. The next one that we have is coming in on City Union Bank. This is from our viewer. Sorry, it's on Vikram Solar. From a long-term perspective, our viewer wants to know if a fresh entry makes sense right now or not. Gaurav, any view on the charts?
I'll suggest the viewer to wait for some more time. The stock is in a long-term downtrend. I do not see any meaningful signs of any reversal coming in. A breakup of 240 would likely take it towards 260 and higher levels. So wait for the breakout to happen, then only enter. Otherwise, just leave the stock. There are other more better stocks to invest in as far as solar is concerned. You can consider Vari from that. Renewable energy point of view, you can consider Suzlon.
Okay, all right. The next one that we have is from Satyan, who's asking about Shyam Metallic. He wants to know, yet again, a short-term question, whether he can go ahead and buy this from a short-term perspective, say for 1 month, for a return of around 5 to 8% is what he's asking. Do you think that's possible on the charts for Shyam Metallic, Gaurav?
Yes, Mahima, this is pretty much possible, but buy on the breakout point, and that is 910 is a breakout level. Wait for some time, buy above 910, and you're looking at a profit of somewhere around 940 as the immediate target. Thereafter 960. Both these levels are possible in a 1 month's time frame.
Okay. By the way, viewers who are watching us, you can also call us on the numbers that are flashing on your screen up there. It will be flashing in a while, by the way. That's the WhatsApp number where, of course, you can go ahead and text us, but also call us on the number that will be flashing on your screen. There you go. That's the number where you can go ahead, call us, ask your query live. The next one that we have is on CESE. 10 shares bought at the levels of 156. Can I buy more from a long-term perspective is what Shashank is asking. Radharaman, your view on CESE?
I think it's a very positive stock. The development also which happened in the state of West Bengal also, I think that also have a positive rub-off. In fact, that's the reason I think the stock went up yesterday. But it's a good stock to own, and I think it's a good sector. So I think the person can add.
All right. So that's the view on CESE. The next one is from Uma, who's writing us from Bengaluru, asking about data patterns. She's got around 6 shares and the buying price is 3870, and this question is directed towards you, Gaurav, specifically. She's saying that ask Gaurav that on the charts whether she can add more and based on the charts at what price she can go ahead and average this counter. Do you think that's advisable? One thing, if yes, what should she do?
Firstly, I'll directly direct it to Uma here. Uma, the stock is trading in a strong uptrend. The uptrend is fairly strengthened up on back of strong volumes. Results are still awaited. I would prefer to wait and look into the results first. As of now, I'll suggest you to take a stop at a closing stop rather at 3850. Hold your position, and once the stock manages to go past 4,300 mark, you can start gradually adding it. So buy on the rise is what I'm suggesting.
Okay, all right. So that's the view on data patterns. The next one is on M&M. We just saw the earnings fine print of M&M, and Dr. Lavanya from Eluru is holding around 200 shares at the price of 3160. Wants to know the short-term target on this one. The stock currently is trading around 1.2% higher. Gaurav, your view on the charts, can she continue to hold? What should she do? Add more?
Absolutely. It is one of the strongest players in the Indian four-wheeler industry as of now. 3,300 is the immediate resistance that I am looking at. This lies as to the confluence zone of 100 and 200 period exponential moving average. So certainly stock will face some kind of resistance around this zone. Once that is taken out, it will head towards 3,500 and higher levels. So hold and add above 3,300 is what I'm suggesting.
Aruna calling us from Vijayawada. Aruna, very good afternoon to you. What's your query about?
Yeah, very good afternoon to all of you, ma'am. Thanks for having my query. And I'm having CG Power, so I wanted to sell in the short term. So my average is at 680 to 100 quantity. So what is the target to sell?
Okay, got your question, Aruna. I'll take this up with Gaurav then. Gaurav, she's looking at a short-term view on this one. She says she wants to know the right target price to exit the counter. And as far as the charts go, if I'm not wrong, there is a momentum that's picked up. Would you agree to that? And if yes, what should be the target price that she should continue to hold the counter for?
Absolutely. The stock is having good momentum here. A steep vertical rise from 640 to close to 840 levels seen in just about a month's time. Now it is all set to trade near its previous resistance mark, that is 875. So that happens to be the immediate target that I'm eyeing at. Again, the stock is due to come up with their numbers. So the viewers should keep a close eye on that, because that may lead to certain volatility. And if in that volatility, the stock rises up to 875, that is the point to take some profits off the table.
All right, okay. We've got Jose who's calling us from Kerala. A very good afternoon to you, Jose. What's your query about?
Madam, I'm having 6,000 plus shares of Sigaki Industries. My average cost is about 34. I would like to know the prospects of this share.
You want to know if this will be a profitable position or not, correct?
Yeah.
Okay, all right. I'll take this up with Radharaman. It's trading at 20 rupees right now. It's a small counter. Any view on this one, Radharaman?
So difficult. I don't have any understanding of this company. So
Sure, I'm sure it's a very small counter to even track. But Gaurav, any view that you can probably give on the charts?
Even we have not tracked it that closely, but what I can sense is from the chart is that stock is in a very, very poor condition. It is in a long-term downtrend. I'll advise the viewer to get rid of the stock, utilize any bounce towards 22 levels to exit your position.
Okay, all right. So I hope that solves your query, Jose. The next one that we have is on LNT. Kohinoor is asking this question. Wants to know from a 3-year time horizon, what should be the outlook and probably an expectation of a target price. Radharaman, your view on this one?
I think LNT is a very good counter. The volatility which are going on is happening because of the crisis with the Gulf War. And I think with this getting sorted over a very long term, the stock should give a very good result. And it's more of volatility which is happening in the Middle East. The stock is taking a beating, so I think it's a long-term very good buy.
Okay, the next one is from Kiran, who is writing us from Bengaluru, asking about a long-term view on Piramal Pharma. Would you recommend an entry into this one, Radharaman?
It seems like Piramal Pharma and ITC. ITC looks a better bet as compared to Piramal Pharma to that extent. So I would not like Piramal Pharma, but like to take a bet on ITC. I think that's a good stock to own right now.
All right, the next one that we have is on Colgate Palmolive. This is from a person who's writing us from Hyderabad. He's bought at the levels of 2171. 50 shares is what he's holding. Wants to know as to what should be the next course of action for him. Any view on the charts for this one, Gaurav? Colgate Palmolive?
You should hold on to the position, although the stock is trading just at the resistance point from its 200-period exponential moving average that is placed somewhere very close to 2200 odd levels. But I see the stock would come up with a breakout because a clear flag and pole pattern is also visible. Beyond 2200, the stock will very quickly hop towards 2300, 2350 zone. So that is some place where part booking is advisable. As of now, hold.
All right, okay, so that's the view coming in on Colgate. We've got Mahesh on the phone line with us. Mahesh, a very good afternoon to you. Go ahead and ask your question.
Good afternoon, Mahima. I was holding Steel Strips Wheels India Limited at a quantity of 51, an average price 197. I would like to know the long-term view on that.
Okay, Radharaman, any view on Steel Strip Wheels?
It's a good company to hold on. In fact, he can make an additional purchase and maybe take it forward. So it's in a good shape. So I think he can add further to the positions.
All right. Okay. So that's the view coming on Steel Strips. It's time for our rapid fire round. Gaurav as well as Radharaman, you both know the drill. Try to keep your answers as short as possible. The first one is on Ease My Trip. Our viewer has bought 500 shares at the levels of 12 rupees. It's currently trading at 8 rupees. Has been averaging since 2024 end. Should he continue to hold? Radharaman, your view on this one?
Hold, no average.
Okay, the next one is on Tata Communication. Viewer has bought at the levels of 1566, 278 shares is what he's holding. Hold or sell, Gaurav?
Hold with a stop at 1500, add above 1650.
Okay, Transray Lighting, a 6 months view on this one on the charts, Gaurav?
Please come again with the stock's name.
Transray Lighting, a 6 months view on the charts, is down 2% as we speak.
Right. Hold, the stock is at supports, add above 620.
Okay, Cupid trading at 129 today. Is this the right time to enter from a long-term perspective? Radharaman, any view?
Yes, it's a good stock to
Okay, Siemens Energy or Vari, which one is better from a charts perspective, and what should be the entry price? Our viewer is asking, Prashant from Bengaluru, by the way, is asking this question to you, Gaurav.
Yes, just a second. I think I'll go with Vari.
Okay, and what should be the entry price?
Current market price.
Okay, all right. The next one is on HDFC Bank. Our viewer has entered into this counter for 25 shares. Wants to know if he can continue to hold this from a long-term perspective. Radharaman, your view?
No, he should sell.
Yes Bank is the other one. Amit wants to know from a long-term perspective if he can continue to hold this counter. Would you recommend that, Radharaman?
Yes, well, he can hold, but not HDFC Bank.
Okay, the other one is on IT Pack. TCS, Infosys, Coforge is what Shiv Kumar from Bengaluru has been holding in his portfolio. He says he's sitting on loss on all of three of them. Should he continue to hold? Radharaman, your view?
I think he should hold the pack.
Okay, the next one is on Cure Pharmaceuticals. Is this the right time to enter? We just saw the earnings flashing, but Gaurav, any view on the charts?
Stock is looking good. Yes, any dips from these levels should be a good buying opportunity. Preferred level would be close to 1600.
Okay, Ashok Leyland, 102 shares bought at an average price of 181. Hold, sell, average on the charts, Gaurav?
Reduce.
Okay, the next one is on Aarti Industries. Considering that we've seen the tanking in the counter today, is this a good time to make an entry from a long-term perspective, Radharaman?
Yeah, it's a good time to add.
Okay, Grow is the other one where our viewer has bought 1800 shares at an average price of 148. Can he continue to hold from a long-term perspective? This is Vijay Kishore from Hyderabad who's asking. Your view on this, Radharaman?
He should hold.
NTPC is the other one, 187 shares bought at the levels of 357. Short to medium-term outlook on this one. Hold or book profits? Raja from Chennai wants to know. Gaurav?
I think you should hold on to the position. Stock has potential to scale up to 420, 440 odd levels.
All right, that brings us to the end of this round of rapid fire as well as Ask Profit. Gaurav as well as Radharaman, thank you so much for taking out the time and helping us answer all those stock-related queries. Viewers, like I said, completely out of time in this edition of Ask Profit, but do stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Hello and welcome to NDTV Profit. You're watching India Market Close, and it has been a tug of war between the bulls and the bears. That's what the markets are indicating. I'm Hiral Dadia. Here we will be dissecting the key market trends, and we'll set the stage for what's to come tomorrow as well. But very quickly, just look at what Nifty 50 has done. We're seeing cuts of around 0.3% right now, but the recovery from the day's lowest levels is pretty strong, and that's what we're seeing in terms of Bank Nifty as well. The clear part over here is that we are above the 24,000 mark on Nifty 50, so we're not breaking the support levels in terms of Nifty 50. Apart from that, if you see in terms of Bank Nifty as well, a very similar trend. We're just seeing cuts of around 0.2% coming in there. If you look at broader markets, there is that positive trend coming in there, so that buying is emerging when you talk about the small and the mid cap index. If you pull up mid cap 150, 0.1% higher. Let's just pull up the intraday chart. You'll see the kind of volatility that has come in as well. From the day's lows, good recovery, but we're trying to sustain on the green line right now. In terms of the small cap index as well, a very similar chart. We're pretty much on the borderline, trading flat, but there is that buying which is emerging at lower levels. And today is FNO expiry, so you are going to see these kind of gyrations that could be coming in as well. Let's quickly look at the heat map, and then we look at the advanced decline ratio as well. If you see in terms of the Nifty 50 heat map, you have names like, you can't see it's a 50-50, it's more of reds versus greens, where Ultratech is the top gainer today from the cement pack. And last couple of days, we have been talking about the cement price hikes that could be on the cards as well. M&M reacting to where numbers are concerned. Nestle, Hindalco, Grasim, HDFC Life, these are few of the names which are providing support. In fact, it's mainly IT and telecom which is slightly resilient in terms of sectors today, but major pressure building in. If you look at a Geo Financial Services, Coal India, Eternal, L&T, in fact, ahead of numbers, you have L&T, which is trading under pressure. You have a Hero Moto also that will be reporting numbers post-market. So, that one is also pretty much on the tender hooks, but there is no particular trend that we are seeing right now.
Let's look at the advanced decline ratio and then we'll move on to the sectoral heat map as well. If you see in terms of the advanced decline ratio from where we started off, you know, the gap actually widened midday and again it has started to narrow, and it's nearly what 1100 advances to almost 1400 to 1500 declines coming in there. So it's pretty much even Stevens, not too much of a gap that exists between advances and declines. Let's quickly look at the sectoral heat map as well, and then we'll see where is that resilience. There you go. Defense, the top gainer today. FMCG, as we mentioned. Auto, seeing some respite along with metals, but real estate, the top losing sector, and it's mainly Godrej Properties, which is pulling the real estate sector down in trade. Consumer durables, oil and gas for obvious reasons. You have Brent, which has actually crossed that $110 per barrel mark, and that's what is putting pressure in today's day of trade. And you have the rupee, which is playing spoiled sport. So that's what we're watching out for in terms of where markets are concerned right now. Let's quickly look at the factors one should be watching out for in today's day of trade. If you see in terms of where Nifty goes, support at around 23,900 is what it's seeing. Now, this support level is not broken, which is the key positive, and we've seen a recovery of nearly 100 points from the day's lowest levels. The markets are actually, you know, stuck in a tug of war. That's what I told you in between. The positive election sentiment and the persistent global pressure that is coming in the form of the war. And you have the rupee, which has actually hit an all-time low. 95.42 is what you're tracking in terms of the Indian rupee, along with crude that has breached $110 per barrel, currently at around $113 per barrel. Nifty is actually hovering around its 50 DMA, and the critical support level is coming in at 23,900 and 23,800. If 23,900 is broken, you will be watching out for 23,800 on the charts, and below that there could be some bit of selling pressure that could exaggerate as well. Overall, it's a 500-point range that you're talking about, 24,300 to 23,800 on the downside, and this is for the last 7 trading sessions where you're seeing Nifty actually trade in this kind of a range. Only if Nifty closes above 24,300, it could trigger a short covering rally towards 24,600 to 24,800. So I think that's what the markets are watching out for. Lastly, if you have to look at Bank Nifty as well, that is also technically weaker in terms of its formation as compared to Nifty 50 because it's trading below the key moving averages. So unless Bank Nifty actually reclaims that 55,500 mark, the bias will remain sideways to negative in terms of Bank Nifty, and you should be watching out for support levels of 54,000, whereas resistance on the upside is coming in at levels of 55,000. And lastly, value buying in the small and mid cap space is what you're seeing. You have defenses like pharma and FMCG, as we mentioned, are holding out. Banks and real estate, these are the sectors which are dragging the most. So that's what the setup is looking like. But let's get in our guests. We have Vinay Rajani of HDFC Securities and Sunny Agarwal of SBI Securities joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. Vinay, my first question coming to you is, with the kind of trend that we are seeing and the recovery that's coming from the day's lows in terms of markets, what should that closing strategy be in terms of levels to watch out for and your top picks?
Yeah, so as you have been discussing that Nifty is over into a range, and for last 7 trading sessions, Nifty has been showing some alternating moves like one day up and one day down, and there is no clear-cut momentum on the upside, 24,300 on the downside, 23,800. So 500 points more consolidation is there. We are waiting for the momentum to come back. Once this range is taken out, then we can expect that momentum to come back into the markets. But yes, primary trend is still positive because broader markets have been performing very well. The small cap and the micro cap indices have been performing good. They are still holding their levels at the higher levels. So there is a consolidation in benchmark index, but broader market indices have been doing good. So stock specific opportunities, trading opportunities are still there in the market. So we have to be very stock specific. We are also passing through the result season, so a lot depends on that. So as of now, we are asking our traders to keep a stop loss at 23,800 and keep on holding the long position. Once we see a breakout about 24,300, then we can immediately see a 200 days exponential average coming up for the Nifty, which is placed around 24,750. So yes, with a positive bias, one can trade. Yes, definitely it look the sector which is performing well. You have to select the stock, but overall it is the typical choppy market where stock specific bullish moves cannot be ruled out.
Okay, so that's with regards to strategy on Nifty and Bank Nifty. Vinay, what would your top picks be at this hour if you have to look at, NSE Nifty expiry today and probably the kind of impact one should be watching out for from the global aspect as well?
Yeah, so financials have been doing good today. The NBFCs, the L&T Finance is one of the stock which is showing a good traction today. So flat kind of breakout can be seen on the technical charts. So around 291, one can go long, one can keep a trading stop loss at 285. On the upside, I'm expecting a target of 300. The second stock I like is from the power and the ancillary scheme, that is CG Power. So CG Power is almost similar kind of setup like LTF. So after some running correction, it has reduced upward rally. So today is up by more than 2% with a good volumes. So around 829 CG Power, one can go long. Stop loss can be kept at 812 for the traders. On the upside, I'm expecting an immediate target at 860. So one from the power space and another from the NBFC space.
Okay, so and power has been in focus as well. In fact, a lot of positive commentary that's coming in when it comes to power, and it can be from the renewable space as well. And on the back of which, in fact, the commentary from the management of Coal India as well was absolutely positive, because they are looking at thermal power as a segment. Coal gasification is something that they are betting big on in trade as well. In fact, Sunny, let me come to you. I mean, we've been talking about the way markets have been playing a tug of war. In the last, 5 to 7 sessions, it's been a very broad range where markets have been trading at. The question is, should you start nibbling in or not at this juncture? Because I don't know if it would be right to say that, the troubles are behind us, but at this point in time where majority of your, Nifty 50 companies have reported numbers, you have some bit of visibility in terms of the broader market's earnings as well, and what you could expect in the first quarter. How are you looking at it, and anything that you would bet big on right now?
Yeah, good afternoon. I think if you look at the market texture of the last 2 weeks, market has not been reacting very sharply to a negative development, whether it is on rupee front or crude front, and that gives us a lot of confidence that Street is now working with an assumption that crude is likely to remain at an higher level for maybe a month or two, and till the time, and at the same time there can be an pressure on USD INR, and to that extent we have not seen a very aggressive outflow from foreign institutional investors. At the same time, market has been consolidating in a broader range of 700-800 points of Nifty, and on the top of that, in terms of earning, what we are seeing is that a few sectors or few companies are reporting a very solid set of numbers, although we all are aware that in case the crude oil sustain at an higher level, maybe 1Q is a quarter where we may see some margin pressure going forward. But having said that, if you look at a slightly longer picture, larger picture, maybe FY27 is a year where we may see 15 to 17% kind of growth on Nifty 50 as a constituent, and then FY28 again kind of mid-10, 13 to 14% kind of growth on Nifty 50 earnings. So I think valuations are comfortable, although there is some overhang in terms of rupee or crude oil prices. But what we feel is that it's the right time to add a few select names in the portfolio. So just to give color on that, I think financial services is the one space, especially in BFC, where we feel there can be a good opportunity to add to the portfolio.
Okay, so financials come in on Sunny's list as well, along with Vinay. But moving on, it's that time where we do a stock of the day. And to your surprise, we've picked up a CAMS, and this is after a sturdy fourth quarter that the company has posted. The stock also at the day's highest levels with gains of 9% coming in there. Jasmeet is here with us to tell us more in terms of what is really working for a CAMS in this quarter, what that outlook could look like in terms of FY27. Jasmeet, over to you.
Well, thank you for that. Company came out with its Q4 earnings. So now what we see is the company posted its highest ever quarterly revenue when you look at the Q4, and it's posted its highest ever EBITDA in all-time history of the particular counter. Now, what helped the company achieve this is overall efficiency in terms of the operations. Well, the margins improved on the back of that automation and the re-engineering the company has been doing to its model to reduce the cost, help the margins to expand. While if you look at the overall non-mutual fund business, the smaller chunk of the revenue, even that grew faster compared to the mutual fund business, where it's currently contributing nearly 15% versus 13% in the previous year same quarter. Now, if you look at the other highlight, we also make a note that the overall live SIPs for this particular counter expanded way faster in the industry, where we see that overall growth for SIPs came in at nearly 17%, while the industry grew at 4%. Now, if you look at the last key aspect, what we make a note, the brokerages have been bullish on this particular counter, and company also has added 2 new clients in this particular quarter, which adding to the overall revenue momentum. Now, we look at the key numbers. The revenue is up by 11% while the overall EBITDA also expanded by nearly 160 basis in terms of margin. In terms of the EBITDA levels, it's nearly 15% while overall profit also saw healthy growth. Now, if you look at the key brokerages, now what they're penciling is something like a Jefferies has come out with a brokerage note, while they maintain buy on this particular counter with a target price of ₹820 and they see upside of 12% from here on. This is before the spike we saw in the stock of near 9%. Now, what they say is the overall revenue and PAT has come in line with the estimates, what they were expecting. Further, they also make a note that the expensive has grown slow for the management, showing the overall operation efficiency. Now, well, we also have Investec on this particular counter. Now, what they notice, they maintain buy on this particular counter and also they maintain hold on this counter where the target price of ₹775 and expect an upside of nearly 7.2%. They say the overall mutual fund, that's the main business of the company, sees slight decline, which is down about 0.4% QOQ basis. Further, they also make a note that the guidance in the coming year remains a key by the management of how they see FY27 growing ahead. We'll look at the key valuation of this particular counter. They are nearly at 40 odd times cheaper than the competitor KFin Tech. But given the non-mutual fund business is growing faster for the company, we can expect it to pick up. Now, if you look at the overall buy rating for this particular counter, stands at 18 or with the return potential of 3.5%, which comes in after the spike of today.
Thank you so much for that, and this puts a lot of things into perspective. Sunny, what would you do with the CAMS with the 8.5% up move that has already come in there? Do you think this is something which could be sustainable from here on with the commentary that we've heard from the earnings as well?
Yeah, I think maybe buy on dip is the right strategy, as rightly pointed out that non-mutual fund business is, which is one of the key growth catalyst going forward. And again, on mutual fund side, I believe that in case there is an improvement in market sentiment going forward, even mutual fund business should start delivering slightly better growth going forward. So maybe buy on dip is the right strategy with a fair value of closer to 850 to 900 and investment horizon of 6 to 12 months.
So that's with regards to where CAMS goes. But moving on, sources tell NDTV Profit that country's largest private sector lender may see a new chairman appointment in June. People privy to the development say that Keki Mistry is unlikely to continue as interim chairman of HDFC Bank. Shrimi is here with more details on it. Shrimi, this is one of the hottest discussion points right now when it comes to HDFC Bank, because a lot of expectation was that probably, because Keki Mistry has come in as interim chairman, when the reappointment has to happen, it could be a probability that he gets an extension. But that's unlikely, it seems.
Yeah, that's right, Hiral. What we gathered so far is that, of course, the bank is going to see the new chairman mostly by mid of June or by end of June is what indication we are getting. And this is coming clearly at the time when Keki Mistry tenure as an interim chairman is ending next month, to be precise, on June 18th or 19th. And his reappointment is unlikely. The exact reason, however, is not known. But what indication we are getting at this point, that since he's been associated with bank for a very long time, and this could possibly lead to the conflict of interest, and that is why he could not get the full term as chairman. And in fact, the lender is in touch with RBI on the board restructuring, and what we've been given to understand that in fact some of the option is being explored at the lenders level, whether to kind of elevate one of the existing board member as chairman, or to get some external candidate on board as for this role. So clearly it's important, because what we also gathering at this point that in fact the senior RBI official is visiting senior board members every 2 to 3 weeks since the Atanu Chakravarti abrupt resignation, to take a stock on the succession planning, to entire board restructuring and the governance as well. The another key important information we gathered at this point that the two external law firm is expected to submit its report in next 2 weeks, and that is going to shape the lender's next move. And we reached out to HDFC Bank for their comment, but we still awaiting reply.
Okay, so this is going to be an interesting development, Shrimi, that we should be watching out for. Thank you for that. Stay with us, but let's also listen in to what former HDFC chairman Deepak Parekh had to say on the lines of his role at HDFC.
Are you talking of HDFC Bank? I have nothing to do with HDFC Bank. I've retired. I'm not on the board. So I can't say anything about it. Except that you must read the Reserve Bank of India statement that the bank is strong, well capitalized, and there are no ethical issues.
So that's the comment coming in there. In fact, the stock has also recovered from the day's lowest levels. But that Shrimi is with us still. Shrimi, the other story that you've been tracking is with regards to the Union Cabinet that is likely to clear a large credit support program today to help sectors which have been impacted by geopolitical disruptions. What are you picking up?
Yeah, Hiral, so we were the first one to actually, put out that story that government is rolling out a massive relief package for MSME. And in fact, that was in line with the credit guarantee scheme, which was announced by the government during the pandemic era. And this time it's 2.5 lakh crore. What is different this time is that they give a separate window for aviation sector because the sector has been grappling with a lot of issues, right from the fuel cost increase, the flight cuts and the insurance premium, etc. So you will see a separate window with an outlay of 5,000 crore. And if you see the nuances this time under this broader framework of emergency credit line, as far as aviation is concerned, that they are going to get 90% of the government backing loan, with individual carriers potentially getting up to 1,000 crore, which could be extended up to 500 crore as well, matching with the promoter investment. However, we need to see the fine prints of the scheme after the announcement, but this is the proposal prepared by Department of Financial Services and is going to be tabled in the upcoming cabinet meeting scheduled at 5 p.m. today, and we will perhaps hear from the briefing as well to understand the more of it. But this is coming to soften the blow as far as all those sectors, including MSMEs, are concerned amid this Iran conflict.
Okay, so a 2.5 lakh crore credit line that could be on the cards. Thank you, Shrimi, for that. In fact, updates will be, welcome on this one by exporters and importers, because anything that is coming in, it's a supply chain constraint that importers have been facing right now. But shifting conversations to rupee, which has hit record low, it's interesting to see with what's happening. It's back again to those levels in spite of that RBI intervention that has kept coming in. 95.36 is what you're tracking right now. And India Banerjee coming in from Kotak Securities joining in. And India, welcome to the show. Always a pleasure to speak to you. This is Hiral here. My question is, what is happening right now in terms of the Indian rupee? I mean, the idea was that probably the record low levels will be arrested at some point in time. But time and again, we are bouncing back to those levels. What are you picking up?
Thank you for having me. A very good afternoon. Actually the entire play is on Hormuz and what's happening with West Asia. Because over the past 2 months I would say first week of May, the situation in Hormuz has not improved. The oil prices continues to move higher, and that exerts a dual pressure on the rupee. First, it is through the current account, the oil import bill, which is roughly around 10 to 11 billion dollars before the war. Now it has increased significantly because of the jump in the oil prices. And secondly, the FPI outflows, which is almost like $21 billion over the past 2 months. So the dual hit of current account and capital account is causing this depreciation. It is only the RBI intervention which they are doing aggressively. It's when the Indian rupee is stabilizing.
Okay, so Anindya, clearly, the RBI has been intervening in the spot as well as if you talk about the forward markets to curb this extreme volatility. However, with all of that, are you expecting any further downside pressure on the rupee with what's happening? Because there is no resolution in sight as of now, right? I mean, Brent, again, even if it comes down, it's back again above the $110 right now. So how are you looking at it? What levels would you be tracking?
See, as of now, the situation is that the oil prices can continue to rise because the supplies have not improved. 10 to 12% of the daily supplies of oil are offline, apart from the other things like gas and things like that. So Indian rupee will continue to be under pressure because it's a reflexive trade. And we can continue to see outflows of the FPIs, which mean RBI has to be quite aggressive on intervention. In spite of that, we won't be surprised to see 97 to 97.5 on the USD INR if we don't get a solution in West Asia over the next 1-2 weeks.
Okay, so interesting levels to watch out for. Thank you so much, Anindya, for joining in. Always a pleasure to speak to you and get your views. But very quickly, let's just look at a couple of losers. A Tech Mahindra, Eternal, Coal India, ICICI Bank, top 3 to 4 losers that we are watching out for in terms of trade. Vinay, any strategy with these companies?
Yeah, so Coal India is relatively stronger. No doubt in last 3 sessions, we have seen some profit booking. The primary trend of this particular company is quite strong, and one of the outperformer we can say, and overall we are bullish on the metal and mining space. So this is looking like a correction, but ICICI Bank and Tech Mahindra have been into a downtrend, and the sector, IT sector, has been underperforming. So that will be continue to be there as a headwind for the company. So ICICI Bank has been into a downtrend and has seen a healthy correction, but there is no sign of recovery as can be seen on the charts. So better to stay away from it and wait for some consolidation to happen. So Coal India is looking stronger, and buy on dip should be the view.
So ICICI Bank, Coal India, 2 companies you're watching out for. Sunny, any view when it comes to a HDFC Bank? You know, we just heard our colleague Shrimi as well, who got us the story that there's a potential where Keki Mystery may not get an extension as well, and they would be looking at someone internally from the board. With the way everything's panned out in terms of earnings, the change of guard that could be happening as well on that front, how are you looking at HDFC Bank?
Yeah, I think leadership change is something which has been an issue with an HDFC Bank. But coming to the core earning front, it seems that FY27 is a year where a bank may report credit growth in line with an industry, and then in FY28 may exceed the industry growth rate. So I think next 2 years seems to be pretty good for an HDFC Bank, and the main key positive point is the valuation at which HDFC Bank is trading at a multi-decadal low valuation, so offer a lot of comfort on the risk side, so favorable risk reward ratio. So we believe the fair value of the HDFC Bank is in the band of 1,000 to 1,100 rupees with an investment horizon of 12 to 18 months. So I think it's a good time to accumulate HDFC Bank from a medium to long term perspective.
Okay. So the action today, though, in the broader markets more than anything else, the Bank Nifty, by the way, one of the worst performers, about 0.5% down right now. Nifty is still looking slightly better. But let me go across to Somit Sarkar, joining us this afternoon with everything he is hearing on the street. Somit, is worry overshadowing any kind of euphoria or comfort in the markets right now?
Well, yes, if you look at the market, it has been quite range bound, and that is what dealers are indicating, that it will continue to remain range bound. This 500 points tight range that we are looking at, 23,800 to 24,300, it will continue to remain in that range until unless we get some clarity on the geopolitical issue, given the fact that both crude and rupee have been impacting the Indian economy, and that will continue to impact until unless Nifty moves above the 24,300 level decisively. Dealers are not expecting any big move on the markets going forward. Few stocks that dealers have highlighted in trade. Firstly, Gopal Snacks. They are clearly indicating that there are buy flows on the large HNI desk. The stock has been gaining for the last couple of trading sessions. Strong Q4 numbers is what dealing rooms are indicating. For Titan and Britannia, there are sell flows on the PMS desk. Dealers expect weak Q4 numbers from both the names in trade. And when it comes to few cash stocks, basically Prime Focus, Godfrey Phillips and Inox, and in fact Godfrey and Inox are in FNO as well. Prime Focus is predominantly a cash counter. Prominent HNIs have been accumulating these counters in trade today, so keep an eye out for these names in trade. And lastly, when it comes to Eternal, that stock has been down in trade, but dealers are indicating that there are some buy flows that they're seeing at lower levels on the FI desk. Long only funds have been accumulating Eternal at lower levels in trade is what dealers have indicated.
Somit, thank you for that. We'll take a very short break, quick market check before we get into that short break. And you're seeing at least 24,000 being preserved on the Nifty, but looking very, very tenuous right now. Shaky day for markets. What should be your closing trade? All of that coming back on the other side.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit.
Welcome back. All right, focus in West Bengal. Political change in Bengal also raises questions on business confidence and economic expectations. NDTV Profit, the only business news channel who's getting you ground reports on how industry is looking at the political change. Our colleague Sharad Dubey in conversation with MD and CEO of UCO Bank, Ashwini Kumar. Listen in.
We are joined in by Ashwini Kumar. He is the Managing Director and the CEO of UCO Bank. An interesting snippet about UCO Bank is it's the only government company which is headquartered in Kolkata, West Bengal, you could say the eastern region. Good afternoon, Ashwini ji. First question is definitely going to be on the business sentiment, how things are there. I know you have corporate books also in eastern India. How's the sentiment looking like for this region?
Thank you. In Eastern India, we are the only bank having headquarters, that is true. And we have around 30% branches in the eastern part of the country, and 6% branches are approximately in that northeast part only. So when we talk Eastern India, so we have around 30 plus 6, 36%. And these branches are contributing good business to the entire book of the bank. As far as sentiment is concerned, there is a good sentiment. If I have to look back my previous year performance in eastern part of the country. So my MSME book growth on an average was 20% as a whole on a country as a whole. But eastern part of the country, the MSME book growth was more than the national average. So that is one point. Second, similarly in retail also. And the contribution from the eastern part has been significant given a situation currently the environment is, I believe that our bank is going to be benefited with the new environment coming, new government coming, and the policy changes are likely to be coming, and the government initiatives, central government has been giving a lot of initiatives, lot of support to the business. So I expect that eastern part of the country to help the bank in growing business book in the coming years.
Well, so it's beneficial for the company as well as the bank and the industries which are there in Eastern India. That's a very important statement coming from you. But let's focus a little bit on the Q4 numbers also. I was just checking the numbers. There is a little bit of degrowth on a year-on-year basis. The question remains is, when will the yields pick up?
See, NI degrowth or the marginal growth was basically because of the base effect. Last year when we closed our book, that time there was a one-off item, 283 crore of interest income which was booked. That came from a TW account. So that increased our net interest income last year. If we neutralize that, our growth is more than 6 to 7% in NI. And from advances, if we because interest income is coming for advances and from investment. So if we remove it from the advances base effect, then our NI growth from advances is more than 10%. So that was one impact.
I want to start off with you completing 5 years at M&M, and I know you are very modest in saying that the group did very well before you and will continue to do well irrespective of you. But what you've done over the 5 years is landmark. I was talking to your team, highest revenue share in SUVs, highest revenue share in PVs, bunch of other things turning around. You must be happy with the results.
I'm very happy with the results, but more importantly, it is the group that has done everything. It is the people that have done everything. Yeah. And it's a group with a wonderful culture, with a great set of people. And that's really been the highlight of the journey from my standpoint, is the values of the group, the trust that we have, and that enables everything else. And we always say that we will focus on our values and our purpose, and profits will follow. And profits have followed.
That's true. Profits have followed, ROEs have followed, EBITDA growth has followed. In some sense, when I look at the quantum of FI investments across various companies, etc., in your case, the downtick also has been minimal, if you will, right? In some sense. So all of that is great. Before I talk about the quarter, just one more thing. You're setting the bar higher with every passing year on multiple metrics of interest to financial investors. Right? You said 18% ROE, you kind of gone beyond that as well. What is in store for FY 27, 28, 29 or whatever year number of targets you want to give?
So we have given a target of 18% ROE, and we had said 15 to 20% EPS growth. In the last 5 years, we've delivered 57% annualized EPS growth. And as I look forward, yes, we will continue to raise the bar. Our businesses are performing at a very high level right now. In terms of ROE, our investors would not want us to go more than 18% because we are putting capital back in for growth. And yes, we are at 20% right now, but I've always maintained we will be slightly higher or lower than 18% as we continue our growth journey. And that's the more important part. It's about each of our businesses becoming large businesses. And many are on a very strong path to do that. And that's what is a highlight of this year in particular, where many businesses have had a breakthrough year. And all our businesses have contributed to the growth for this year. So for me, it is about, as a leader, ensuring we have a higher threshold that we set every time. And the teams have responded very well to that, and that's what we will continue to do.
Okay, maybe get into the minutiae a bit and then I'll ask you about the investments as well, because with the kind of oodles of cash that you have, you may be able to do capex, invest in the business without having to raise a dime from the external markets. And I'll come to that also. But first, the performance. SUVs did well. And essentially the PV segment has done well, save for maybe one. If I want to pick, I can pick, I don't know, April mein kya hua, etc. and stuff like that. But by and large, FY26, that segment has done very well. Tractors, fabulous FY26. Are you guiding to that single-digit growth because of a high base, or is it that the market is looking skittish because of the monsoon? And then I'll kind of weed into the other business.
I think it's some aspect due to monsoon at this point. If the monsoon fears are not there, it will likely grow faster. We saw April grow very well for the tractor industry. But that said, the tractor industry has always had a mind of its own. And no one's been able to really predict what happens. So we will continue to see some challenge on that front. But on a conservative basis, we feel that it will be likely mid-single digit at this point.
Okay, and what about car, the PV SUV market? How is that looking? Because the GST benefits would have helped as well, I presume, to an extent at some point of time that base will catch in at a point of time when a lot of people will argue that some high frequency indicators are indicating to some moderation in demand across because of the conflict.
The PV industry has grown relatively slowly for the past many years. And we think that pace will pick up now. But for us, more important is M&M growth has been at a very strong pace. And even for this year, despite possibly a slightly conservative PV industry growth forecast that we would have, we would expect our SUVs to grow mid to high teens.
Okay.
As we said last year, we closed the year at a 20% growth year over year. And this year again, we expect mid to high teens in terms of growth rate.
Non-SUV?
Non-SUV will depend on the industry growth rate because in tractors we have a 44% share. In LCVs we have a 52% share. So it's difficult to grow much faster than industry in that case. So there with tractors at a mid-single digit, LCVs at a high single digit, we are hoping that with market share gains we would grow faster than that.
Okay. Is it also a good problem to have? Because I think from what my colleague Puneet tells me that a large capacity increase comes in Nagpur in 2028, if I'm not wrong, right?
Yes.
So, and you are already operating at fairly high utilization levels. So
we are putting more capacity in right now as well, both for ICE and for EV.
Right.
So we are essentially in line with the growth that we see.
Okay.
And with Nagpur coming in and our range of subcompact SUVs coming in, we'd expect a further inflection point in growth at that point.
Okay. Let me rephrase my question, Dr. Shah, that if indeed, hopefully this conflict ends soon, and if indeed the consumer sentiment were to change for the better, and if demand really zooms ahead as well, would you be able to cater to that demand with your existing capacities as they stand right now until your major capacities come on stream?
For the most part, yes. But then if it grows much faster, being at 100% capacity utilization in a space where we more than quadruple capacity is not a bad place to be.
Yeah, but which is what I said, in that sense. Okay, fair call. A word on some of the allied businesses as well. Of course, the gems of growth, one, Tech Mahindra, and you told me the last time that you had given Mohit Joshi a target. They are living up to it and beating it by a margin. But the space is looking slightly skittish. The investor interest is not necessarily at the top shape right now. How does tech behave over the next 12 months, you reckon?
So I'll cover tech and then I'll go back to your broader question on all our businesses. TechM's on a strong path right now. We've got a good team in place. We've made the transition to centralized delivery and it's being received very well by customers. Our customer satisfaction scores have gone up significantly. From a financial standpoint, we're delivering everything we said we would, and we're therefore on track to meet our F27 targets. As that's done, we will come out with a set of targets for the next few years, which will point towards a greater acceleration of growth from our standpoint. And therefore, our tech business is in good shape right now. And let me come back to all businesses. We always talk about auto and farm, and rightly so, they have done very well. But as we look at F26 overall for the year, our profits have grown 35% year over year. Auto has grown 33% and farm has grown 13%. Strong domestic, but international we had to do a lot of cleanup and impairments of international got farmed down. So other businesses have contributed to drive an overall growth of 35%. Our growth gems have grown 50% year over year from a profit standpoint. Mahindra Finance has grown 60% year over year from a profit standpoint, excluding the provision release we had in the previous year. And TechM has grown 14% year over year from a profit standpoint. So we see all businesses really contributing at a very high level and driving the Mahindra Group forward.
It seems to be a period of uncertainty, if not the whole of FY27, then at least the current period, which may last for a month, 3 months, 6 months, we don't know. You've been a growth-focused leader. Do you continue that focus on growth, or is it time to batten down the hatches and prepare for a storm or something like that kind of a scenario?
So our theme right now is accelerate in uncertainty.
How?
And because of the foundation we have. And we've seen uncertainty over the past few months as well. We closed fourth quarter with a 42% jump in profits after tax. And our teams have gotten very strong at being able to manage through supply chain disruptions. The level of resilience that has been built is very strong. COVID gave us some very valuable lessons that we've learned and been able to address many of those. And a strong cash position, very strong set of leaders and teams, very strong set of businesses positions us very well right now. So for us, it's not about battening the hatches. It's about being aggressive and moving forward in uncertain times. I will add to that the India story.
Please.
This is one that often is sometimes dismissed or maybe underappreciated. But India has a very strong growth trajectory, driven by consumption, by infrastructure, both physical and digital, that has been put into place and is being put in place, and by economic reforms that we've seen. Our businesses operate in 70% of India's GDP today. And across the businesses, we're starting to see the impact of that. If India grows at a mere 6.4%, and I say mere because we do expect India to grow at 8% for the next few years. But at 6.4, India will go from 4.2 trillion today to 6.6 trillion, literally adding 2.4 trillion of GDP, a 50% growth in India's GDP in 5 years. If India does grow at 8%, we will go from 4.2 to 7.1 trillion, adding nearly 3 trillion more, or 70 to 75% higher GDP in just 5 years. And that is a very powerful tailwind that we have. So we've got to take advantage of that tailwind. We've got FTAs that have been signed for 38, now 39 countries. And that's a huge advantage that we have to be able to export to those countries. We have to invest more in R&D. We've got to make our products a lot more competitive across the world. That's what we're doing in multiple sectors that we're in. And as we do that, we just see huge opportunity to take advantage of the tailwinds that India offers and the ability for companies to be competitive and play across the world.
Okay, I know you're pressed for time, so therefore I'll kind of squeeze in two questions in one, if you will, because both Puneet and Swati told me that you're spending disproportionate amount of time, maybe not disproportionate, maybe the required amount of time on AI as well. Some of your business get impacted because of AI or maybe benefit out of AI. But just broadly, I'll tell you what I hear from investors, right? And I would love to know your thoughts here, because you spoke about India and the India story. The common parlance or the common measure right now is that because India doesn't have AI, it's a story where global investors do not want to invest. Therefore, capital would be scarce. We're seeing multiple thousand crores being removed every day from the Indian markets as well, putting pressure on the currency as well. You are a thought leader. Put this into perspective for us, Dr. Shah. How do you see this pie unraveling? Do you reckon that if the AI spends on capex continue, India continues to remain a lesser favored destination for global investors, and does that have an impact on the growth story?
So think about it this way, Neeraj. AI spends on capex are to be able to create AI capabilities. Someone has to use the AI capabilities. We are using them. We are the users. We do not want to spend on data centers. Let someone else do that. We are not spending on energy infrastructure for AI. Let someone else do that. We are using AI to make a meaningful and real difference in everything we do.
You're talking about M&M or India at large?
M&M.
Okay, perfect.
Right? And hopefully India. Right? Because that's our strength. Our ability is to be able to invent, to take software and be able to do things with it. And M&M is going to be a leader in leveraging AI to become a tech leader in every industry that we play in. We haven't talked about it quite consciously over the last 2 years because we wanted to show real outcomes. And as our teams have done that, we are now talking about what we're doing in AI. Still not at the level of detail that some would like, but that's something we will do in future. But we're seeing real applications of AI across a vast area, and it's not just about productivity or efficiency.
Sure.
There's so much focus on jobs with AI, but AI is helping us improve quality for our cars. It's helping us create better weld for our cars, better paint for our cars, helping us reduce service time for customers when they come in, helping us reduce the downtime in a plant and be able to increase capacity by doing that. So these are all the things from a quality standpoint. A customer experience is another vector. Being able to reach out to many more customers. With the XV7X, so due to AI and only run by AI, we had 17,000 more test drives because AI could handle all customer calls coming in. converse with them on WhatsApp, and be able to offer real information in a manner that customers wanted, and that's creating meaningful outcomes from our standpoint. And then, of course, efficiency and productivity as well. So AI is operating across a vast range of things. We're the users of AI. I spend an hour a day on AI now. Yeah. And that's something that all our leaders are starting to spend more time, because it's about the processes. It's about what you do every day. If you read 5 newspapers in a day, in 5 minutes you can actually create an AI agent that will go and get all the news that you want and deliver it to you in whatever frequency you want. Now, that's a personal tool in terms of productivity, but there's a lot that can be done in every process, in every business. And that's what we're leveraging now.
30 seconds, give us a cool hack since you are using AI. A lot of people don't know how to do that. How is Dr. Anisha using AI?
At this point, I'd just say learning. Just put in. The hack here is that whatever you think you don't know, ask AI, saying, you can tell AI, help me code something. Try this out. Tell AI, help me code a game. Pick whatever game you want. And my sense is in about 10 minutes, you'll have a game that's ready, that's coded, that you coded, but AI has taught you how to code it.
How cool. That is really good to know. Well, I'm sure it's not as simple, but in the 30 seconds we could, you just told us something that people can maybe try and do as well. This is coming from Dr. Anish Shah, a true business leader in his own right. But Dr. Shah, thank you so much for joining in today and giving us your thoughts. Really appreciate your time.
Glad to be here, Yash. Always a pleasure.
Thank you so much.
Okay, superb conversation there with M&M, the stock at its day's high, and that AI hack was truly a cool one. Rudramurthy BV, founder director of Vashna Investments, with us on the show this afternoon. Rudra, I'm going to start with an M&M call, since that was the interview we just played out.
Definitely, yes. The best stock if you want to pick from the auto sector, and one should definitely have in portfolio. For me, yes, this stock has now also made a clear breakout, and definitely it is headed towards 3,500. So with a stop loss of around 3,150, I will be long looking at targets of 3,500. Looks very, very bullish on chart.
With M&M, Rudra, good afternoon. This is Hiral on this side. How are you looking at a Hero Moto ahead of numbers? The company expected to report numbers post-market as?
Yeah, Hiral, if I have to look at the charts of Hero Motor, it is in a clear downtrend. But then we don't know how the results will pan out, keeping in mind the estimates as well as the actual numbers, whatever gets delivered. But stock on chart is clearly on a downtrend. Strong support for this stock, Hiral, comes at around 5,000 at around 4,600 zones. So from current market price of around 5,100, I will wait out for results to come out. I don't want to preempt anything and take any position. But if you see the chart patterns are definitely coming down from levels closer to that 6,300. Stock has seen a good downfall, and it is now taking support at around 4,900 to 5,000 zone. So it is in a clear downtrend. So I will wait out for results to come and then take a fresh call based on the results.
Just a good time, Rudra, to get your BTST ideas. Do you think that there's enough calls out there for a positive move tomorrow? Or any shorting calls?
No, for me, if you see the overall market texture today from lower levels, yes, it has held support at around 23,800, 900 zones on Nifty spot. And we have seen a good bounce from those lower levels. Yes, you have a lot of negative cues in terms of rupee dollar, or even if you see the Brent crude prices moving up, again FII selling, all these things are definitely not looking great, but still markets have shown a lot of resilience and it is holding that support at around 23,800 on Nifty spot. So if I have to take a call, I will still look at a BTST call, no shorting right now, and I'll be a buyer in Federal Bank. Yes, number one, results have been very good from Federal Bank, and if you see mid-sized private banks, they are really doing good. Whether you see RBL Bank, Bandhan Bank, Indus India Bank, so these are all some of the stocks from mid-sized private banks which have done very well. So at current market price, the risk reward is very favorable. So I will be a buyer in Federal Bank at current market price. One can keep a target of around 300 to 305 for a BTST kind of a trade. And if you slightly have a longer time horizon, this stock can even go towards 325, 330, a good risk reward to buy at current market price. Keep a stop loss of around 290 for this long call.
Okay, stay on with us. Deepan Mehta joining us this afternoon. Deepan, great to have you on and hope you're doing well. What have you made of the result season so far? More winners than losers? Or the data doesn't really matter because the whole West Asia crisis happened after?
Yeah, Tamanna, good afternoon and thank you for having me on your show. So I think this is early time for the earnings season, and therefore all the good results have come so far. But nonetheless, I think except for software services, we are seeing across the board very good, I would say momentum behind the earnings. But this was supposed to be a good quarter. We were supposed to see a revival in the earnings. But the bigger problem will start from the June and September quarter, where we have seen massive disruption because of the Iran war, and also the way oil prices have gone up, and the way the interest rates also have gone up. So I think the bigger problem will come now, and if the war gets extended, then the problems that fundamental problems which we face will even further deepen. So right now it seems to be okay, but as I said, I think we need to have a very close eye on the oil prices. These levels of oil prices are just not sustainable and will require a lot of reset at our end.
Okay. Deepan, looking at the problems that you're going to see in the next few months because of the West Asia crisis, what are the safe bets you're taking? Just wondering what your thought process is right now. Are you sitting on more cash than usual, or are you well invested, and where?
I think that we are generally well invested. Maybe 5-10% cash would be there in the portfolio. Nothing major from that point of view. But always on the lookout for good opportunity. And I think that this war, one of the good investment themes which is coming out of this war is this energy security. I think not just in India, but across the world, I think energy security as an investment theme is going to become very important, more important than perhaps defense or railways, what we had in the last 5-10 years or so. And energy security is something which, we are trying to figure out which are the winners going to be over here. Right now, that is not very apparent, but I think there'll be increased focus on oil and gas exploration. There could be more focus on the electrification of the transportation sector, and even more incentives can be given for alternative energy like solar, wind, and maybe even to an extent, if some companies which can assist in creating alternative sources of imports as well. So from that point of view, I think that's something which I think the government certainly will look at. Now that the elections are over and done with, more attention will be given to this entire energy security investment theme. And many companies can come into focus over there. For example, India needs more oil and gas. So why not give a lot of incentive or encouragement to ONGC and Oil India for exploration, not only within India, but overseas as well. Similarly, I think we need to work with new technologies like coal gasification. So that would benefit companies like BHEL, Coal India, which are engaged in coal gasification. Then there is green hydrogen also. And so Reliance Industries is working on green hydrogen as to take it onto a commercial level. So these are the kind of emerging investment themes which we see after this disruption. And we haven't seen such a disruption in the oil market ever before. So these are the kind of investment themes and stock ideas that we are searching for at this point of time.
One, interesting sectors that you're talking about right now. Good afternoon, Hiral here. How are you looking at the entire capital goods and infra theme as well? Because one, you do have a L&T that will be reporting numbers today. But from here on, do you think along with power, infrastructure becomes another sector to look at?
Absolutely. I think globally infrastructure and power are going to be one of the highest growth areas because of the data center madness which is taking place. And more data centers means more construction activity, more power plants, more distribution lines. So from that point of view, a very positive on the entire power equipment segment. And right from renewable power to even gas, coal-based power plants, transmission equipment, transformers, transmission lines, the actual conductors also across the board. I think these companies are going to have a great time. We've already seen the numbers which have come through last 2-3 quarters have been exceptionally good for these companies. And I think that this sort of momentum is expected to continue in the near future. So we would definitely like to be overweight capital goods, especially capital goods which have got linkages to the energy and the energy industry.
Okay, let's go across to Varsha very quickly. Lot of stocks buzzing today. We'll get a quick look before we close off. Varsha.
Well, let me start with the gainers first. You have Quest Corp, wherein buzzing on the back of strong Q4 numbers. Professional staffing was the standout. 13 new client logos added in Q4. General staffing resilient despite regulatory headwinds. Talking about Walkhard, again a strong quarter. Reported profit in FY26, marking its first profitable year since 2022. Saw growth in biotech and emerging markets. Insulin-based biotech products performed well. Other income aided profit. Titagarh, well, buzzing on the back of West Bengal election. Bengal-based wagon maker, robust order book stand at around 27,755 crores. Sees passenger business to be the dominating part. Then you have Tata Tech, again strong numbers. Q3 momentum carried out in Q4. Double-digit top-line growth and margins expanded over 120 basis points. Beat the guidance. Double-digit organic growth guided for FY27 with margin expansion. Talking about the losers, you have Voltamp Transformers. Weak set of numbers. Growth impacted due to weak execution. Lower realization led to the drop in profits. Ongoing Middle East conflict, increased input costs of transformer oil. Lastly, Aarti Industries, again, a weak set of numbers, I would say. Sequential revenue decline and weak pricing momentum. Export market remains under pressure for the company. Agrochemical, margins continue under pressure. Demand softness across international markets. So these are all the stocks which are gaining and losing as of today.
Hey, thank you for that. That's quite a list there. Rudra, any highlights over there from that list that Varsha put out for us all together? And any opportunities there? Would you look at Voltamp for a recovery trade?
Yes, definitely. If you see the chart pattern of Voltamp, the stock has given that clear base formation and it is just moving up. But if you see the overall pattern from levels closer to that 9,000 zone, the stock has given this kind of a correction after that up move. So might be, yes, if you see this stock coming down further to levels closer to that 9,200, 9,300, that is where one can look at accumulating this stock, or else I will definitely avoid at current market price because it has seen a huge move already and today you are seeing correction in this stock. So might be if you want to buy this stock, wait out for levels closer to that 9,100 where you might see some consolidation. Let us not catch the falling knife right now. But one more stock if someone wants to buy for short term. So for me, yes, NBFC and even gold finance companies are looking very good. So look at AB Capital for that matter, Chola Finance. These are all stocks which are looking very good to me on chart. So if you want to pick two top stocks from NBFC, it will be AB Capital for me as well as Chola Finance, and even gold finance company looks good for me, and especially Manappuram. So Manappuram at current market price is a buy for me. If someone has a 1 year kind of a time horizon, I won't be surprised to see this stock going even up to 400 rupees. So Manappuram is a good buy both for short term as well as medium to longer time frame. Look at targets of 400 to come on Manappuram for a 1 year time frame, and for very short term, yes, this stock can move towards 325, 330 zone. Available in futures, one can definitely go long in future. Keep a stop loss of around 300 and look at initial targets of 330, and eventually, yes, for an investor, this stock can give 400 rupee target in next 1 year.
Manappuram is a big call. Dipan, quick view on BHEL. Because BHEL, after the results, also did well. They've got some new order books also coming in. Is that space something that you like?
Tamanna, first disclosure, we are invested in BHEL.
Okay.
And amongst all the engineering companies, it has got the best order book position. Like almost 7-8 years earning visibility is there. And I think next 3-4 years, you will see fantastic growth coming through to BHEL. They have an established track record, excellent engineering skills. They are doing certain projects which are very high value. So I expect that the margins also will improve because of that. And I think they are in a position in a very, very sweet spot just now where there is adequate buildup of renewable energy. And that needs to be matched by conventional energy sources as well, which may act as a backup. It's also looking at overseas order books as well. So very, very positive on BHEL. Don't go by what its present price earning multiple is. I think next 4-5 years, you will see the company go to a different level as well. But as I said, we have investment in BHEL, so our views could be a bit biased. So, but nonetheless, I think it's a great story to look at more closely.
Fair disclosure there, Deepan, and I'm glad we got your view on it as well. So Deepan Mehta Rudra, thank you so much for speaking with us this afternoon as we close off this Tuesday afternoon. I would say at least you're better than where you started. The advanced decline ratio is 50-50. I mean, it's skewed towards the declines, but again, better off where we started. We should pull up the intraday of the Nifty, and that will give you an idea of the kind of recovery that we've seen today. And your recovery from the middle of the day has actually been quite heartening. You're closing at least here above the 24,000 mark convincingly.
Convincingly about 24,000. What's interesting is that support levels are not being broken right now, and that's the positive that you have to pull out in terms of markets. But the other bit is the resilience that you're seeing in a couple of sectors. If you see the heat map in terms of sectors, that pressure has continued to build in terms of financials, but good amount of resilience when you talk about defense, even to that matter, IT to some extent, in spite of that little bit of pressure, there is some resilience there, and the telecom space. But real estate, absolutely better today, 1.5%.
You know, it just goes through this seesaw, frankly. Some days are very good and some days are very bad, and some profit booking comes in as well. I just want to quickly pull up the heat map as we go into the closing. 8 seconds to go, and this is how we're closing this afternoon. M&M, top of the charts, good numbers. You heard from the management on NDTV Profit. We'll have that con call in a bit. Ultratech doing well, Hindalco doing well today as HDFC Life and Nestle also bouncing back. So the big boys are there in place. ICICI Bank taking a bit of a knock. So is Geo Financial. That's why you have the whole financials index a little muted. Tech-M not that great. Axis Bank also seeing some pain. The top gainers and losers should give you the specific stories of the day, because it's quite stock specific when it comes to results. And you're seeing that flowing through. Aarti Industries, for example, not a set of numbers that was enthusiastic. Godrej Properties did very well and then cooled off. Raymond also after its results.
Likewise, if you talk about CAMS, Tamanna results, Quest Corp again on the back of results. You have Avas Financial also that will be reporting. It's interesting to see a credit access growing. Volumes very strong, 12% surge. In fact, it's cooled off slightly, but strong moves coming in there as well. So I think it's been a day for the small and the mid cap space, where a lot of buying has emerged at lower levels. Exactly. And the benchmarks have remained in a range for the last 7 sessions.
Yeah, it's going to continue to do so while oil is elevated and Brent prices are elevated. But that's all the time we have from Hiral, me and the team that put the show together. Stay tuned. Market Express up next.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is a show that gets you a roundup of everything that has happened in today's trading session as well as the market action. And let's talk about just that. It was a largely weak day of trade that you were looking at on the Lal Street. Now, when you talk about Nifty, that managed to close slightly above 24,000 mark, whereas Sensex slumped more than 180 points. Broader markets outperformed benchmarks and ended the day in green. Moving on, then let's talk about sectoral action that remains mixed. Nifty, Realty and Bank and as top sectoral losers. Defense and FMCG on the flip side lend a little bit of support. So that's the entire sectoral action that you were looking at as well. Let's also talk about oil prices. Now, that was a key talking point in today's trading session after Monday's sharp rally, because you do have oil prices that edged a little bit lower. And this is as traders really weighed some of those fragile ceasefire signals in the Middle East against continuing disruptions in the Strait of Hormuz. Now, when you talk about Brent, it slipped below the $113 a barrel mark, even as the waterway remains largely empty, with hundreds of vessels clustering near Dubai to avoid fresh risk at this point in time. And you do have clashes between the US and Iran, damage to an oil terminal in Fujairah as well, and US movements into the Persian Gulf that are keeping supply risks very much alive, while concerns of demand destruction begin to surface. Let's also move on and talk about gold prices that edged higher, recouping part of yesterday's losses as relative calm returned to the Persian Gulf after a brief flare-up in hostilities. So that's the entire signal that you did have gold prices really looking at. Bullion climbed back above the 45.50 level as the fragile US-Iran ceasefire held, at least for now, easing immediate safe haven volatility. However, you do have soaring energy prices. That's something that gold prices are looking at. And other than that, there's of course the outlook for interest rate cuts. And that's also going to be key to watch. Will keep a pressure and a lid really on non-yielding gold, which remains sharply lower since the beginning of war in late February. Now let's also move on and get a little stock specific as well. So Marico is the one to look at that delivered a steady set of numbers in the fourth quarter, about a 3.5% uptick coming in on this particular account, and profit and revenue largely in line with street expectations. Top line growth really remained strong, driven by healthy volumes, but operating margins came in lower than estimates. And this is largely due to cost pressures. Now, you do have earnings that do about double digits on a year-on-year basis. And the miss on margins, let's talk about that as well, because that in fact kept the street focused on commodity trends as well as pricing power going forward. Let's move on and talk about M&M that delivered a strong set of numbers in the March quarter as well. And you're looking at broad-based growth really across its key businesses. The stock, of course, was buzzing away in trade with that 3.7% uptick also coming in. Auto and farm segments, they posted healthy volume-led growth while profits rise sharply despite some margin pressure. Now the company also gains market share. And this is in some of their key vehicle categories. You're looking at return ratios that touch their highest level under the current management, and that's also something that was really cheering the stock. Let's also talk about Tata Chemicals on the flip side that posted a weak set of numbers. Now that was dragging on the stock just a tad bit, and it was the quarter when you talk about it was weighed down by sharply lower soda ash realizations and a sizable one-time impairment charge in its US business as well. Now, when you talk about revenue and operating profit, they declined as global pricing pressures and higher fixed costs really hurt margins, even though stronger volumes in India and Kenya offered a little bit of support. Now, the quarter ended with a deep net loss and higher debt levels, keeping the street really focused on soda ash pricing going forward as well, and the growing role of non-soda ash businesses going forward. So any sort of commentary coming in on that later on is going to be key to watch here. Let's also move on and talk about brokerage views when it comes to something like a Godrej Properties that remain largely constructive. Of course, the stock was down about 4.5% thereabout, though not without divergence, because you do have Jefferies and BofA that both retain a buy, citing strong cash flow visibility and robust pre-sales quality and a clear path to 20% ROE by FY28, aided by improving construction spends as well as balance sheet discipline. You do have Investec that, turned cautious a little bit, downgraded the counter to hold on valuation even as it acknowledges execution strength as well as improving collections. And the stock is sitting at the crossroads of execution confidence and valuation comfort going forward. So those are the two triggers to really watch out for. Let's also move on and talk about Wockhardt that reported a return to full-year profitability in FY26. You're looking at a turnaround quarter, its first return to profitability coming in since FY22, driven by strong growth in biotech and some of the emerging markets. Now, insulin-based biotech products perform particularly well, while when you talk about the India and the UK businesses, you're looking at healthy revenue growth there as well. Now, you do have some one-off costs that weigh on the quarter, but settlements and other income really support the bottom line. And the stock, of course, was cheering it with that 7.5%, almost 7.9% uptick also coming in. Let's also move on and talk about Petronet LNG that delivered a strong March quarter performance with profits rising sharply even as revenue moderates. Now, the outperformance was really driven by better than expected volumes and a sharp improvement when it comes to margins, aided by inventory and trading gains. Exceptional income linked to the reversal of user pay charges also really lifted their reported profit, though the underlying sort of earnings trend really remained a little bit steady. Moving on, then let's also talk about CAMS that delivered a steady set of numbers in the March quarter. Now, you're looking at revenue and profits largely seeming stable, at least on a sequential basis. Now, the company posted its highest ever quarterly revenue, mind you, led by strong growth in its non-mutual fund businesses. While margins remain healthy, you do have profitability that stayed flat even as EBITDA touched a record high, and the stock, of course, was buzzing away in trade with that 9.1% uptick, as you can see at close. Let's also move on and talk about RT Industries that delivered a strong set of numbers in the March quarter, of course, that failed to really lift up sentiment on the street. But it was, when you talk about the earnings fine print, the quarter was supported by higher volumes and improving margins. Revenue growth is broad-based that you're looking at, while a recovery in margins is also aided. And this is by favorable developments in China, even as agrochem margins remain a little bit under pressure. Now, when you talk about the profit growth, that really stood out this quarter, reflecting better operating leverage and stronger execution. Let's also talk about Jindal Stainless that delivered a steady fourth quarter as well, supported by strong domestic demand across key sectors. The stock, of course, wasn't doing all that much, but you do have global headwinds that persisted. Revenue and profits edged higher sequentially, though margins softened slightly due to import pressure, as well as rising energy risks linked to Middle East tensions. While cheap imports and geopolitical uncertainty continue to cloud exports, you do have sustained domestic usage, as well as higher adoption trends that remain key offsets. Moving on, then let's talk about something like a Quest Corp that delivered a strong sort of set of numbers in the March quarter performance as well. So you're looking at strong momentum when it comes to professional staffing. The segment sees healthy client additions supported by increased hiring from global capability centers, while general staffing also remains resilient despite regulatory challenges. Now, when you talk about this particular counter, it was buzzing away in trade with that 5.6% uptick also coming in. You're looking at better operating leverage that lifts margin and profitability, keeping the overall growth outlook as well steady going forward for the business. Moving on, then let's talk about delivery that faced fresh competitive pressure and look at that 1.7% thereabout knock also coming in on this particular counter at close as Amazon rolls out its own delivery services, stepping up the fight in the logistics space, with large e-commerce players contributing a significant share of deliveries business. You do have Amazon's move that raises concerns around client concentration and pricing power. Now, Amazon, in fact, is building an in-house delivery network. Competitive intensity for logistics players is clearly set to rise. Moving on, then let's talk about Tata Tech that delivered a strong set of numbers in the fourth quarter. Now you're looking at about a 5.5% uptick coming in for this particular counter, and you do have, in terms of the result as well, this particular counter also extending the momentum seen in the previous quarter. So the company posted double-digit growth, largely supported by improving margins and a pickup when it comes to the full vehicle program wins. Order book visibility also strengthened. The management guides for healthy organic growth next year, along with further margin expansion. Moving on, then let's talk about Voltam Transformers that reported a weak set of numbers in the fourth quarter with revenues and profits declining on a year-on-year basis. Margins come under sharp pressure as operating leverage weakens, even though the company announces a healthy dividend payout as well. And you do have lower profitability as well as higher costs that weighed on earnings, largely making this a soft quarter from an operating standpoint. Moving on, then let's talk about Afcons Infra that is in focus after securing a new EPC order worth about 373 crore rupees in April. Now, the order comes from its urban infrastructure and metro segment, adding visibility to its execution pipeline. When you talk about the latest win, it underlines steady order momentum for Afcons, even as infra activity really remains firm across key cities. Moving on, then let's talk about Gopal Snacks that is in focus after its stock really rose for the third straight session, and with that 5.2% gain also coming in on the back of sharply higher volumes. And the company, just for a little bit of background here, has a strong presence in its core markets and continues to expand across newer regions, even as recent financial performance remains a little bit under pressure. You do have profitability, in fact, that has taken a hit due to softer margins, but the market appears to be betting on the growth, visibility and expansion beyond its home base. Moving on, then let's also move on and talk about China's EV giant BYD that is facing a clear split between home and overseas markets. Passenger vehicle sales at home fell for an 8th straight month in April as competition intensified from domestic rivals like Leap Motor and Zeekr, both of which reported record monthly deliveries, while domestic volumes declined. On a year-on-year basis, you do have BYD's exports that really surged to an all-time high, jumping more than 70%, highlighting its growing reliance when it comes to overseas markets to offset mounting pressure in an increasingly crowded Chinese EV space. Moving on, then let's talk about Palantir that has delivered a blockbuster first quarter, beating street expectations across the board and raising its outlook as well. Now, when you're talking about revenue that surged at its fastest pace since listing, while profits nearly quadrupled as well, and underscoring how AI really, the demand in fact is translating into real earnings. The company also sharply lifted its full year free cash flow guidance well ahead of estimates, reinforcing investor confidence in the company's ability in fact to convert growth into cash as its market value continues to soar. Moving on, then let's talk about Pinterest that reported a strong set of numbers in the first quarter as well, beating expectations on both earnings and revenue while delivering double-digit sales growth as well. The company also raised its second quarter outlook, signaling that confidence really in advertising demand and user engagement trends. While the quarter slipped into a net loss compared with last year's profit, operating performance improved meaningfully, with EBITDA well ahead of estimates and monthly active users continuing to grow steadily across markets. Moving on then, let's talk about JLR India that cuts prices on select imported Range Rover models, anticipating benefits from the India-UK Free Trade Agreement. The price reduction applies to high-end models brought in from Britain, aimed at improving affordability and strengthening market positioning. Locally manufactured models remain unaffected, while the move also signals how global automakers are preparing for duty changes under the proposed trade deal. Moving on then, let's talk about Australia's central bank that has raised interest rates to 4.35%, matching the peak reached late last year as well as inflation pressures refused to ease. The Reserve Bank of Australia cited rising fuel and commodity prices linked to the Middle East tensions, warning of possible second-round effects across the economy, and the board also signaled rates that could stay higher for longer, with its also some of the latest projections also pointing to further tightening into 2026. Moving on then, let's talk to you about some national news then on the election front. Let's get you the latest on one of the most defining political moments in recent Indian electoral history. Now, the BJP has announced that its oath-taking ceremony will happen on May 9th, and this is after a landmark lotus bloom in the state, and that's West Bengal that I'm talking about, as Mamata Banerjee lost a state that she ruled for 15 years in a bastion in a high-stakes battle. Suvendu defeated Mamata in the key election battleground of Bhabanipur, in a state where the BJP had almost no foothold a decade ago. The BJP, in fact, has won 206 seats to secure more than two-thirds majority in the assembly. Let's keep it going with the election action as well. Tamil Nadu, the citadel of Dravidian politics for over 50 years, with the binary politics dominated by the DMK or the AIADMK, is set for change right now. Actor politician Vijay's TVK has won 108 seats and is expected to look for post-poll allies. The result, of course, has triggered negotiations with Congress, PMK and other parties over support for a TVK-led government. And Vijay's scripted history in this particular electoral debut and post-poll allies are going to be helping the TVK-led government really come to power. Moving on then, let's talk about Assam that has delivered a decisive verdict as well, handing the BJP-led NDA a resounding third straight term in power. The alliance has crossed the majority mark, comfortably winning 101 of the 126 seats in the state, with the BJP alone clinching 82. While the mandate reinforces the ruling coalition's dominance in the state, the results also signal a political shift, which is very clear here, marked by the defeat of the sons of the three former chief ministers. For the Congress, with 19 seats, the outcome underlines the scale of the challenge ahead in a rapidly changing state. Let's also move on and meanwhile also talk about the biggest ideological defeat perhaps that may be seen in Kerala, where the left lost their last bastion in the country, and Congress in fact supported UDF alliance has swept 102 of the 140 assembly seats, handing a stinging defeat to the LDF. Now, the rout is widely seen as voter pushback against what critics called an increasingly authoritarian governing style after the LDF's unprecedented re-election back in 2021. Now, the BJP, meanwhile, made a modest but notable breakthrough, opening its account with 3 seats. Let's also move on and away from the world of elections then. Mumbai police have formed a special investigation team to probe a large-scale fake birth certificate racket uncovered by a civic body probe. Investigators in fact estimate that more than 87,000 forged or manipulated birth certificates may have been issued between 2024 to 2026 by tampering with official records. And this particular committee is going to be examining the role of civic officials, middlemen or others involved to really look at some of these allegations that some documents were used to provide identity proof to illegal foreign nationals. Moving on then, let's get you some international news. Tensions in the Middle East have flared sharply after Iran launched fresh missile and drone attacks on the UAE, injuring 3 Indian nationals in Fujairah and pushing a fragile ceasefire to the brink. Now, you do have PM Modi, who's also talked about this as well, but the strikes come amid escalating pressure around the Strait of Hormuz, a critical global oil artery. And US President Trump has issued a strong warning to Tehran as well, raising fears of further confrontation. Moving on, then let's talk about Iraq, that has rolled out unusually steep discounts on its Basra crude for May loadings in a bid to keep oil flowing. And this is despite disruptions in the Strait of Hormuz. The OPEC producer is offering price cuts of up to $33 a barrel, but only for buyers willing to load inside the strait at a time of heightened regional tensions. The move highlights the growing strain on Gulf oil exports as the Iran conflict really continues to choke key shipping routes. Moving on, then let's talk about a powerful explosion at a fireworks factory in China's Hunan province that has killed 26 people and injured 61 others. Now, when you talk about this particular blast, it happened at a fireworks plant that triggered a massive rescue operation, forcing authorities to evacuate residents within a 3-kilometer radius as well. More than 1,500 responders, aided by drones, dogs and robots, searched the debris as well, and police are investigating the cause and have taken control measures against those responsible for running this particular facility. Moving on, then, millions of football fans in India and China could miss out on the upcoming FIFA World Cup as broadcast rights remain unresolved. In India, talks have hit a deadlock after FIFA rejected a $20 million bid from the Reliance Disney joint venture. Meanwhile, no official broadcaster has been finalized in China either, and the uncertainty really raises concerns over access in two of the world's biggest viewing markets. And with that, we're out of time on this edition of Market Express. Thank you so much for tuning in.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market opening. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Markets end lower amid FNO expiry volatility today. Nifty slips below 24,100 levels, while Sensex also closes in the red. Though the broader markets outperformed today, ICICI Bank and Coal India amongst the top Nifty losers. Rupee ends at record closing low of 95 rupees 29 paise against the dollar. A strong dollar and elevated oil prices continue to keep the currency on the defensive. Oil prices remain volatile as new attacks in Strait of Hormuz threaten fragile US-Iran ceasefire. Brent hovers over $112 a barrel as Middle East tensions rage on. Meanwhile, US Gulf Arab nations draft new UN resolution on Strait of Hormuz. Mahindra & Mahindra's Q4 results beat the street estimates with profit rising a solid 53.5%. Group CEO Anisha Shah tells NDTV Profit that it's on track to meet the key FY27 targets and expresses confidence in keeping the bar high. HDFC Bank prepares for big leadership transition with KK Mistri's term ending. Sources tell NDTV Profit that HDFC Bank may appoint a new chairman in June. RBI officials have been meeting board members on governance and succession since Atanu Chakrabarti's exit. Biocon charts leadership transition. Sources tell NDTV Profit that Biocon's long-term succession plan takes shape with Claire Majumdar to be the potential successor to founder Kiran Mazumdar-Shaw. Delivery is under pressure after Amazon unveiled its own delivery services, with Amazon and other e-commerce players accounting for nearly 60% of deliveries revenues, and the move raises competitive intensity and margin risks. Cabinet to chair key meet today at 5 p.m. Big boost likely for MSME aviation sectors. Sources say that approval expected for 2.5 lakh crore rupees credit guarantee scheme by the cabinet. After the BJP's stunning win in the state of West Bengal, the new chief minister will be sworn in on the 9th of May, Rabindranath Tagore's birthday. Sources tell NDTV that Shuvendu Adhikari is the main contender for the top post as the chief minister. All leaders heading to New Delhi today. Vijay's TVK prepares to stake claim to form the government. He could be sworn in on the 7th of May as the party will seek 2 weeks' time to prove its majority in the state of Tamil Nadu. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar, and over the next half an hour, we'll tell you all that you need about to know about the markets as well as the other news developments. First, starting with the markets, well, despite the recovering from the day's low point, the benchmarks really ended still in the red, while Nifty managed to hang above the 24,000 levels. Sensex wrapped trading session with over 200 points cut today. Now, the high voltage state election outcomes across the 5 states, also the weak global cues and the FNO expiry really kept the action today largely mixed for the markets. Now, the broader markets, they continued their outperformance but ended flat. Let me take it straight across to my colleague Jasmeet with all the action from the markets today. Jasmeet, tell us.
Well, a weak day for markets today. Nifty 50 ends in red, down about 0.3% and manages to close above the 24,000 mark. If we look at the top lows in Nifty 50, we have stocks like ICICI Bank and Coal India, both losing over 1.5%. If you look at the broader market, it has outperformed the benchmark, where Nifty Small Cap 250 and Mid Cap 150 manages to close in green in today's trade. If we look at the top gainers in Mid Cap 150, we have stocks like Aurobindo Pharma and Aditya Birla Cap, both gaining over 3.9%. In terms of Small Cap 250, we have stocks like CAMS and Credit Access, which has gained almost over 11 and 9% in today's trade. If you look at the broader market and key sectors, the sectors end on a mixed note in today's trade. If you look at the top gaining sector, we have stocks like Nifty FMCG, Nifty Auto gaining the most in today's trade, up about 0.6%. In terms of top gainers in Nifty FMCG, we have stocks like Dabur India and Marico gaining over 3%. While in terms of Nifty Auto, the top gainers are something like M&M and Hero Moto, both gaining about 3.5%, and Hero Moto gaining about 1% in today's trade. Now, if you look at the top losing sector, we have Nifty Realty, which is worst performing sector, down about 1%. If we look at the top losers, we have Oberoi Realty and Godrej Property, both losing over 1% in today's trade. If we look at the key trends, well, Nifty Pharma ends in green for the 3rd consecutive session in a row, while the Nifty PSU Bank falls for the 5th consecutive day. Well, lastly, if you look at the aspect in terms of Nifty Media, it snaps its 4-day of losing streak and ends in green in today's trade.
All right, thanks so much, Jasmeet, for all the market action of the day. Let's take it straight to what's really impacting the Indian markets. It's also the crude oil prices, which slipped slightly after the US President Donald Trump really signaled efforts to support ships stuck in the Strait of Hormuz. But despite the dip, both Brent as well as WTI are still trading at higher levels. While Brent is hovering close to $113 per barrel, WTI crude has exceeded $104 mark. Now, this shows that until the tensions really ease in the Strait of Hormuz, oil prices are likely to stay volatile as well as elevated. This has also added pressure on the Indian currency. Remember, the rupee has yet again ended at a record closing low of 95 rupees 29 paise against the dollar, and also made its lifetime lows in the trading session, but did pick up to close at the lowest point as well. All right, let's take it straight across to what's really impacting from the global markets and the global developments, the Indian market and the rupee market. It's the war really that is really playing out, and tensions are escalating once again in the Middle East after reports of ships being attacked in the strategic Strait of Hormuz. Now, Iran's parliament speaker has warned the United States that they are just getting started, as Tehran insists it controls the vital waterway. Now, Iran reportedly fired missiles and drones at military and commercial vessels, while the former US President, Donald Trump really had claimed US forces shot down 7 Iranian fast boats, a claim that's strongly really denied by Tehran. Now, meanwhile, remember, the US and Gulf Arab nations are drafting a new UN resolution on this particular crisis. But what is really happening inside Iran? Take a look at NDTV's Akil Jamil's ground report from the devastated Sharif University. Take a look.
The NDTV team has arrived at Sharif University campus. Behind me, you can see the visuals over here where the debris can be seen, and this is the frontal part of this building. And behind this very building, which was completely destroyed due to the aerial attack in a joint campaign by by the US and Israeli forces. Behind this, there's another building which was destroyed. So this was the AI data center, and the impact of this attack was so intense, that the magnitude of this attack was so intense that nothing can be seen. Few things you can just recognize. There you can see the Iranian flags over there, which can be barely seen. Apart from that, few of the electronic items can also be seen, some water bottles. Apart from that, if you see, the other daily usage item was also present over here. I have been speaking to some of the individuals who were part of the university. They are saying that when that incident has taken place, no one was present at that moment because it was late at night at around 2 a.m. Here you can see this is one of the books which can be seen. This is just part of the debris over here. And apart from that, towards my left, if you see, this left portion of this entire building, the AI data center, has completely been demolished due to the impact of this entire aerial attack. And towards my right, just opposite to this AI center, is the mosque. So some portion of this mosque has also got impacted in this aerial attack.
All right, so that was the war update coming in from ground zero. Let's take it back home. And big earnings today. Mahindra & Mahindra has delivered a strong Q4 performance, beating the estimates across key matrices. Now, profit came in at 3,737 crore rupees. It rose by 53% on a year-on-year basis. Revenues also impressed, rising over 26%, again beating the expectations. Operationally, though, EBITDA also increased 19% annually, but the margins, however, came in at 14.1%, which is about 80 basis points lower than the same period last year of 14.9%. Probably the cost pressure is what is impacting the margins here. In fact, my colleague Neeraj Shah interviewed Anish Shah, who's the Group Chief Executive Officer and Managing Director at Mahindra Group, and he spoke about setting a goal of 18% ROE and 15 to 20% EPS growth. In fact, their current ROE at 20% has been the highest under Anish Shah's leadership. Listen in to that part of the conversation.
So we have given a target of 18% ROE, and we had said 15 to 20% EPS growth. In the last 5 years, we've delivered 57% annualized EPS growth. And as I look forward, yes, we will continue to raise the bar. Our businesses are performing at a very high level right now. In terms of ROE, our investors would not want us to go more than 18% because we are putting capital back in for growth. And yes, we are at 20% right now, but I've always maintained we will be slightly higher or lower than 18% as we continue our growth journey. And that's the more important part. It's about each of our businesses becoming large businesses. And many are on a very strong path to do that. And that's what is a highlight of this year in particular, where many businesses have had a breakthrough year. And all our businesses have contributed to the growth for this year. So for me, it is about, as a leader, ensuring we have a higher threshold that we set every time. And the teams have responded very well to that.
Right, so that was the M&M result and the growth projection going forward. Another one from the banking space is Punjab National Bank, which has reported a steady set of numbers for the fourth quarter. In fact, the profit after tax really rises 14% YOY to 5,200 odd crore rupees, while operating profit also sees a healthy double-digit uptick. Asset quality continues to improve, with gross NPAs declining to 2.95% and net NPAs also easing further to 0.29%. However, the net interest income remained under pressure, slipping about 3.5% YOY, while the other income also declined. On the cost front, remember, operating expenses saw a sharp drop even as provisions increased on a yearly basis. Now, the bank, remember, has also announced a dividend of 3 rupees per share, rounding off a mixed but stable quarter, and that was from the earnings corner. Now, let's take it straight across to an exclusive here, and HDFC Bank is in focus as it prepares for a key leadership transition. Now, sources indicate that the country's largest private sector lender could see a new chairman appointed as early as June, and this comes as KK Mistri's interim term is set to end, and his reappointment now looks unlikely. In fact, my colleague Shrimi Chaudhary joins in with all the information. Tell us, Shrimi.
What we gathered so far is that, of course, the bank is going to see the new chairman mostly by mid of June or by end of June is what indication we are getting. And this is coming clearly at the time when KK Mistry tenure as an interim chairman is ending next month, to be precise, on June 18th or 19th. And his reappointment is unlikely. The exact reason, however, is not known. But what indication we are getting at this point, that since he's been associated with bank for a very long time, and this could possibly lead to the conflict of interest, and that is why he could not get the full term as chairman. And in fact, the lender is in touch with RBI on the board restructuring, and what we've been given to understand that in fact some of the option is being explored at the lenders level, whether to kind of elevate one of the existing board member as chairman, or to get some external candidate on board as for this role. So clearly it's important, because what we also gathering at this point that in fact the senior RBI official is visiting senior board members every 2 to 3 weeks since the Atanu Chakravarti abrupt resignation, to take a stock on the succession planning, to entire board restructuring and the governance as well. The another key important information we gathered at this point that the two external law firm is expected to submit its report in next 2 weeks, and that is going to shape the lender's next move. And we reached out to HDFC Bank for their comment, but we still awaiting reply.
Right, thanks Shrimi for that. Now talking about HDFC Bank, well, HDFC Bank is strong and well capitalized. That's the word really coming in from the former HDFC chairman Deepak Parekh. Listen in to what he had to say.
Are you talking of HDFC Bank? Yes, sir. I have nothing to do with HDFC Bank. I've retired. I'm not on the board. So I can't say anything about it. Except that you must read the Reserve Bank of India statement that the bank is strong, well capitalized, and there are no ethical issues.
All right, also on another big corporate development that is really taking place, sources tell NDTV Profit that Biocon is putting a long-term succession plan in place, with Claire Mazumdar seen as a potential future successor to founder Kiran Mazumdar-Shaw. Nimit, our colleague, gets us all the details. Nimit, tell us.
As we had reported earlier today, that Claire Mazumdar has been looked at as a long-term ownership succession plan for Biocon, and Kiran Mazumdar-Shaw has confirmed that on social media that she's not looking to hang up her boots just yet, but this is a part of that long-term thinking, as we had reported earlier today. Now the important question is, who is Claire Mazumdar? Now 37-year-old Claire Mazumdar is the niece of Kiran Mazumdar-Shaw. She is the daughter of her brother Ravi Mazumdar. Now she's the founder and CEO of Bicara Therapeutics, which is listed on NASDAQ since 2024. Her academic qualification is also quite great. She holds a biological engineering degree from MIT, an MBA from Stanford Graduate School of Business, and a PhD from cancer biology from Stanford School. Now what is important is sources tell us that this is not a short-term plan. It's not going to affect the management or day-to-day operations of the company. This is simply part of the company's and Kiran Mazumdar-Shaw's long-term thinking for a replacement. And as every company does, they are planning for the long-term, but she is being looked at primarily as the long-term ownership head for Biocon in the future.
All right, Nimit, thanks so much for all those details. Of course, succession planning in advance always augurs well for clarity in the direction of a company. Now, in a historic mandate for the BJP in West Bengal, well, the party has really swept the assembly elections with a commanding majority, marking a decisive shift in the state's politics. Now, the new chief minister is set to be sworn in on 9th of May, and this is also a significant date of Rabindranath Tagore's birth anniversary. But the big question really remains, who will take the top post there as the chief minister of West Bengal after Mamata Banerjee steps down. Sources tell NDTV that Shuvendu Adhikari has emerged as the leading contender for the chief minister's chair, having defeated Mamata Banerjee twice so far. Meanwhile, senior BJP leaders are heading to New Delhi today. So lots happening in the world of politics as well. And also remember, post the election verdict in West Bengal, industry sentiment is really clearly turning optimistic. NDTV Profit Sharad Dubey caught up with the top business leaders to gauge what the mandate could really mean for Bengal's economic growth trajectory. Listen in to what people had to say.
There's a relief that the election is over and the fact that there has been a decisive mandate. So clearly the government has leeway to do development in a focused manner. The other, of course, is that this is after possibly 50 years that we will have a government in the state which is also of the same political dispensation as in the center. So that should give a greater alignment to priorities, to development. And this will be a new thing as far as Calcutta is concerned, now Bengal is concerned. So we are looking forward to that new alignment.
Calcutta and Bengal has been one of the pillars in the jewelry industry because the skilled craftsmen, the karigars, they come from the districts of Hooghly, Howrah, Mednipur. Whichever part of the country you go in, whether be it in diamond jewelry or gold jewelry, it is the Bengali karigars that have always been the behind the scenes people. They are the Vishwakarmas. And, they have always been, looking for jobs. Bengal is providing jobs, but then they have to go to the other states, other cities to look for those opportunities. But now I think that with the focus coming back to Bengal, they would be in a challenging situation for the people outside that yes, the people would want to come back home.
We have around 30% branches in the eastern part of the country and 6% branches are approximately in that northeast part only. So when we talk eastern India, so we have around 30 plus 6, 36%. And these branches are contributing good business to the entire book of the bank. As far as sentiment is concerned, there's a good sentiment. If I have to look back my previous year performance in eastern part of the country. So my MSME book growth on an average was 20% as a whole on a country as a whole. But eastern part of the country, the MSME book growth was more than the national average. So that is one point. Second, similarly in retail also. And the contribution from the eastern part has been significant. Given a situation currently the environment is, I believe that our bank is going to be benefited with the new environment coming, new government coming, and the policy changes are likely to be coming, and the government initiatives, central government has been giving a lot of initiatives, lot of support to the business. So I expect that eastern part of the country to help the bank in growing business book in the coming years.
All right, so that's the business community in the state of West Bengal really talking about this big shift in the political arena and how it's going to impact the economic scene in the state. Let's get chatting more on that. Jayanta Roy, who's the managing director of the Peerless General Finance and Investment Company, joins in. Jayanta Roy, welcome to NDTV Profit. And should I congratulate you for this big political shift that has really taken place? What is the sentiment and the mood like in the business community?
I think thank you, Nisha, for giving Peerless this opportunity to share our reflections. With the promise of a genuine double engine sarkar, because now it's a reality that there will be a warm relation between the center and the state. Bengal's Obhuday, meaning economic transformation and the prosperity, we can now aspire by 2047, by the time India celebrates their 100 years of independence. The advantage now for Bengal would be the governance will be now synergized across like-minded states of Orissa, Bihar. So the vision and the policy of Sabka Saath, Sabka Vikas will also add. So these are the hopes of economic empowerment and economic prosperity which we aspire in the next coming days.
Jayanta, you have so creatively put this out, and of course we're aligning with the 100 years of our independence and how the economic growth is going to come in the state of West Bengal with this political shift. But I wanted to understand is that what is it that the business community really wants from the new government, and where is the potential really which has been unexplored so far?
Nisha, West Bengal's strategic advantage lies in its location. Because West Bengal shared borders with several countries and it's a gateway of Northeast. Now, to leverage this, we need a clear industrial policy. And before the industrial policy, I think rebuilding the investor confidence with predictable governance will be the first intent and request from the industry. I have few personal anecdotes I can share here. What is important now is a partnership model for the growth mindset. It can be also a PPP model. But if things are not timely renewed, like we have hospitality business, where over 2 years, the leases were not getting renewed. What impacted was the end consumer was suffering. Similarly, we had affordable housing with joint sector, with West Bengal government housing board, but there was no land policy which was clear. As a result, again, the end consumer was getting impacted. So if this can be rebuilt, because in a PPP model, the currency is trust, and these will help to improve and take Bengal forward.
Right. So many aspects there that you mentioned, but Jayanta, I also wanted to understand which are those sectors which are looking to harness the growth immediately, stand to benefit in your view?
Nisha, see, one of the core competence of West Bengal is a cluster of MSME base, which is almost 15 million ready market. And if we can together improve and nurture their Atmanirbharata or the Swabhiman, which we say in Bengali. And how can we do that? We can do by prioritizing their capex and productive asset creation. And what will help immediately will be those industries where these MSMEs are thriving forward, like say in agriculture, in the value chain, in the logistics, in the mobility, in the leather, in ITCS, in textiles. So these are the fews where the supply chain integration and moving up to the next market with the gateway of enter South Asia, I think that will be impacted.
Right. So many of those sectors, and of course, it's a fertile land and with agri push also inbuilt into that. But Jayanta, what about Peerless Group and what is the growth map that you are seeing in financial services in particular? And this is the biggest quasi-consumption story in the country. This sector has gained a lot of momentum.
Yes, Peerless has been India's first Swadeshi NBFC. And over 93 years, we are now charting a growth path to celebrate our centennial by 2032. But immediately for Bengal's Abhyuday, we are investing 1,100 crore in our consumer-facing businesses, namely healthcare, hospitality, and real estate. What will happen is by 2030, 5,000 more direct employment will be created in Bengal. And with Peerless Giving, which is our CSR program, at least in 10 states of West Bengal, first generation learners will, their supplementary education and holistic development will be leveraged through our CSR program.
Okay, well said, Jayanto, and all the best for that, and looking forward to that optimistic turn of events. And of course, Bangaler Abhyuday that you mentioned, Bhalo Theko, thank you so much for joining us.
Thank you.
Thank you.
Namaskar.
Namaskar. All right, with that, we come to the end of Profit 360. Thank you so much for tuning in, but keep it with NDTV Profit.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit
for the most incisive market intelligence and meaningful corporate conversation. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna.
Hello and welcome back to NDTV Profit. You're watching KYC or Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and get perspective on that one company today. It's also very buzzing in trade on the back of its quarterly results. So very timely in that sense. And I'm talking about KEI Industries. Now, for the wires and cable space, it's been a very interesting time frame because of copper price volatility. So do stay tuned for the management interview as well. But very importantly, first, just to give you some perspective about where KEI started from and where it has got itself to at this point of time. Founded in 1968, company went public in 1992 and now has become the second largest cables and wire company in India. Now we've seen that over the years the company has of course commanded over a 9% share in India's cable and wire segment. It's gotten both industrial as well as the retail side of things, but supplies to infrastructure, power industry as well as the real estate and exports, which is now a very high growth strategy for the company. You've also seen that the company's pan-India presence has been growing as well as global presence have been going with over 60 plus countries now to where it exports to. Growth continues to be one of the higher ones in the export market with higher margins as well. So that share continues to be important. In terms of revenue mix, of course, majority is coming in from the cables and wire space, while they also have EPC and stainless steel wire. But we continue to focus on the cables and wire space as of now on the revenue mix. Now, very interestingly though, in terms of what we've seen in retail as well as the institutional side of things is where there's been quite an even split at this point of time. Now, when you look at the institutional side, they will be working with real estate players, they'll be working with power companies, and hence that is a slightly more stable business because the demand is quite subjective. Retail requires you to go on the ground, build that relationship with distributors, more sticky also in that sense, and hence both those verticals continue to be very important for the company at this point of time. But we will be of course speaking to Anil Gupta today on all of these key parameters, but let's look at what we'll be focusing on across the key bunch of results. Of course, the first one is income statement, as you must have watched on the show. Balance sheet, cash flow and return ratios. Now these are very, very important metrics, especially for KEI, which has seen a stupendous growth over the last 3 to 4 years. But there are some key aspects to watch in terms of future outlook. shareholding, street cred, valuation, as well as what analysts make of it are some of the other parameters that we'll be focusing on. But a lot of goodness that the company has done will be visible in these parameters, but you also have to watch out for the future as well. But income statement coming up first, because FY26 numbers have been quite strong for the company. Revenue has jumped from almost 8,000 crores to 11,000 odd crores in terms of the last 3-year performance. Margins, if you see, have been largely stable, but seeing a slight downtick. So it's recovered from the lows which we saw from FY25 levels, recovered back to that 10.5 mark, but we'll get some perspective from the management. Net profit also inched up from 581 crores and has done very well in this particular year by itself. When you look at quarter 4, it was a strong quarter for the company, 3,400 odd crores in terms of revenues, a 19% jump. But when you look at the EBITDA as well as the profitability, here is where the meat has come in terms of the growth. They've also done 12.2% margins in quarter 4. This is the highest that the company has done ever in one particular quarter. And hence, we've given this a neutral rating only because of purely what the company has done in terms of the yearly revenue. So, quarter 4 margins helped it to get to 10.5, but still away from that FY24 level. We're being very, very stringent on these parameters as of now, but a neutral rating for the company at this point of time. Balance sheet is the other one. Now, over the last couple of years, you must have seen that the other equity reserves have almost doubled. So from 3,000 odd crores to 6,600 crores now. This has been a very strong number for the company. Book value is also increased substantially, but the borrowing number has vanished away. So the company has paid through its borrowings over the last couple of years. Long-term borrowings have now gone through and payment is quite done. And hence the cash at bank has also seen a big meaningful jump in the particular quarter as well. When you look at the cash flow also, that is the other key parameter. So balance sheet of course gets a big thumbs up right now at this point of time. But when you look at the cash flow, last year there was one of the key concerns because of higher capex. Cash flow from operations was the other key factor that got impacted. So you did see that dip to almost just 32 crores from over 600 crores. But FY26 picture has changed yet again back to those strong numbers of 840 crores. Profits also have been subsequently seen in the last slide as well for income statement, and hence the operations to PAT is now back to a very, very meaningful level compared to last year. Net cash flow also continues to be quite strong and stable at this point of time at almost 400 odd crores, and hence a big thumbs up to the company at this point of time on this metric as well. Return ratios are the other key factors. Now, the company has been in a capex cycle. So you saw the return ratios dip in the last year for the company at this point of time. Used to be quite stable at the 24 to 25% mark over the last FY22 to FY23 level. But the important factor here to note is that they have another plant coming up in Sanand, which was expected to come and start from this quarter itself. Some more commentary when we speak to the management today on this aspect, and hence return ratios will have to be monitored at this point of time. Hence, we've given this kind of like a neutral rating at this point of time. A similar return ratio picture seen across the level used to be at 17 to 18%, but then has come down at this point of time. So a neutral rating for now on this one. Shareholding, very, very stable for the company. You have associated that with the stability that Anil Gupta offers to shareholders at this point of time. There was that selling in March 25, which led to the company's share splitting to almost 35% at this point of time, but largely we've seen consistently that the shareholding has been stable. Foreign investors reduced their stake to March 25 levels to almost 25%. Some being brought in and built up yet again in this year as we go into another year for the company. DIs have also plowed into at this point of time wherever there has been a reduction, while the retail investors have actually sold off and reduced some of their stake in the company. So we're seeing a very, very interesting picture here where DIs have actually done over the last 2 years, invested heavily in the company, increased their stake to the highest over the last 5 years. Foreign investors starting to build that position, but retail investors who generally are quite shrewd with their investments, they've seen the street credit, and we'll get to that in just a bit, taken some money off the table at the end of this quarter. But as I talk about the street credit, there are a couple of key things to watch out for. You've seen the 6-month performance of the company being quite healthy at almost 22%, but there are some caveats. First one being that there has been copper price volatility. So that has helped the revenue grow faster. In terms of margins, that generally has a lag of a couple of quarters. So the copper prices which have grown in quarter 2, quarter 3 and quarter 4, some margin lag would have been seen as well. But that's one of the key reasons why the revenue growth has been much faster, and it's visible in the 6-month performance. The year to date also very stable. The 1-year performance up 62%. So valuations, and we'll get to that in just a bit, are pricey at this point of time. The 5-year return also has been quite stupendous. So it's gone through a very big re-rating cycle in that sense. And this 840% definitely trumps the other key players and the growth that we've seen also at this point of time for all these companies. But as we speak about valuations, here's the interesting picture. KEI Industries has been essentially there for quite a bit, but Polycab always used to command a higher valuations versus the other peers. Now you've seen that essentially reverse for the company given the strong 62% up move for KEI Industries. Now trades at 44 times for FY27 price to earnings. Interestingly, Polycab also expected to report strong results in this quarter, is at 39 times price to earnings. RR Kabel saw very strong results in quarter 4. You saw the stock up almost 12% in this week itself, is now at 33 times price to earnings, while you have players like Finolex Cables who generally trades at the lower valuation at 21, and Havels, which had a disappointing quarter largely because of the AC side of the business, because of Lloyd, and the consumer discretionary durable side of business, is now trading at 42 times. So a lot of the positives now priced in for this particular metric, for this particular valuation metric at this point of time for KEI, but the commentary will be very crucial and we'll get to that as well. But for now, we've given this a thumbs down given what we've seen in terms of the pricing as well. Analyst stake is the other one. Now we is yet to get the company to get all the analyst stakes in. There has been a couple of interesting ones because Morgan Stanley has now downgraded the stock just today morning itself, but 18 analysts continue to maintain a buy. But you look at the likely return potential, that's quite negative at just 2.5%. So analyst call is yet to happen, so we'll get a lot more reports for the company tomorrow. But important to get you the perspective directly right here on NDTV Profit from the management itself. So let's go across, look at the other rating parameters and get a final count as well, because this, of course, it's a neutral rating at this point of time. But in terms of income statement, we've given the company a rating as well as on the balance sheet. Income statement, of course, is a neutral rating. Balance sheet and cash flow, it's been a very, very stark difference that's very visible in the company over FY25 and into FY26. Both those metrics get a thumbs up. Return ratios, the Sanand plan will be something to watch and hence a neutral rating for now. Shareholding, very stable. But the street cred and the analyst stake we just spoke about will be something to watch in the future. Valuations, only because of being 44 times in terms of price to earnings for a business growing at 20%, will be something to watch, especially at this point of time given the volatility seen in commodities. So let's get the final total up on the screen as well for you. We've given the company a 5 out of 8 as of now for this company, given what we've seen in terms of valuation. But at this point of time, let me welcome in the management, Anil Gupta. He's the managing director of the company as well. But Mr. Gupta, very good morning to you, sir. Thanks so much for joining and giving us time here at NDTV Profit. It's been a very strong year for the company, very strong quarter 4 as well, highest ever margins. But give us some perspective of what the quarter has been like, because we've seen a very big crisis, geopolitical crisis unveiling right now between Israel and Iran. You've seen commodity prices also spike up, but despite that, at this point of time, you reported its highest ever margins. Is that, how much of that is the pass through from quarter 3 to quarter 4 that has given you that benefit? And in terms of margin picture going into quarter 1, I know it's a very difficult period, but what could be some of the key aspects to watch on the margin side, according to you, for investors now?
Yeah, good afternoon, Puneet. We have been stating in our commentary always that the raw material price or input price cost increase or decrease is a pass-through. So we always keep sufficient raw materials to maintain our inventory vis-a-vis our order book, so that we don't lose on at least on the raw material fluctuations. So similar is the position now. I don't see much difference in the margins in the Q1 also, and the growth should continue to be strong because order book is strong, and I think in energy landscape the the investments are quite strong.
But Mr. Gupta, what would, as you rightly mentioned, that a lot of it is passed through. But in terms of that aspect, could you give us some perspective of how much has been the operational benefit in this 12.2% margin number? And is it something that's sustainable? Because I know going through quarter four is one of the highest margins that you have. So in that sense, how much is the benefit from operational side of things? How much is the benefit from what we've seen on the commodity price impact passed through from the last quarter?
There is, I have maintained that we are getting a regular EBITDA anywhere between 10.30 to 11%. The 1% extra margin is mainly because of the either exchange fluctuation, because dollar has depreciated, and since our export remittances comes later and we don't hedge our positions, so that is it, and some treasury income from the interest on the FDRs. So the operational margins are around 11%.
Got it. Well, the other aspect, Mr. Gupta, has been the growth. Now, you've always guided for a 20% growth and you achieved that in this year as well. So many congratulations for that. But going into FY27, there have been a couple of key metrics. Now, one has been in terms of the raw material volatility, and the other aspect has been on commodity price, as you mentioned specifically, and the rupee depreciation impact too. Now, of course, we don't know what the rupee will go through, but expectations are that it's not going to be a very sudden fall back to those 90 rupee per dollar mark. In that sense, and given that context, do you think that the growth will be higher for FY27? Should we expect a 23 to 25% growth versus the 20% growth that you always highlighted because of these two metrics now?
It may be possible, but we don't project high. I'm always conservative in projecting the growth. So I will still maintain we will definitely grow by more than 20%. How much? And definitely it will be faster. So far as exchange fluctuation is concerned, our most buys of raw material is in rupee, barring a very less imports, which we hedge through our export orders. We don't do hedging, but it is a natural hedge between our against our exports. So we have been always insulated in our margins due to any rupee depreciation, which may lead to the reduction in our margins in our imports. But we have always benefited from our export revenues due to exchange fluctuations if the rupee is devaluing, and this is what we have seen in the quarter four as well.
Mr. Gupta, the other key aspect that has been the key picture. So, is there assessment that the growth will be at least 20% in FY27 and it could be higher because of these two metrics, but you don't want to put a number to that. Is that a correct assessment?
Exactly.
Okay. And the other one that has been, and we were speaking to you about it in quarter two as well, was the plant coming up in Sanand. Now, you had guided us that it was delayed from quarter one to quarter four of 27. As we stand today in 26, is the expectation that there will be another 4 quarters as the plant comes up? Is that the correct expectation that we should have from that plant now?
First phase, we have already commenced production, so that is operational, which will add to the growth of the company's revenue this year. So far as second phase is concerned, which is the final phase, that will come up by quarter four only. I don't see much improvement in the time frame in that.
Also, sir, in terms of the extra high voltage cables, because a lot of that was only coming up and a big expectation was that it will come through basically at that time through the Sanand plant expectation. So another layer of margin growth was expected from these premium products. Is there anything that you can do at this point of time as we wait for that second phase of the plant to come through to address the EHV segment, or do you feel that the share of that will be quite stable for you as we've seen in FY26 as well?
I think share of that will be quite stable because that EHV segment will come up in quarter four only.
The other, so in terms of that expectation, what is the capex plan that you have for FY27? Is it largely going to be only for Sanand, and what's the number that you're penciling in?
Our capex in this FY27 is expected to be anywhere between 650 to 700 crore, wherein around 400 crore will be put in Sanand and balance in our existing factories.
Got it. And Mr. Gupta, how has been the momentum for dealers at this point of time? Because in March specifically, because we've done a lot of channel checks also, we had brokerages also come out of it, that distributors remained a little wary in the start of March, somewhere around mid-March as well. How has that mood changed as we go into the month of May? Is it largely that the dealers have stocked through in April, or what is the expectation that a lot of that stocking will happen now for this year? What has been the expectation for the industry? What's that for KEI?
We had seen good sales from the pickup from the dealers in March because of the year-end targets. And in April, we have seen normal stockpile. And I think this normal purchases should continue through the quarter. But I don't see any exceptional jump in the stocks by the dealers in the May or June.
Got it. So no exceptional jump, that's seeing business as usual. Got it. And also, sir, in terms of exports, because that has been the other key factor that you've guided consistently at 20% growth. Now, your share of revenue roughly translates around 17 to 18% from the export market. What is some of the key targets that you're targeting for the next year, as well as in perspective of growth, what could we expect?
At the moment, this year we achieved around 16% of the sales from exports, and we hope that this financial year we expect to take it up to 18 to 20%. We will definitely aim for the higher side.
And Mr. Gupta, we generally see just a slighter, more margin comfort that a lot of players do tell us about in terms of the export market. So for you specifically, is that also the case? Could you quantify that in that sense, and also give us some perspective of, is it likely that what kind of products also that you're exporting? Is it that the extra high voltage, the higher margin business that gets sold more in the export market, or is it more unilateral as you run through in India as well?
No, we are mostly exporting medium voltage ST cables and extra high voltage cables in exports. We also export a lot of control and instrumentation cables for oil and gas sector. So and as well as the cables for solar and wind projects.
In terms of what we've seen essentially in terms of the margin pictures for you specifically, how has that been? Is that largely continues to be in the solar and the wind projects for oil and gas as well? Is that largely quite similar to the EHV side of things, or largely more stable towards the other wires that you sell in India?
I think I would not like to comment on the specific margins on exports. And because our business is a mix of domestic and exports, and domestic is more. So, and EBITDA margins, what you see is in front of you. So the specific margins on exports, we are not quantifying.
And Mr. Gupta, just as we wrap up this conversation, the other factor has been that you've consistently guided for a 20% growth, and you've maintained a 16 to 19% kind of a volume growth in your earlier in this year as well, as we've seen. For the next year, since you've mentioned that there could be a chance of going over 20% in terms of revenue growth, but should the volume picture likely be stable at the 16 to 19% mark?
Actually, we have not yet worked on the volume growth, but volume growth could be anywhere between around 15%. This is my estimation as of now.
And around 15%, okay. But isn't it, sir, a little lower than what you usually do? So at this point of time?
We will definitely get more, but...
so it's just something that you're being conservative at this point of time as we start the year. Okay, got it, Mr. Gupta. The other one also, Mr. Gupta, has been on how you've been in terms of your pending order book. Now, it has grown steadily. You mentioned that you want to enter export into newer markets as well. But currently, since you are already exporting to 60 countries, could you give us some perspective of how much share does the top 10 contribute? Is it meaningful that almost 50% come from those top 10 heavy wire use markets, while the rest are into newer opportunities and growth could increase there in that sense?
I have not understood your question.
So my question being that since you already export to all 60 odd countries, how much is the share of the top 10 that you highlighted? Is already half of that goes into the top 10?
No, I think 90% of the exports goes to top 10.
90%. And is this the major hubs which we know for the wires and cables within Europe, within America as well, that you already target through? So the 90% share is coming from those major geographies?
Our major hubs of exports are Middle East, Australia, and Africa, and and now US as well.
Got it. Well, Mr. Gupta, always a pleasure speaking to you. Thanks so much, sir, for joining in, giving us this perspective for KEI. I know you have the analyst call at 12, so we'll let you go on this note. But thanks so much for joining us today, giving us so much guidance, so much clarity on the time forward for FY27 for you as well as for the company. We wish you the best. Always look forward to our next conversation, sir.
Thank you. Thank you.
Well, that was the management of KEI Industries. They have guided for a very strong growth of over 20%. Could be a little higher also is what the expectation is, given that we could have some impact of rupee, could have some impact on the commodity side of things. But he is currently maintaining a 15% volume growth. Generally, a 16 to 19% number is what we expect. But it could have some upside risks is what Mr. Gupta has also highlighted. But all the time on this edition of KYC, thanks so much for watching. Stay tuned to NDTV Profit for more.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that in.
Hello and welcome. You're watching Your Money Matters here at NDTV Profit. I'm Mahima Vajrajani, and today we are going to talk about two very different topics. The first one that we're going to talk about is the cash levels in your mutual fund. What does that signify? What should one look at while studying the mutual fund that you go ahead and invest in? And the second topic that we're going to discuss is will versus family settlement. What is the difference between it? What should one opt for, and what should one take care of while putting down a will together? All of these things will be discussed in the next 25 minutes or so. The first topic that we're going to talk about is about mutual fund cash level positions, and to take this conversation ahead, we're joined by Vishal Dhawan, who's the founder and CEO of Plan Head Wealth Advisors, joining us now. Vishal, thank you so much for taking out the time. My first question to you is from a point of view of a person who is investing in a mutual fund, right? Who does not know as to what cash level position in a mutual fund stands for. What is the significance of it? How important is it to track from an investor point of view? Give us some perspective on that.
Thank you for having me over, Mahima. So I think, cash positions tend to get a lot of attention from investors very often, especially when there are deep market corrections that happen, or when there is a one-way rally that happens very quickly in stock markets. And those are the times where this gets a lot more attention. I think it's important to keep in mind for investors, first of all, that, why do mutual funds have cash, first of all? So typically there are three big reasons why cash gets created in mutual fund portfolios. One is that because most mutual funds are open-ended vehicles, which means that you can buy into a mutual fund or redeem from a mutual fund whenever you require the money. They need to be mindful that the inflows and outflows on the portfolio may be a little hard for them to be able to predict. And what they're trying to do is ensure that if there is a large amount of redemptions, for example, that come up, they have the ability to sell and give the money back to investors within the agreed time period, which, for example, for equities is a transaction plus 2-day redemption cycle for domestic India funds. and they aren't forced to sell stocks at that point, which they wouldn't like to sell because those stocks may not be at the right price at that particular stage. So that's item number one. The second is that they could be also keeping some money aside, saying that in case markets correct and certain stocks end up being very attractive to buy into, I have some dry powder ready with me so that I can deploy that money without waiting for fresh inflows to come in, which may or may not coincide with the opportunity getting created in the stock market. The third, which is used more selectively by mutual funds, tends to happen around valuation. So when you see high cash levels in a mutual fund scheme, it may be an indicator that the manager is believing that valuations in that style that he or she follows as a fund manager may not be supportive of deploying money at this point of time. And therefore, they may prefer to wait before they go ahead and deploy that capital. So depending on different fund manager approaches and different scheme styles, these are typically the three most common reasons why cash is held in a portfolio.
Got it.
Of a mutual fund scheme.
Okay, got it. Vishal, as per the last Amphi data, right, the cash level positions slightly decreased overall in terms of equity-oriented mutual funds. Just want to understand that what does that indicate? Because in the past so many months we've seen cash levels just either going up or maybe consolidating, right? Does that mean that there's going to be more deployment of cash going forward, since now we're at least out of that falling levels of markets, we're somewhere consolidating on a top level basis, right? What is your reading for that?
So I think one of the things that fund managers worry about is what is called a cash drag, where essentially, when you hold cash in a portfolio, when you have a sudden rally that takes place upwards in a stock market, because you're holding cash, you could actually underperform. Let's say if there's a particular scheme which holds 15 to 20% cash. Really, when the markets turn around, you could end up finding that there is an underperformance that takes place simply because only 80 or 85% of the money that they had was deployed and the rest of it was held in cash. So when you see sharp market corrections that take place, very often what fund managers may do is they might actually find that there is better value emerging amongst the stocks that they wanted to buy into, or they're also taking evasive action to prevent cash drag from taking place. Because if you have a very strong rally taking place, those cash positions that you held will cause underperformance by default. Now, because the latest data that he spoke about is a combination of two things playing out in our view. One is that you have seen clearly markets correct in the month of March, very sharply on the back of the geopolitical events that happened in West Asia. And as a result of that, a lot more stocks became attractive. And therefore, fund managers who were concerned about valuations would have typically deployed some of their cash. The second thing that would have also happened is that because a lot of investors were sitting on the sidelines, waiting to deploy capital, some of that capital would have also found its way into mutual funds at that point, and therefore that would also have got deployed. Now, one of the mathematical things that happens is when markets fall, automatically your cash positions go up because the equity holdings lose value. And because they lose value, the cash positions seem to go up a little bit more mathematically as a result of that. When the markets normalize, because you've seen a strong rally happen in the month of April, for example, you will find that those cash positions also mathematically end up correcting because your equity positions, whatever you held already, also goes up on a mark-to-market basis. So these are different factors that could cause this to happen.
Got it. Okay. Vishal, is there a regulation in place as to what is the upper limit of cash that a particular mutual fund has to, is kind of allowed as per mandate? And if that particular regulation is breached, then what happens?
So the way this actually works is that, fund managers have different approaches that they take to holding cash. What ends up happening is that different categories talk about what kind of exposure you can have to a particular type of stock. Let's say, for example, if you're a large cap mutual fund, you need to have a certain exposure of your portfolio always in large cap stocks. And what you do with the rest of the money is essentially a choice that you have as a fund manager to decide whether you want to hold that in cash, whether you want to buy mid cap, small cap, whatever you may feel is the appropriate place to deploy that excess pool of capital. More often than not, cash is a reflection on how fund managers actually view taking a cash call itself. Some managers believe that the cash call is not theirs to be taken because they believe that if I'm able to select the right stock, it is likely to give me a better outcome than if I try to time the markets and take advantage of it. So a lot of those fund managers will typically remain virtually always very close to fully deployed with the cash that they hold. On the other side, if there's a fund manager who believes that I will not buy a stock or a set of stocks if I do not feel that there is value in the market because, for example, I'm a value fund manager and I believe the entire market is overpriced, then what I may end up doing is holding higher cash levels because my style of investing may end up being different. So to give an example of this, maybe a value style fund manager may end up holding more cash because he or she's looking for value. Someone who's managing an index fund or someone who's managing a aggressive growth style kind of fund might find that they hold very limited cash positions because they don't really want to get impacted because the markets go up and they're sitting in cash at that point in time.
Okay, understood. The other aspect, Vishal, is that if cash levels significantly rise, does that kind of alter the risk profile of a fund by any chance? From an investor point of view, how should one look at this aspect?
So it is an important item from the sense that most investors should ideally have a strategic asset allocation that they're working with as far as their overall portfolio is concerned. Let's say they decide that I want to have 60% of my money exposed to equity assets, and I want to have 40% of it exposed to defensive assets like debt. Now, if there is too much cash held by an equity fund manager, let's say 20% cash, you might find that their allocation is now 50% in equity and 50% in debt against the 60-40 that they originally planned for. So what is important is that before investors select their mutual fund scheme, they should be aware about how that fund manager looks at cash strategically. Is he or she likely to hold cash when they think markets are overvalued, for example, or are they likely to always deploy? This is important to know in advance so that you are clear about what to expect when certain events happen like overvaluation. It may not mean that you have to exit a fund because it is holding cash or not holding cash, but I think it's important to know that in advance so that your investment strategy is keeping in mind that amongst my fund manager X, Y, or Z, this is likely to be how he or she is going to treat cash in the portfolio.
And Vishal, how does one practically check that? If I were to go and check cash levels of particular mutual fund, that is of course easy to find out, but historically what they've done, like you talked about, how does one go and find that out in order to understand as to how they play with cash positions?
Yeah, so I think there are two elements to this. One is that when we talk about cash, most fund managers will deploy that money temporarily into certain money market or fixed income kind of instruments so that the cash is earning at least some rate of return, not earning zero, even while they're waiting for the opportunities to present themselves. Item number one. So when you look at the fact sheet, you will typically see that there may be certain debt holdings, certain arbitrage holdings, etc., which are trying to create a cash-like position, but still generate some sort of a return that exists. If you are looking for historical cash positions, you'll have to go back to fact sheets that have got created over a period of time, because you have historical fact sheet data also available. So you'll actually have to go in there and look for what has been the cash positions over a period of time. Or you may have to look for what the investment philosophy of the fund manager has been. Because what you will notice is that fund managers do tend to be fairly public with the way that they approach investing and cash positions as well. So you may have to look at interviews that they may have done in the media, for example, to try to understand what and how they treat cash positions, and then double check that with the actual holdings of cash that they've held in the past to be able to see that the two are in sync with each other, and that then aligns with your investment strategy as an investor.
Okay, all right, Vishal, thank you so much for helping us understand this entire concept, and of course, once again, taking out the time and speaking with us at NDTV Profit.
Thank you so much. It's been a pleasure.
All right, so we spoke about how one should look at cash positions in a mutual fund and how important that metric is to kind of track for the mutual fund that you're investing in. The other important topic that we're going to touch upon today is will versus family settlement. What is will, what is family settlement, and what is the difference between the two, and how should one look at will? What are the elements that are a must to look at while drawing up a will? All of these things we're going to discuss and take it ahead with Bijal Ajinkya, who's a partner at Khaitan and Company, who's joining us now. Bijal, thank you so much for taking out the time. My first question to you is, first, in layman's language, if you were to explain our viewers as to what will is, what family settlement is, and what is the difference between the two.
Sure. Thank you so much. So a will is, a simple document which is written by a particular person whose effect is to take place post the demise of that particular person. To that extent, a will can only take effect on demise. It cannot take place, in the lifetime of that particular individual. A will does not need to be written on stamp paper or on the court green paper. It can be written on a simple letter, a simple paper signed by two witnesses. Often you would have a doctor's certificate to really confirm mental sanity, and that is what a will really is. No registration is required. At times, you may look at a videography for specific reasons. And to that extent, though a will is an extremely simple document, it's perhaps one of the most complicated documents to ever prove in the court, for the simple reason that the person who's written it, they are not really living at the point in time when it has to be proved in the court of law.
Okay, all right, and okay, understood. Let's talk about will first, right? If somebody is planning to make a will today, what are the do's and don'ts to kind of make that will a complete, comprehensive checklist? If you can help our viewers with.
Sure. So one is most important for you to really make a list of your assets as well as a list of liabilities. Not necessary that that list has to be annexed or find a place in the will, but it is important for all the assets as well as the liabilities to be specifically dealt with in a will. A will must have two witnesses. Always try and choose a witness who is younger than you as well as who is healthier than you, so that in a situation where there's a contest to the will and the witness has to really depose in the court of law, the witness is living at the point in time of demise. If in a situation post-writing your will, the witness passes away and you are still surviving, it would always be good to execute a fresh codicil and have the witness essentially be a person who is living at that point in time. Very, very important that a will should be in extremely clear English, no grammatical mistakes, and to that extent, the intention of the testator or the person who's writing the will should be clearly spelled out. What that really means is that at times, the will is drafted in a very circular manner such that only the person who's written it essentially knows what they actually are trying to define. And those are situations where, when it is proved at the court, it is extremely difficult to really navigate. It is the intention of the testator to actually provide a life interest to a particular person, important to note that the life interest should be specifically carved out. A life interest means that a person can enjoy the property but does not have ownership rights. Therefore, you cannot sell the property, but you can only enjoy that particular property. So if the intention is to give a limited life interest, ensure it is worded like that. And if the intention is to give a full interest, do not really write about what happens to that particular property after a particular person's lifetime. Also important to consider joint ownership as well as nomination. It is a common myth that if there is a joint owner or there is a nomination, a will is not required for that particular asset. That is absolutely untrue, because a joint owner essentially means that that person is jointly holding the property in the ratio which has been decided between the parties. And if there is no decision on that ratio in any document, then it is deemed to be equal. A nominee is nothing but like a trustee or a fiduciary who is stepping into your position not as an owner, but just really to take care of the property. So as an example, if a nomination is made in a housing society, many people believe that a will is not required. Important to note that the nominee only will stand in voting rights in the society, or for that matter, to pay off the maintenance charges of the society. And to that extent, a nominee will not have any sort of ownership rights. Also, if there are insurance policies, important to note that whoever is the nominee specified in the insurance policy is going to be the heir to the policy proceeds, and someone else mentioned in the will not really trump the inheritance. Also, foreign assets can be dealt with in an Indian will, and to that extent, whether foreign assets are to be dealt with or not really depends on the materiality of the assets in itself.
Got it. Okay. In which cases is it mandatory to have will India? Is there a regulation of that sorts in place? And which one is more legally enforceable? Is it the will or is it the family settlement?
So important to note that a family settlement is nothing but a contract entered into between family members, which deals with the rights, interest, title, beneficial interest in property, which is held by various family members. To that extent, because this is a contract which I have entered into in my lifetime, the contract will supersede a will which is written. So to that extent, extremely important to note that the family arrangement is a contract. A will is not a contract. A family arrangement requires to be on a stamp paper with stamp duty being paid. A will does not need to be on stamp paper. There is no stamp duty to be paid. And to that extent, a family arrangement is between parties, while a will is only written by an individual in itself. If there is a validly executed family arrangement and there are rights and obligations to pass between parties, even if the entire transfer is not complete, you cannot really have a will written in a way which is contrary to what has been mentioned in the family arrangement. So just as an example, let us assume that A and B hold different properties and they are a part of the family. And to that extent, between A and B, a family arrangement or a settlement is entered into, wherein property which A is holding goes to B, what B is holding goes to A. To that extent, now A cannot write a will to say the property which I was to give to B is going to go to C. So that's not something which is permissible because the contract must be honored in good faith.
Got it. Just one last question. What are the tax implications of these two and how are they different, if you have any idea?
Sure. So a family arrangement, essentially because it is between family members, there are enough judicial precedents to say that transfer of assets under a family arrangement is not a taxable event. But important to note, the family members, it must be between family members and not between strangers. There is a stamp duty to be paid on a family arrangement. Totally depends on the situs of the assets and where, in which way the settlement is going to take place. In a will, given the fact that the transmission of assets we don't have an estate duty in India, there is no income tax either to the person who's deceased or to the heir in itself. Again, there is no stamp duty to be paid on the signing of the will or later on when the inheritance is actually being made in effect. So that would be the tax implications between a will as well as a family arrangement.
And what about the expense of making both of these and the legal implications of both of these? How does one look at that?
So on expense, a will is like a simpler document because there may not be negotiations, etc. So it's not really an expensive process at all. And of course, what is the exact number will always depend on the advisor you to go to and how complicated is your particular situation. A family arrangement is a contract. The advisor will be required to spend time with each and every family member to understand what their aspirations are and what they would like to achieve in the family arrangement. And only post that would the family arrangement be signed. To that extent, yes, there are intensive negotiations and contract drafting, which is where it would be a slightly more expensive process as compared to a will.
Okay, all right. Vijay, thank you so much for, breaking that down for us and helping us understand with regards to will as well as family settlement. And of course, taking out the time and speaking with us at NDTV Profit. All right, so two important topics that we took up today, cash levels with regards to mutual funds as well as will and family settlement. Hope that helps you. With that, completely out of time on this edition of Your Money Matters, but do stay tuned, more news and updates on the other side.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth.